Reds. Happy Tuesday to you both.
Why are you dressed like the...
It was cold this morning.
No, you're dressed like the private equity meme guy on TikTok. This is right. I went to Booth. I went to Kellogg.
Wait, he knows that guy.
Went to my high school.
Yes,
he knows that guy.
Yeah. Yeah.
I love those TikToks.
Yeah, he just made one about like Winnetka and Glencoe.
Yeah, Winnetka. Yeah, Glencoe.
So I saw
He's got that face up.
Yeah. And then I'm at the East Bank Club.
That is you. That's.
So I saw that guy on Twitter or Instagram or whatever it was, and I sent it to him not knowing that he knew the guy. And he goes, I know this guy from high school.
Oh, I see his stuff. I've seen.
Yeah, that's my wife with the
She doesn't work.
The tennis pro. She doesn't work.
Yeah.
No.
I'm going up to Lake Geneva for the weekend.
Yeah.
So wait, does he have a job, or is that like that's just he just makes those stupid videos?
We weren't like friendly.
Sure.
I mean, our high school was.
No, I know.
What's
like
that guy's name? We got to give him a shout out if we're going to talk about
Johnny Hillbrand.
Oh, there you go.
Let's get him on the show.
Yeah, probably could get him on the show.
Yeah, new
Why
format.
not? We have everybody on the show.
New format. We do what we want now.
Yeah.
We'll have you wear that outfit, which is sponsored by the CME, so we can
Yes. CME. What do you call this?
That's not the. Is that the sweatshirt
I want a douchey finance bro vest.
Yeah, you got to be in finance for 30
Yeah, you got to
years.
do douchey finance show. I mean, come on.
Jealous.
Yeah.
Oh, too funny.
Yeah.
Oh, you're good, Vanetta. I was wondering if you were on your A game. You're on your A game. I like it. You're back.
Yeah.
Well,
those are good.
what are you gonna do?
Too funny.
You didn't do St. Patty's Day though.
Yeah, it's green.
Oh, that's right. Today's St. I mean, how many days can you have St. Patty's Day?
I remembered. I got green.
It's St. Patrick's Day.
I wore like greenish yesterday. I was early yesterday. Saturday, I had green on, I think. Something.
You don't respect my culture. I'm just kidding. I am just kidding. For those in the
how many
chat,
times we dyed the river already?
I mean, my last name is Irish, but like, yeah, Logan and McGarrigle, we're gonna go out for a pint. Me and Katie.
I don't know. I don't know if you're on a McGarrigle level. That's his. And her wedding.
I mean, we can't even have Christopher Columbus Day anymore. How many days can we have of St. Patrick's Day? Come on, one is enough.
Some of Katie's cousins.
Do you not understand the difference? No, I'm
no.
not. Just let it go.
Yeah.
Just gonna let it go. Just boomer rant.
Thailand, Taiwan thing. This is the whole.
I was like,
please don't get him into this.
It's like one drove the snakes away, the other killed millions of indigenous people. Like there's.
Is that what Christopher Columbus Day is?
We are not the same. There's a difference. Go ahead.
But at Katie's wedding, she had like a bunch of her like Scotland relatives.
Oh yeah.
And they were, I mean, those guys can drink. They're small but mighty.
Yeah.
And they were real. They were real. Those
the next level.
Were next level until the wee hours of the morning. Yes. So they were fun.
That's too funny.
Yes.
But have you recovered from St. Patrick's Day finally on the actual St. Patrick's Day?
He took a nap at noon. He was fine. Are you kidding me?
Did you just me?
Come on, me? I mean, I'm one of the kids. You know, like I'm still. You know, I can hang with the Utes.
You cannot. You try to hang with like Thomas, like intern Thomas and Gus, you will end up in the ICU. You will end up in the ICU.
Yeah, no, he's fine. He's fine. But yeah, I hang with the Utes. I'm good. You know, I'm hip.
Did you?
Still,
I'm cool.
Do you have golf tonight?
I do.
So, are you guys doing anything special because of the holiday?
No. We'll probably still just drink beer and play golf. It'll be perfect.
Maybe green beer.
It hasn't changed.
Yeah, no, it hasn't changed. No, we don't have anything special planned tonight.
Okay.
I didn't even think about that.
Yeah.
Maybe I'll get a Shamrock Shake on my ride home.
There you go.
Won't they have like green beer for you? They probably still have some left over from Saturday.
No, they don't have that at the indoor golf place.
Oh,
that's
okay.
I'd be surprised.
Yeah.
Are you going to eat corned beef today?
Is that what we have for lunch?
It's Taco Tuesday. Now we have Taco Tuesday too.
Yeah.
You had corned beef?
Yesterday, yeah, corned beef like sandwich. My wife made a small my daughter made a small corned beef. We stole a couple of slices. I made a corned beef sandwich, little stone ground mustard, a little bit of sauerkraut, a little bit of country.
Yeah. They've had those out at
bread.
my grocery store, the ones like the big ones that you can like throw in like a slow cooker or something.
It's really easy. You just put some Guinness on it and just let it go 6 hours and then
throw a peppercorn in there.
Then you're done.
Yeah.
I was thinking about doing that.
Yeah.
Be fun.
There you go.
Be a good one.
Or you wait till tomorrow and they're 50% off.
That's true. That's a good idea.
You get a discount beef.
Yeah, I didn't think about that. That is a good idea.
I mean, that's what I do with the Valentine's Day candy because I'm still alone the day after.
Buy
then
yourself
it's cheaper.
your own heart-shaped box.
Because then it's the day before my birthday, and then it's fine.
Leave it at the door and act surprised. Oh,
Yeah.
no,
Good time.
that's
Good time for me. How about you, Matt? What'd you get up to last night?
Oof! Last night was I'm trying to not get the cold that he almost was getting, so I'm starting to feel.
I don't know where that came from. I don't know.
I mean, but you live with a teenager. Like, Lord knows what's floating around that high school.
Yeah, you're not kidding about that too. So I'm trying to lay a little bit low. So last night was a little bit of a low day. I watched a movie that I didn't know was in subtitles, and it was. There's nothing.
Because
Taiwanese, you can't understand anything.
Can I tell you? I watch everything with subtitles.
I do too.
No, this was.
I know, but it's foreign language.
Foreign language,
right? Yeah.
Which makes it worse because.
But I'm just saying, there's no shame. Like I just watch everything with subtitles.
I do too. But when I was watching it, and when you fall asleep when you're listening to something in English, you fall asleep. I heard it.
Mm-hmm.
But when it's in subtitles, you can't make believe that you were reading.
Sure.
So.
Well, what was the movie?
I don't even
another
remember.
one of the Oscar.
One of the Oscar ones, yeah. Pleasure something.
What? No, hey.
Oh, hey, oh.
Hey.
Whoa.
What happens between a
Everybody was
man and his wife?
I don't know which one.
Yeah, okay.
A foreign film. I don't know.
Okay.
It's
I don't.
There's something we need to examine.
Filter.
Something wrong with it.
Look at you. What are you doing? Sell a little oil?
Yeah,
oil?
selling some calls. Because I had that long call spread. I legged out of the calls before.
Very nice.
We're going to get back in here.
Very nice. Oil catching a little bit of a bid this morning too, right? Up around $3 or so. Well, it was up for almost $5, but 97 and change, but it's 95 and a half, a little over.
Ugh.
Good job out of you.
Yeah.
Good job.
Thanks.
When are we getting Chick-fil-A?
Oh, why?
Bagels, Chick-fil-A.
I want Chick-fil-A I decided I want Chick-fil-A for breakfast. I was like, look, why? Skinder's not better than us.
Yeah.
That's true. That's
is
true. Where is it? Is there a Chick-fil-A that's close? Oh, there is one. There's one like by Rush.
Yeah.
Yep.
Okay.
Yeah.
You think they're open at 6?
Yeah, because I was told you I got on the elevator. The lady with the Chick-fil-A was going to Skinder, and I get here 6:30-ish.
Yeah.
All right. All right. I'll work on that.
Yeah.
I'll work on that.
Yeah. Jazz.
If this is a good week, we'll do that.
I'm so excited. Hey, today is a terrific Tuesday. Happy St. Patrick's Day to you all.
Yes.
Also, a lesser known Irish saint, this is true, Saint Gertrude, who I celebrate, the patron saint of cats. So today is also Saint Gertrude Day. It is. Look it up. Look up Saint Gertrude Day. She's the patron saint of cat. Look, all the cat ladies, we all know, put some respect on Gertrude's name.
Aren't you
Sounds like make believe again.
I am cat, but I'm a cat lady in my heart.
No, but when do you make amends for that? When do you get more cats?
I'm good. Because I neutered all the cats, so then that way, hopefully, if you do it right, then you end up.
So you're a cat. Yeah, I don't know if that's like.
No, that's the goal.
Yeah, but you're cutting.
But there's other neighborhoods, where kitten season is bad.
Oh.
But do you want to adopt? Do you want to put you on the list?
No.
Okay. Do you want to foster?
No. The pull of a dog.
Cats are pretty easy though.
I don't know. Cats.
You have someone have to either take the dog to daycare or have someone walk it or do this. But cats, you're just like, you leave them $20 for pizza, they're fine.
Yeah. I don't know.
But I love all the animals, so you should adopt responsibly.
Cats give me a friendly, fun cat, nice cat is great. Mean cat.
Well, here's the
Give
thing.
me they're like watching you and they like know something.
Yeah.
They creep me out a little bit.
Here's the thing. When the cat distribution system comes for you,
You don't get to choose.
right? You don't get to. Right. The cat chooses you. So
See, I feel like with dogs, they take on whatever the owner's mentality is. Like
that's why
your
Tony's dogs are so messed up.
Yeah, they're missing like a couple chromosomes or something. There's like they're a little special.
Talking about Sonny right now?
Yeah,
Dog
where
Sonny?
it's like he's got like he's kind of
And the other one is Zoe's probably like Chris, kind of like
like just like
relax, chill.
Yeah,
Yeah, I get it.
yeah.
I get
so,
it. There's nothing
Hey,
wrong with
we got a great show for you today. It's a terrific Tuesday. Happy St. Patrick's Day, St. Gertrude's Day. At the top of the 8 o'clock hour, we have an options jive, an options ojive today.
Ojive.
See what I did there? Because it's St. Patrick's. Yeah, okay.
Oh, that's good.
I got
It took
I got
it took me a minute.
Rolling, part 1, how it controls Mick volatility.
That's good. That's Mick controls. Yeah, Mick
Yes.
volatility. I like Mick.
Options
Good,
ojive,
good.
Mick
Yeah,
volatility.
that's good.
No, Nikki, break it down. What is the...
It's pretty self-explanatory. We're going to have a 2-part series here on just one is kind of the basics of rolling, and then one is kind of a more in-depth look at kind of SPY strangles and P&L volatility and how rolling aggressively, sort of aggressively and not at all. We're going to kind of look at those 3 adjustments.
I like Tuesday Vanetta. She's witty.
No, I did not get enough sleep, and I'm
No, you
powered by
got
Celsius
just the right
today.
amount.
Powered by Celsius.
Slansha.
Fruit
Slansha.
punch? What do you got?
Retro vibe.
Oh,
Yeah, a little
that's a
retro
fun
vibe.
name.
Get it. Hey, also today, let me explain with Chris McVecchio today.
You can't do that to my guy.
I'm sorry.
All right?
What's Chris going to talk about?
Vecchio's also in the Tasty Union, okay? It's the Vecchio Batista Alliance here. I don't know. I mean, Vecchio brings whatever's
Sure.
happening. We're going to be...
Fed meeting
He
starts.
brings the Vecchio.
Fed meeting starts.
Yes.
So I'm probably going to talk about that.
Yeah.
Yeah.
Wednesday
Okay.
is our big day.
Yeah. And then for 9 o'clock, we have market measures rolling part 2. How does rolling impact tail risk?
Yes. So this is more a look at like volatility and just how rolling or adjusting your positions is going to reduce your P&L volatility. And we're going to quantify that for you via SPY strangles.
Oh, great.
Yeah.
And then around 9:30, live from the trade desk, we have Quentin and Glenn in the house. Oh, top of the morning to Glenn.
And tomorrow we're hoping to have a special edition. We're trying to coordinate with the
March Madness.
with the great Rob and Maria.
Oh.
Which we've done their
Tasty extra.
their gambling
Yeah, we're gonna do
strategy
that
for
again.
March Madness.
I love
It worked
Robin
out for
Maria.
us. Yeah.
Or as Bat says, Robin Maria. Maria.
Well, she's from Brooklyn, so I try to make her feel at home.
And then I cannot imagine anything more exciting. 10 a.m., Liz and Jenny live from the floor of the SIBO on St. Patrick's Day.
Oh, my God.
It's always electric. It's always electric when the ladies are live. Oh, come on St. Patty's Day. Was that fun on the floor?
Having a bunch of Irish guys with money on the floor was always fun. It didn't need a St. Patrick's Day. Every day after around 11 o'clock in the morning became the.
What was that breakdown? Like, is it like a third, like
No.
Jewish, Italian, Irish? Like, what's
The breakdown was a lot of penicillin shots.
Oh no, I'm serious. Like, what's
I mean,
the?
back in the day.
Yeah.
I mean, and Frankie will help me with this because
Because you got your JJ Keenahan,
Yes.
fine Irishman
Yeah.
there.
The CBOE was more Jewish.
Okay.
Although we had some Irish cops, wannabe
Okay.
kind of cop trader kind of thing. But
Sure.
CBOE was mostly Jewish. CBOT was more Irish. So that was the original one when they came out with seats, or they were about 10, 15 grand at the time. I think they they were open to city workers and stuff like that first.
Okay.
A lot of police officers, firemen.
Sure,
those
that makes
kind,
sense. Yeah.
Bought seats and then, passed them down kind of thing, or try to rent them out to people. So I believe that's the way it went. Frankie will know for sure. My memory is not like his. He will correct me. I'm sure I'll know the truth in a moment. But they were mostly Irish there at the CBOT, and the CME was mostly Italians, I guess if you had to go with the majority.
Interesting.
Yeah, that's the way it broke down.
Frankie is saying the Callahans on the floor, they owned a bar and closed it on St. Patty's Day just for the SIBO peeps.
That is
Oh.
true. That is true.
Yeah.
It started
fun.
early and often for
Yes.
St. Patrick's Day.
Yes, I imagine so.
Yes.
Well, let's get this show on the road. More oil?
No, this was an Iron Condor we did with Craig last week. We did just a wide Iron Condor in the E-minis. We took like 25% out of that.
And that was something that you were able to
10
hold
points.
because you went down. Your top side was 71. Your downside was 63. And with all the volatility and everything that we've had, and going down to around 66 and change, you were able to hold that because it was an Iron Condor, right?
Yeah.
Like it was a strangle. You may have had to look to adjust it or close it or whatever. So, good job.
You guys want your daily dose?
Sure.
Hey, it's my theme music. Let's go.
Our leading story,
today's
breaking
headlines.
news,
Today's
coming across the wire. Our leading story. Top story, just in.
In today's headlines,
This just in.
Breaking news.
All right, everybody. Today is a terrific Tuesday. It's March the 17th. Happy St. Patrick's Day. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Ready for the news?
Also, fun fact that it falls on the same day today. It's election day here in
Yes.
Illinois, so please get out and vote. It's primaries. Lots of House seats are up for grabs, some Senate seats. My congressperson who's been in his seat since like 96. I'm like, good Lord.
Yeah.
And then Dick Durbin, the second highest ranked Democrat, is not running for reelection. So there's a lot going on in Illinois today. And of course, it's St. Patrick's
Yeah,
Day,
actually,
so.
James's wife is working one of the
Polling locations. We need volunteers. That's very kind of her.
Yeah, my mom used to do that too.
That's nice. I mean, they pay you, so it's nice.
Yeah, they would wheel her there. She would sit there and check everybody's names.
Any earnings, Mr. Bat?
Nah.
Nah.
Okay, that's gone away for a little while.
Hey, here's something interesting. The SEC is preparing a proposal to scrap the requirement for companies to report their earnings every quarter and giving them the option to share results twice a year. The proposal could be published as soon as next month. What are your thoughts?
I think as a trader, it's not good because earnings are an opportunity. You get that heightened implied volatility 2 extra times. I mean, you get it once a quarter.
Yeah.
This would be, twice a year as opposed to 4 times a year. So I think would be, part of it. I also think the earnings, each one that they do, is probably going to be higher volatility.
Yeah, that's going to be
It's a longer time frame. There's a lot more to digest. That maybe the short-term volatility on those, those pockets, those 2 pockets of the year where you have, 6 of the 7 Mag 7s reporting, basically everything but Nvidia in that 1 week. That's going to be super high implied volatility. Whereas with 4, I think you kind of spread out the volatility a little bit.
It'll be interesting. I'm on the fence, one way or the other. I mean, I see why they want to do it. I know, being involved in companies that have been publicly traded, once they come out with their earnings, they've got maybe like a 2-week vacation, and then they, with these accountants, you got to kind of start going what your earnings are going to be for the following quarter, because they got to compile all the information. So I could see from a company standpoint of view, from a trader point of view, I get your point too. But I think it'll all come out in the wash. I think
feel like they've been
An
trying this
important
for a while.
distinction. I'm sorry to interrupt.
Yep.
So
they do this in Europe.
The rule is expected to make quarterly reporting optional, and it wouldn't eliminate it
So you could do
altogether.
like an early report.
Right.
Or
But you're
little-
absolutely right. This is the European, model.
Yep.
But the other side, people say this does help provide transparency for companies, like about where they're spending, if there's going to be big layoffs, like a Meta announcement that came out yesterday,
Sure.
and stuff like that. So the rule is going to be open. There will be a public comment period, which typically lasts around 30 days. So hopefully it gives people the time, whatever side you're on, to sound off.
Yeah.
So
I think it's less of a story than, 0 days on companies and options and 24-hour trading and stuff like that. I don't know.
Speaking of which, SIBO
What?
has submitted a proposal to launch near 24/5 U.S. equities trading. The proposal comes as exchanges ramp up their push to capture surging investor demand for non-stop trading in U.S. stocks. Thoughts?
You?
I mean, I remember this. They're finally doing it now, but I remember 24/5 trading going back to the early 90s, them talking about this. So this has been a long time coming. I don't think it's going to be as popular as they think, but who knows? I mean, I don't know. I don't know. For me, I think it's not going to have too much of a bearing on what we do. It'll be interesting if they can get options on equities. That would be kind of cool. Then it becomes more of my story. But just stock trading, I don't know.
Yeah, it's kind of just
I don't know. Maybe it's the building block to getting 24/5 trading. That would be kind of cool, I guess.
just don't see, like, as a serious trader, if you're really, like, going to need this.
Yeah, I don't know.
Like,
yeah, I agree.
Is your stock position so big that you need to do something in the app? I mean,
Yeah,
maybe, I don't know.
Yeah.
I just don't see it as really tangible for
Well,
the majority of people.
One bright spot, and I think that we are wholly responsible for this in part, is that SIBO said that they've seen a 590% growth in average daily volume from February 2022 to February 2026.
For sure.
You're welcome.
Yeah. No, I think we could take a lot of that credit for sure.
Sure.
Yeah.
It's all on our shoulders. And you can see the CBOE stock trading 290 and change up near its highs. Yeah. Good volatility in there too. Markets should be a lot better for a CBOE product, right? About 40 cents wide or so. Earnings are coming May 1st.
Yeah. I think overall just having more access is good. I don't think this is applicable or usable for me 90% of the time, but it's good to have that available.
Yeah. Sure.
If the urge to sling a couple Nvidia shares hits me right after dinner. Sure.
Sure, I agree.
At least I can do it.
Gold continues trading in a narrow range, hovering around $5,000 an ounce as the conflict in the Middle East enters its third week and investors weigh the inflationary impact of higher oil prices. Moody's says a recession would be hard to avoid if oil continues to go higher. But how come gold is wavering here?
Little odd, right? I agree with you. I would have thought gold would have caught itself a little bit of a bid. I do have an iron condor in there.
I think it's because we're all on the same side.
Yeah, exactly. It's exactly
like everybody's kind of thinking that, why isn't gold and silver higher? And this is the moment. I guess it has had a big move in the last couple months here, but it has been kind of a weird one.
No, you're exactly right. I think everybody's thinking the same way. Volatility's been contracting in there. Over the last 5 days, it's been kind of flat, but Ivy rank of 50 or so.
I'm long both, by the way. So I'm speaking my book. I'm long MGC, and then I have the SIC, the SIC. Sick.
But if you could only trade gold, the dollar, or Bitcoin right now, what would you rather trade?
I would have bought Bitcoin. No, I'm just kidding, because it's rallied 7,000 from the lows.
I mean, silver is the highest vol of the bunch, so I would say silver. But I prefer trading gold.
Okay.
I would say I like trading gold a little bit more than silver.
How about you of those? So the metals, the dollar, or the Bitcoin?
Now that I'm newly reformed, metals trader, manifesting that
there
out there. I've been trying to trade it from a volatility standpoint and just kind of selling volatility and let it beat me. Gold has been okay right now. Silver's a little bit more whippy.
Okay.
But gold has been okay for right now. So I would say gold.
Micron stock had a massive more than 5% move through midday trading yesterday after the digital memory and storage provider announced plans to build a second chip manufacturing facility in Taiwan. The new chip facility would be built at a newly acquired site. Micron set to report earnings tomorrow, but because of the massive move yesterday, what do you do?
It's a tough one. I'm actually right here would be perfect if we have a big old nothing burger, but I feel like they're
$4.53. It's up about $10-12.
yeah, 450 is like the middle of my butterflies, which
And that would be
seemed out of
new highs.
Yeah, which seemed out of place when the stock was trading at like 300.
It was like 370 a week ago.
Yeah, no, but when we
like
put
legit
those on, they were-
5-7 trading days.
yeah. So we
That's
bought in the
crazy.
risk. So we don't have we have a good position there, but these stocks, they're super interesting. There's so much volatility to the upside, tons of skew. Micron, SanDisk, STX, Western Digital. They all, even like the Korea stocks like EWY, if you look at the ETF going nuts, SK Hynix and Samsung. These stocks are kind of the next spot that the AI movement is going towards, this and optical stocks like Light and Coherence and some of those stocks too, Sienna. These things have so much volatility to the upside. And I think there's a world where you see an Nvidia type move in these stocks where it's just a face ripper upside. And so that's kind of what I'm thinking.
Purely parabolic.
Yes, just purely parabolic. But they've had huge moves. But some of these are small, like SanDisk. You look at the number and you see them move and it's like a huge move, but it's an $80 billion company. It's not like, we're talking like it's smaller than Uber. Like these are not, out of whack prices. And so if this is a big thing, I think you see these go nuts.
Are you going to continue just to hold your position through earnings? Are you going to adjust, take it off because it's right there where you need it?
Earnings are on the
It's tough to-
18th.
that's
after
But the volatility,
closes
you need
tomorrow.
volatility to come in more?
I need volatility to come in.
Which it's not
Sideways
going to,
move.
right?
Right.
I might add a little bit of an upside play here,
Okay.
but we'll see. Do they have earnings after
18th.
Tomorrow.
after close.
tomorrow after the close?
Right.
Yeah, we'll do something. We talked about this yesterday on our little short clip.
Yep.
Alibaba Group CEO Eddie Wu will head its newly formed Alibaba Token Hub business group, which will focus on
That's a catchy name.
Which will focus on building AI work platforms for enterprises. The new group will also comprise of Quinn, which is Alibaba's open AI competitor. I just wanted to talk about the Chinese tech stocks.
Did they ever find the original guy?
Oh yeah, Jack Ma. Yeah,
Yeah.
he's back. He got undisappeared.
Okay.
Yeah, he's
All
okay.
They took them out.
Yeah, they did for a little bit. I was
Yeah.
worried.
That's why I don't trade those stocks.
I agree
all
with you.
of a sudden, it's like somebody disappears. It's like we're not supposed to talk about it. It's like,
I agree with you.
a little scary.
Trading 138, up about $1.50. I mean, even the S&P's just caught a bid. They're up 9 and change right now. So the market's caught a little bit of a bid, a little bit weaker last night. But Baba, off of its lows of 130 something, well off its highs of 180 something earlier this year. So it wasn't that long ago, just 3-4 months ago.
Yeah.
Trading 136, closed at 136, trade 138.
Anything in like a Baidu or JD or PDD? I'm so sorry.
Yeah, Baidu's been acting the same way. JD, which used to be the class of the group, is acting the same way too. Although it's had a 5 or 7 day rally here from $25 to $28.
We actually caught some money on JD into earnings. We were long stock and short laddered puts.
Yes,
The
by
stock
default,
dropped.
right? I mean, we kept buying it on the way down, kind of catching a falling knife
Yeah.
thing. We got bailed out
The
there.
stock dropped, and then I came back from my golf trip, and they had rallied back. It was beautiful.
Lo and behold, you were left a little present.
Yeah, it was good.
Nvidia was in the headlines yesterday as I announced they were doing that big GTC, their developer conference, but they also announced they're partnering with Uber to deploy a fleet of robo-taxis powered by Nvidia's autonomous driving software, and they want to start in Los Angeles and San Francisco in 2027 and then expand to 28 cities globally by 2028. Nvidia also reported that they are forecasting over $1 trillion in revenue being spent on their chips. Wild numbers.
Yeah.
What else do you want
That-
to get this stock moving?
That got a little dicey because the market rallied. They were up, the E-minis were up like almost 100 at the moment he said that. Mm-hmm. It was kind of taken out of context a little bit. It sounded like he said it was $1 trillion next year,
Yeah.
which would be unbelievable, obviously.
Right.
but it was $1 trillion over the next 3 years total. So it's like 350, then or 250, then 350, then 450. Like some of like that sort of progression, which makes more sense. But that was why the market rallied that one moment. And I think I scooped some NASDAQ into it, but because I was listening to it. And I was like, that was a wild one. But did you listen to any of this?
I only saw snippets online.
It was. I mean, I think they had 150 different companies represented at the conference.
I believe it. Like they have their hands in a bunch of different pies.
And I was sitting there talking to Gus, and I'm like, Gus, if there's 150 companies in this web of stuff, like the biggest in the world, trillions and trillions of dollars, this either is going to work and we are so early, or this is the biggest scheme ever and we are like,
well, what side you're picking? You can't have it both ways.
Yeah.
You can't say it's going to be a home run, colossal.
You got to be fading the biggest companies in the world that are all together in one thing. And
I mean, the global economy depends on Nvidia right now.
Well, Nvidia's basically unchanged, up 50 cents.
Got an army of $200 billion companies behind it.
Nvidia can open the Strait of Hormuz.
I bet they probably could.
Strait of America.
Yeah.
You put Jensen on like a Navy destroyer doing like that aura forming
Jensen
dance.
Could certainly buy the whatever island that is. You could take that out. Yeah.
So what do you do in Nvidia here then? If you're believing all this, like, okay, so it's interconnected with all this. Yeah.
I tried to do a little shorter dated, just kind of play for the
That'll work out
for the
good
conference. It'll be okay. I mean, stock's up 50, 60 cents. It'd been better if it was up like $2, but it's fine.
You'll be fine.
Did this lift Uber?
It did. Uber's up like $2 or $3.
Okay.
That was the bigger winner.
It was
than
kind of
Nvidia.
surprising because Tesla was not mentioned in this.
Yeah, and
Tesla
Tesla actually kind of sold off yesterday. It caught a bid and then kind of sold off. It's unchanged this morning. I mean, it's at the lower end of its range. It's been having big movements, but it's been slowly stair-stepping lower. I mean, Tesla started the year around 460. It's under 400.
Yeah.
For sports today, it looks like it's finally happening. Expansion seems inevitable as the NBA will officially vote to add teams in both Las Vegas and Seattle. The NBA Board of Governors is likely to vote on expanding by 2 teams this summer, and Vegas and Seattle are favored. The first vote will allow the league to explore purchase processes for the 2 cities, and then there will be a potential final vote later in the year. Bring back the Supersonics.
Yeah, those are just the best jerseys ever.
It's funny because they weren't really well received when they first were.
Sean Kemp.
Yeah.
NBA Jam.
Yeah.
Yeah.
Oh, is that the
and Detlef
Shrimp.
Yeah. Shrimp. Those two were.
You're dating yourself now.
Well, because if you weren't the Bulls, you would. Or I don't think they had the Bulls because Michael wouldn't allow
his likeness on.
Yeah,
it. I'm not so sure.
I think the Bulls weren't on it. I forget the other team. Like the Jazz were amazing in that. I mean,
you're talking about now like PlayStation.
And the Pistons.
The Pistons. Yeah. It was the one with you were on fire, and once you got fire, you could chuck them from anywhere. Like if there was the first person to get to fire, won the game.
Won the game.
Yeah, it was classic. That was on the joystick, like on the little.
I know.
What was that?
Sega? Atari. Yeah.
Atari thing, yeah.
Well, that's so funny. Leading to my viral video of the day, since Nikki and I are dating ourselves a little bit with our age, I don't have children.
What do you mean? I was out for St. Patty's Day. I'm reverse aging.
Okay, honey. But since I don't have kids, I don't know what the setup is in schools, and I never really even thought about it till I saw this video. But I guess they don't have desks like we remember anymore. I don't know. Yeah. But this is just a funny interaction.
These are the desks my mom had.
No, this is that's what I'm saying. Watch this.
These are old-fashioned. Water bottle though.
We didn't drink water.
Where did your water bottle go? We didn't drink water.
We didn't drink water
until we were 30.
So the kids are like, where does your water bottle go? Like, where's the Stanley go? And then so people in the comments are like, we had to line up at the water fountain and count to 10. We were at the fountain yelling, save some for the fish.
Yes.
We were barely even allowed to go to the bathroom.
Yeah.
If we were parched, we took a hit from the fountain between classes and then just straight whole milk at lunch.
Yeah.
That's true. You would
I
raise
went
your hand to go to the
chocolate milk.
bathroom. The teacher would say yes, and then would go no when they would ask to go to the bathroom. I mean, that's when things were rough.
Yeah. Wow.
Where's your water bottle? You had a water bottle you had a holder for your water bottle when?
No.
We didn't know.
Okay.
I had
That's a
the
new
ones
thing.
where they had the little pocket underneath. You had the little like metal pocket where you put like your like papers and stuff. Yeah.
Anyway,
You roughed it.
Yeah. No, I didn't.
that's been my time. Bat, what's coming up next?
Good job out of you. We're going to take a quick 90-second break and come back. We got more Tasty Lives. Even the S&Ps just made new highs, up 15 and change. We'll be back in 90 seconds. We got more Tasty Live, a little Tasty Extra, and then confirm and send. Going to be fun. We'll be back in 90 seconds. Tasty Live.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago and learned all about it. And we've been trading actively since February and just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words.
Thank
Really
you,
do
Rob.
appreciate it.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And you know, I'm the Bat.
John McLaurin, Wisconsin, number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University. Number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto. We got it. We get it.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Nikki, we are back, son, and you know what that means. We've got a little bit more time for some tasty live as even the S&Ps make new highs up 16. Before we talk about today, let's take a look back on yesterday, March 16th. Let's throw up our first slide here, give you a little recap. If you missed yesterday, here's everything you needed to know but was afraid to ask.
Yes. So it's a strong day in the market. S&P, NASDAQ, the strongest of the group. You had the Russell and the Dow just behind it there, just under 1%. These moves were in line with history, so relatively inside up type day here that we had yesterday. It was kind of surprising. We started the day, the NASDAQ was kind of the weakest of the group. Russell was the strongest of the group, kind of flipped that towards the end of the day.
And then we're talking about a small percentage here, all things being equal. They're all up, basically the same in the market. But yeah, I get the spin.
Yeah.
I get the spin.
Yeah. It's just a little recap.
Yeah, no, I get it. I hear you.
Rain on my parade?
No, nothing I can read here between any of the four major market movers here, except that they were all strong. You will get those days when
I'm gonna give you the granular stuff too. We're starting big. Okay, we're starting big. Here's what happened. Markets. We're gonna break it down. We're gonna go to Mag 7. Okay. After the Mag 7, we're gonna go, the biggest movers to the upside, biggest movers to the downside, and then we give you a big old visual. Because I know for you,
I am visual.
For the ones that are a little bit, they look at the numbers and they're like, oh, too many.
Reading
numbers.
impaired is what you're asking.
Reading impaired, a little, in need of help.
I need it. All right.
We have the visual for you. So here's our Mag 7, obviously the leaders of the market. You got Meta, biggest mover to the upside. Amazon catching a little bit of a bid. Nvidia had some choppiness to it throughout the day. You had Jensen speaking at around 1 is when he started 1 Central Time. I think 2 Eastern. Nvidia having a little bit of choppiness there. It was up, $5 or $6 at one point, kind of ended the day up $2 or $3 there. Tesla and Microsoft have kind of been choppy / at the lower end of where they've been trading. Meta as well. Meta kind of bounced on that news about the layoffs, or at least I'm tying it to that news of the layoffs. And then Apple and Google have been, kind of mid-range too. It's been choppy in Mag 7 land.
It has been choppy, and you look at that. Tesla has the highest monthly implied volatility, yet the IVR is the lowest in there. I mean, I find that to be interesting. And Microsoft, the first time in a while, has the highest IVR. Microsoft really hasn't.
400. It's been pinned.
Yeah.
In terms of just the sectors, so breaking this down by sector here, biotech, semiconductors, and then tech, those were the three outperformers of the group. But everything really across the board having a nice little day here. You're even getting a little bit of a bid in the financial sector. Surprising that is one of the higher volatilities on the board, financials and the utilities, which is not a sentence you would expect to say all that much. Having those be like two of the places where volatility is kind of expanding. You can see it in the 5-day IV change there. Those two sectors have kind of been headline driven. You had a lot of weakness in the financial sector over the last 2 weeks or so. You look at like a JP Morgan, Goldman Sachs, some of the smaller banks, XLF is what we're measuring here. And then in utilities, there's been a lot of kind of like wishy-washy news type stuff with energy names. You had some of like the uranium stocks, CCJ has been very, very weak. Some of the fertilizer companies like CF and Mosaic, those have been kind of, all over the place. So definitely some added volatility there. But across the board, couldn't really miss yesterday on a 60, 70, 80 point move to the upside.
Yep, and this would be when you're looking at that heat map that you've come up with. This would be the whole left side participating here.
Yeah.
The technology side of it more than
everything participating. It's a nice big green.
Yep. Broad-based. I mean,
you like a green image. You don't want to see the red.
St. Patrick's Day. You want a green.
Yeah, this is
right. St. Patrick's Day.
St. Patrick's Day green for you. In terms of just some of the biggest movers in the group, so at the top of the list you have Ciena. It's one of the stocks that's getting added in the next rebalancing. Ciena, Light, Coherence, which is COHR, and SATS.
What was it?
SATS.
SACS.
I think it is. EchoStar. SATS.
Ah, gotcha. Sienna's on its highs. This hasn't had a downtick.
You also have a lot of the memory stocks there. So you got SanDisk, Western Digital are in there. You have like Teradyne, which is kind of in that space as well. But some of those are moving. You have Micron reporting earnings tomorrow after the close. Tomorrow after the close. So that's certainly on the agenda here. You can see it in kind of the movement there. And then a little bit of a reprieve in some of the stocks like Norwegian Cruise Lines, UAL. They've been really hit with this move in oil. There's, like obviously higher oil prices going to affect travel, vacationing, stuff like
Chipotle
that.
having its first uptick in what seems like the beginning of the year too.
CMG, I don't know if I want to trade that ever.
I don't blame
Pretty
you.
dead to me.
I don't blame you, but I think your brother had Chipotle for the third of 5 days in a row or something like that. Yeah.
What does he get?
Usually like a power bowl or just like a rice and steak thing after he works out.
Nice.
Yeah.
What is it, like $20 a day or something? For him to get lunch, you have full fridge.
I can
full fridge.
I can tell you exactly.
$5,000 a year.
I can tell you
$5,000 a year. You got full fridge.
I get full fridge. Is that what it is?
No, you got a full fridge. You got.
Oh, I do have a full fridge. Yeah, sure.
You got a good fridge. You got a fridge in the garage. You got
Don't stop now. You're on a roll. Yeah, I got about 4 of them. I think.
Yeah,
right.
Yeah.
Let's try to see here. I can tell you exactly how much it is. It is $15.75.
That includes delivery and everything.
Oh, he's picking it up.
Oh yeah, now you can drive. Okay,
come on.
That's better. It saves you $10.
There you go.
That's girl math. He just got you a 50% discount on his Chipotle bowl. It's girl math.
Saving me
got
money.
a 50% discount. It's like on sale. Amazing.
I don't think you can say that. I think you put yourself in the penalty box now. Next one, please.
To the downside, the biggest losers in the S&P 500, some of these kind of fertilizer stocks, Mosaic, CF Industries, those are the 2 at the top of the list. They have had 5 to 10 to 15% ranges in either direction. These are stocks that historically don't have this much volatility. So they're kind of in play there. CrowdStrike is another one that has had a really big run to the upside. It's gone from like 350 to 450 basically in the last month or so. So I don't know if I take too much out of that one. The rest of the list is a lot of just kind of consumer staples, stuff like, Domino's Pizza and Ulta in there after earnings. Ulta kind of getting whacked a little bit. So, so it's just a kind of a mixed bag to the downside. I mean, there weren't that many downside moves. I think something like 400 of the 500 stocks were up on the day. So, you're talking about, this is more like volatility driven is kind of what I look at this, like MOS and CF. The biggest movers, that's kind of just like, a volatility type. You had a $15 up move over the last 2 sessions and you gave up 5 of that. It's kind of like, you're down, but you're net up, 10%.
Yeah, I mean, this is that whole fertilizer stock. Not that my friend Chris is coming in at 840, but I won't mention Mosaic going from around 32 to 27. And
no, I caught it. I scalped.
You caught the downside.
No, I caught the upside.
The upside. Oh, the first 2 days. So you got to go back to like Wednesday or Thursday of last week. Be out by Monday or so, or Friday or
that
Monday.
That's exactly what I did.
Yeah, I'm just saying you had to play. All I'm saying is usually you could fade this news.
Yeah, man. Trade. Okay.
Man, you really are a Chris lover. Go ahead. Never mind.
Here's
that heat map I was talking about. There you go. Thank you. Thank you.
In terms of the market as a whole, you can see across the board, there's a pretty green day. Just getting ready for St. Patty's Day here. Not much weakness across the board here. It was a strong day yesterday. It was a great day to the upside.
For the Bulls, yeah, great day for sure.
For the good kids.
Yeah, I thought this morning the market was going to kind of rain on the St. Patrick's Day Green Parade, but we'll talk about that.
Today, maybe we get another one of those just digestion days.
That's what you quoted earlier this morning before we even got on the show. I think
vol crush, because you got so much happening tomorrow. You got them. I know that Micron is not like the biggest company in the world, but the volatility there is telling you that people are speculating. So you got that after the close.
Yeah,
FOMC, you have volatility expiring. I think it rolls this morning.
Which one?
Vol
on a Wednesday usually.
Is it in the morning on Wednesday or on Tuesday?
On the morning on Wednesday.
So we have vol expiration tomorrow as well with
yeah.
FOMC. I would not be shocked to see today be kind of a choppy day.
Yeah, VIX options.
Nothing day.
Expire on the opening AM pricing.
They probably, the invisible hand probably wants volatility a little bit lower.
We finally got 23 on volatility yesterday, which was...
It's at 22, no big deal.
Yeah, something we haven't seen in a little while. So let's talk about that. Let's take a quick 90-second break. We'll come back. We've got confirm and send. We'll talk about the market, what's moving. We'll be back in 90 seconds. Listen to Tasty Live.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago and learned all about it. And we've been trading actively since February and just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words.
Thank
really
you,
do
Rob.
appreciate it.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And you know, I'm the Bat.
John McLaurin, Wisconsin. Number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University. Number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto. We got it. We get it.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Hey, Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live with confirm and send. But before we do, let's take a quick look at the market. Market's back, too, a little bit. Kind of a very tight range last night for most of the night. Really like something like, I don't know, like 10 handles, really, for most of the night. And then as we kind of opened or kind of went to our show here. Market caught a little bit of a bid. We were green by the time we came on the show. We're up 13 right now, about 5 handles off of the highs. You can see here that we are about 50 handles off of the lows, but this has all been this morning. It's really been weaker for most of the night by about 10 to 20 handles. NASDAQ up 31. Let's call it basically all unchanged with the Russell up 4. The Dow up 130 is up 1/4 percentage point. That's usually when I start saying it's catching a little bit of a bid around 1/4 percentage point. So the Dow, which was weak yesterday relative to the other three, as you looked just a moment ago in our last segment, catching a little bit of a bid, catching up today. Volatility in by 11 cents, 22.88. And you did mention, pretty astutely, I might mention, that VIX futures are expiring on the opening. That's the AM settlement tomorrow. So those VIX futures will expire. Not the ones that you're looking at right now, which are the J futures, but the ones that are if you look at VIX, I'll go back to it one more time. I apologize. Should have done this all at one time. You'll notice that these futures are trading closer to 23 and change here.
Yeah, there's not a ton of the curve is very
flat.
Volatility right now.
Yeah, I mean that volatility is probably going to stay bid-ish going to the near future.
Yeah,
like I don't think you're going to see a collapse of 3-4 vol points here.
So you can make I make this watch list every year just to have all the volatilities, and once they come online, like once they're tradable, they'll populate here, but you can put this into a watch list. I just call it volatility. You could just make your own watch list here if you click this manage button. But this is how I view the curve, and I put VIX and VVIX in there as well. You could put some of the other, like if you want OVX in there, you do the OVX : CGI. But anyway, that's a way you can see the curve of volatility. So you can see we're sitting here at 22.85. This is the front contract. As we go out on the curve, it's relatively flat. I mean, you actually see a little bit of contango here with the move that we've had over the last session or two, but it's very flat. 20 or 30 points, 20 or 30 ticks between volatility is nothing.
Right.
I mean, that can flip intraday.
Right, and you can look across the board in something like an SPX or SPY and look at all the monthly implied volatilities are basically the same. There's no change in either one of those. So good job out of you.
I just liked out the call spread that I had in gold, so I'm even longer gold here. So I just have a put spread.
Got it.
So I have the 4850, 4800 put spread, 41 days out in time. I have it for $12. It's marked at 14. So I'm out $2 on the trade as a whole. But I close that call spread for $1.20. There's just nothing left. I mean, over 41 days, you're talking about 10 cents a day.
Sure.
It's nothing.
Sure.
So,
totally agree. And if you get something, you rally, you can change it and put something else on, or just change the spread.
Spread.
Well, we'll talk about gold since it's up $15 and change. I've been kind of doing nothing right now, taking a back seat to just about everything. And by everything, I mean oil, which traded up to 97.5, back down to 94 and change. That 97, 98 area, at least to me, seems like oil can't get above that at this point. When we look at volatility on there, OVX, regular colon, CGI, as my son has told
there
me.
You go.
You can see it trading 101 and change. I'm going to think that's actually going to collapse a little bit more.
Yeah, so it's like VIX. So you can't trade the options until the market opens. So that'll either come in or expand once the market opens. I'm with you. I think it probably contracts. We were talking about this
even with volatility a little bit. I mean, even with oil a little bit higher by $2.40. Yeah.
We were talking about this yesterday, Jamal and I, on last call. I think the way the curve of oil has moved, which is the back, if you were looking at it last Monday, back month, oil was trading at the 70 hand.
It was cheaper.
73, 75. Mm-hmm. It was very, very steep backwardation. You were looking at
front month
105 into the craziness to mid 80s to the 75 hand back. It's now kind of shifted up while the front has come in. So you've got 90. We can actually even look at it. So we've got 95, 94, which is our 95-ish, which is our front. And then in the back, it's got into the high 70s. And then the further out expiration, 75. What it's saying, or at least what I think it's saying, is okay, right now the market's pricing in that, this might not be as short as we thought it was going to be, but not as long as people are saying that it's going to be. Like if this was expected to be a two-year escapade in Iran, you would think this would be higher across the curve. You'd have 80 or 90 in the back where it would be a flatter, higher number, but it's kind of lifted up, which kind of leans me to think that maybe this is kind of the spot, this 80 to 100 range where we kind of stay in, but volatility has to come in if we do stay in that range. So and
volatility came in for the first time on Friday when oil was higher. We talked about it a lot, and that was kind of a key to me that maybe oil was taking a breather to the upside, and we tried to at least play it that way. Volatility, I mentioned, in by 19 cents, 22.80. Bonds are up 4 ticks, 114.24. We were selling some puts a little bit below here and right around here when we first started or so. So those probably come in pretty nicely. Volatility is actually upticking a little bit. IV rank of 25. Bitcoin traded, I don't know. I mean, on
75.
On the futures up to 76 or so. But yeah, Bitcoin itself looks like it's basically unchanged, but it's caught a bid from last night, as you can see here on the right side of the screen. Ethereum doing the same, trading around 2,300. It was just 2,000, 4 or 5 days ago. So cryptocurrencies have caught a bid. They probably were the strongest of everything over the weekend in the market. Oil, we just talked about 197, up $1.97, trading 94.34. Gold up 14, silver up 33. The gold-silver ratio has been hanging tough at around $62 here for the last couple of days. Nat gas catching a bid up 4 and change. Corn, wheat, and soybeans basically unchanged. The euro's unchanged. Japanese yen is unchanged, even though it is red for just a skosh there. That's all I really have.
People asking for what's your assumption. That is tomorrow. You can submit trades now or anytime.
Sure.
tastylive.com/assumptions. Get those trades in.
It's a quick little easy thing to fill out too. It's very
tastylive.com/assumptions. Confirm and send. Let's do it.
Let's do it. Let's get it. Let's get it going. Is there a limit as to how many directional trades you'll allow yourself? You, son, do you set any parameters on your?
I have 4 pages of positions. I honestly.
But they're not all directional, but everything is a direction. When you put something on that's delta neutral, you're picking a direction.
Yeah, and some of them I have stuff that's like left over, a wing from something, from a diagonal or from an iron condor that's 0 bid. So that is, of tradable positions, I probably have like 50.
Well, we're premium junkies, and premium is as high as it's been. Well, we should have more positions on than normal, right? I mean, if you normally have 2-3 pages of positions, you should have 3-4 pages of positions.
Yeah.
Because there's opportunity abound. That's what you're looking to do. Ramp up with different positions to smooth out your P&L curve.
Yes. And from a directional perspective, when we have these bigger one-day moves like yesterday, I tend to be less directional today than I was yesterday because I'm taking off long delta positions. I'm not adding short delta, but I'm reducing my overall long delta into that move via closing out of long delta positions. So that's, my directional trading into big moves in either direction gets a lot lesser because I'm taking off the stuff that is working rather than adding opposite delta. Like I don't add risk into a move like yesterday. Like I'm not using more buying power to get short delta. I'm using less buying power to get less long delta is kind of how my positioning works.
Good job, Eddie. Next one, please.
A couple of times now I've seen both the market down and VIX down or vol futures down. I thought when the market went down, volatility expanded. Question mark, what gives?
Yeah, I mean, it's not 100% of the time. It's probably closer to 85% of the time. But, you got to take everything into consideration. This is where the left side of the chart, or looking back like we've been doing the last couple of days on what the market did in the morning, looking back at what it did yesterday, you have to put it like, the whole picture. This is market awareness, tape reading, whatever you want to call it. If and you've been trading for a little bit of a while here, and volatility has been into the, high teens to the the high 20s, and we're around the high to mid 20s. You got to think without an extended move lower with some velocity to that move that you're got a little.
Oh no, you got to log back in. It's okay.
You're gonna have a little bit of volatility, ceiling to it. Yeah. So, but that is a good thing. That's so the next thing that you might look here is saying, well, market's going lower and volatility's not going higher. Maybe that's something I look to sell some volatility, maybe with a little bit of bullish delta to it, broken wing, put butterfly or something like that, or maybe just a small put spread in a product that's going to mirror the market, SPY, Qs, IWM, Dow, if you want to go there. Just to say, hey, you're putting your what you're observing is happening in the market and putting you're placing your bet for it too. I mean, that's the way to take this to the next level.
Yeah, I think
there's no telling which way the market's going to go the next day. But you try to put as much.
Caught up with volatility. So when you have high volatility, if there's an inside move, it doesn't matter if it's up or down. Mm-hmm. That's inside implied volatility. That is a non-volatile move, even if it's to the downside.
Next one, please. What happens if my option buying power goes to zero? You should know this because you have a lot of losing trades sometime, or possibly even negative.
I don't know what you're watching.
You've been on fire lately. I'll give you that. Would I have to liquidate my positions? How about rolling positions?
I just took off half my NASDAQ, so I have small, and I closed the call spread yesterday. So all I have is a fraction of a position in the micro NASDAQ long.
It was a great buy the dip opportunity there and selling premium on top of it. Good job out of you. And you scalped around it when you first put it on too.
It's been great. We're going to do that a lot.
Yep.
Going forward.
You're a mouth to whoever's listening, but
yes. Mm-hmm. Yes, you'd be in a margin call because if you can't be margin debit with option positions. So if you do get to that point, you would be in a margin call. You'd have to either close positions or add funds. The easiest way to do that would be to buy wings, close positions. Like the first thing I would do would look for winning positions and just take the money and run and take off that capital. If you've got short puts that you're at 30% of the max profit, take the money and run and free up that buying power. I mean, you're probably getting a little too big if you're in this situation. So I would say, generally speaking, you probably have too many positions or too big a size. So that would be the next
for your
thing
account, right?
That I would address is, maybe I'm over trading a little bit.
Yeah.
But yes, if you have zero or negative buying power, you can't go margin debit like you can with stock, buying stock on margin. You can't do that.
Yes, and you could go right to the cap requirement on the right-hand side of the Tasty Trade platform and look which one is using the most amount of buying power.
And you'll see where you're out of whack.
Of course. I'm just trying to give them the math to it to see which one is using the most amount of buying power and maybe look to reduce your risk in that one. But the good thing that my son said, and I think the most important thing here, is not the situation that you're in right now, but how you got there. And just from this small little excerpt of what's going on in your positions, entry is the only thing you can control, and you're too big on entry when you're doing this, because you shouldn't be using, unless you have a very, very small account, you shouldn't be using, this much buying power for your account. Next one, please.
I was watching the video, 0-Day Trading Deep Dive, The Numbers Don't Lie, with the bats. That's us. They mentioned that Tuesday and Thursday are the worst days to trade, but they don't explain why. So why is that the Tuesday and Thursday are the worst days to trade, and why are Mondays the best? So I think this was a 0-day segment.
Yes.
From back when.
Yes.
Why would you think?
I mean, because the numbers don't lie. I don't know why it is. That's just the way it has been. That doesn't mean that's the way it's going to be.
It's 3 years of data, and I don't know when we did this one, but 3 years to this point. So if we did this like 3 or 4 months ago, it's only been like, 2 years and 8 months, like it's not, you're not looking at a huge data set here.
Right.
It's not conclusive evidence.
I actually forgot about Tuesday, but I did remember Thursday.
Yeah.
So I don't know. Why is it like that? I don't know what the reason is, but that's what it's been like. Now take it for what you want, because I don't think the future really can be shown by the past. But if you forget the past, you're destined to repeat it again. So I do put it in the back of my back pocket, and kind of, if the market is looks like it's percolating on a Thursday one direction or the other, I might abstain from making a 0 day. But you can't
imagine how easy it would be if it was just there was a reason for everything, right? So you saw the E-minis and they were up, and you said, oh, well, every stock's going to be up.
That's right.
That would be pretty easy.
That'd be pretty easy.
Not always a reason in markets.
Right.
There's a lot of uncertainty, variables that you can't really put your finger on every time.
Let's take a quick 90-second break, and we can put our finger on this option jive. Coming up next is Tasty Live. E-mini S&P's up 23, new highs. NASDAQ up 71, new highs. And the Russell up 9, new highs. The Dow up 189, new highs. Volatility down 22 cents, new lows. We'll be back in 90 seconds. Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
I'm just gonna wait for the stock to dip, then I'm a buyer. Buying into weakness is a phrase used to describe the action of getting long a stock into a down move. It's a contrarian trade. Most people want to buy what's hot, the stuff making huge upside moves, the chart line moving up and to the right. Nobody wants the stock at lows. But it's hard to buy high and sell higher, rather than buy low and sell high. There is a phrase for this. When the time comes to buy, you won't want to. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
It's option jive. That's right. You heard what the man said. It's time for an option jive. Rolling part 1.
Ooh.
Oof.
You know how
implying there's more parts.
It's the first
Can't get
part.
nothing past me.
Two-part series today.
All right.
Gonna be a good one.
All right. Let's take a look at it.
Rolling part 1, how it controls volatility. How do you think it controls volatility?
How does rolling control volatility?
Yeah.
It's got to smooth out your volatility curve. It just has to. Especially if you take even some. I mentioned it yesterday, looking at volatility, how the front month volatility had a 20. I'm talking about SPY right now. Had a 28 vol, and the back month had a 24. And into yesterday, it was 24 and 24. So if you really wanted to take a little bit of the volatility off of the front month, you could have rolled yesterday and at least took advantage of the 4 vol point differentials. Maybe it'll expand again in the front month. You roll back if you really want to.
Well said.
Thank you.
Common question we get.
That's what happens when you trade.
Yes.
You don't trade. You talk about rolling and just saying it controls your volatility without having any real life experience.
For sure. A common question we get is what we mean by managing a trade. So we're going to try and quantify that a little bit for you here. Rolling is just a fancy term that means simultaneously closing our existing position and opening a new one. You could do this in time. You could do this in the same expiration. It's just closing a put and rolling to a new put. That is a roll. And selling out a new put. Selling a new put, buying to close an old put. You can change the strike duration or both. There's many ways you could do this. We look to roll as a defensive tactic and rolling for duration to keep the dream alive and to adjust our deltas. So we will roll if our assumption is still the same. I think this is a good point to make because you don't have to get married to a position. You don't have to roll just to roll. But if your size is correct, if your assumption is still the same, if volatility is high, it gives you a reason to continue with the position. If you don't want to be short or long delta or whatever, change the position, and you could do that with a roll. You can roll to a less, if you're short a strangle and your call is tested and you don't want to be short delta, roll to an out of the money strangle. It's totally fine. Whether it's better or worse is going to depend on what happens in the future. So do you, boo, as you used to say. While a delta neutral strategy, you like that? Do you, boo?
I think I did say that once or twice back in the day.
I'm hip. I do one day of day drinking on the weekend, and I'm just hip again.
You are. I didn't think it was possible, but you're there.
While a delta neutral strategy starts off with no immediate directional exposure, it becomes directional if the stock approaches one side or the other. This is just a visual of starting with a position that is net short delta. If the stock rallies, your call might be a 30 delta, your put might go to a 10 delta. You're going to be net short 20 deltas. You're still in an out of the money position, but you get short as the stock goes up, you get long as the stock goes down. It's just the mechanics. The new deltas, which is your directional exposure of a delta neutral trade, is the opposite of the stock's movement. So if you are selling iron condors or strangles, as the stock goes up, you are going to get short delta. You're selling into strength. As the stock goes down, you are going to get long delta. You are buying into weakness. You're doing this dynamically. You're not actually doing this with new trades, but when you put on a trade that's neutral and the stock moves, which it will, you will dynamically get this delta. And that's how, trade. If you're trading on both sides of the market, just across the board in your portfolio, this is how your portfolio will work. You'll have stuff that gets more short as the stocks go up, more long as the stocks go down.
Yeah, that's selling premium.
Yes. When you compare to holding to expiration, rolling not only increases profitability, but it also significantly reduces volatility. So when you look at just one standard deviation SPY strangles, the average monthly P&L, and this goes back a long time. So these numbers are much smaller than what you're looking at currently. And this is kind of the caveat emptor of long back tests is that you have markets that are a fraction of the size as they are now.
Caveat emptor, I believe, is buyer beware.
Yeah, that's exactly what this is.
Yeah.
These numbers.
I'm just trying to tell you what it means in Latin. Yes.
Yeah.
I don't know if everybody else knew.
Yes. Buyer beware.
I didn't.
You're looking at this, you're buying this study, and you're saying $30 a monthly P&L. My stuff's moving $300. Well, that's because the market has 4x'd from the time that some of these were.
Did you drink for St. Patrick's Day this morning? You got like a little Irish coffee over there or something?
I wish. But the takeaway here, the key takeaway.
I didn't learn caveat emptor until I was in my 50s.
Well,
some asshole told me.
I'm college educated.
Yes, you are. You were the first Batista to go to full college. I mean, I went for 3 months.
On time.
And graduated on time. Yes. It was touch and go there for a little bit, but
touch and go.
Graduate on time.
It was touch and go. Touch and go.
You graduate on time. No doubt
I had extracurriculars that I enjoyed more than the schooling.
I'm sure you did.
I'm a show pony, though. I'm not a school guy.
You are.
I'm a show pony. You give me some slides.
Wow, you must. Let me take a look at your positions here. You're really too freaking. Oh, I got you. I see here. You got a little bit of a good move.
Yeah, I got a little bit of a good.
Go ahead, show pony. Keep going.
The main key.
Just don't put on a tail and hooves and start walking around like like a show pony. Okay,
Yeah, no high heels for me.
Just behave properly. Go ahead.
Average monthly volatility. Thank you. Average monthly volatility is really the key here. When you roll positions, all else being equal, your P&L, it's not like something that's going to add to your P&L, but it's going to reduce the swings in your P&L. You're going to have much lesser losses, much lesser profits as well. It's going to tighten it up across the board here as you're managing positions.
Yep.
So when tested, this approach prevents the delta on both sides from becoming too large. I mean, this is really the only way that you can reduce your directional exposure without adding risk. We talked about this, through this whole session today.
Yeah.
Of just, reducing your directional exposure without adding risk. Rolling is really the only way that you can do this. And this goes back to 2010. Again, a lot of this is going to be tested on the call side. The market has gone up significantly. And so, reducing your overall delta via rolling is really the only way you can reduce the P&L volatility.
Well said.
So when we talk about occurrences, 70% of all occurrences, both sides of the delta remain in a very reasonable range. So when you're looking at like a one standard deviation strangle, this is kind of the range of your delta. And the reason the delta on the put side is a little bit wider than the call side is tighter, but generally higher. The wider put side is because you usually have bigger downside moves. And so, if you're selling one standard deviation strangles, it's not a shock to see your position get to 50 or 60 deltas at the money like that. You should expect that from time to time.
That is correct.
Managing losers approach can help control the position's volatility as well. So to compare the effectiveness of these two strategies, we simulated two portfolios with 25% of the capital allocated to each strategy independently. So this is managing winners and managing losers. When you put these together, your overall P&L volatility is going to contract, right? So with comparable volatility controls, the rolling approach yields nearly a 40% higher return than the stop loss strategy. This is when we're looking at just exiting losers versus rolling the position. We get that question all the time. Why not just close the losing trade? You certainly could. Rolling is actually going to be better because it allows you to kind of buy into weakness, sell into strength in some fashion. Even though you're reducing that delta, you're still net short into higher prices. You're still net long into lower prices. And as long as you get two-sided action, it's usually better off just kind of doing that roll as opposed to eating loss every time.
That is correct. And just closing before it gets to be a worse loser is a lot easier said than done, right? Because nobody knows the future.
The last in the NASDAQ.
Look at you.
We'll buy a dip.
24. There you go.
Takeaways. The rolling and rebalancing strategy can help reduce positions volatility by keeping its delta within a narrow range. Anytime you can reduce your overall P&L volatility, you're going to sleep better at night. It outperforms traditional stop-loss methods by generating a higher return on capital while still providing the similar volatility controls. Rolling positions. How to control volatility.
Got to love it.
Yes.
Good job out of you. Good job out of the whole team here. Even the S&Ps are up 29 and change. You could see just about at their highs for the day. When I said new highs, I meant new highs for the days before we took that break. NASDAQ up 105, just was over 25,000 and change, trading 24.9 right now. Russell up 11, Dow up 240, and volatility in by 24 cents, 22.71, more in line to where we were when even the S&Ps were at this level last time. Bonds are up 6. Bitcoin hanging out at 74,000. You can see here catching a little bit of a bid too over the last couple of days. Oil up 186, not dying a slow death yet. Still up on the day about 2%, but off its highs of 97 and change. Gold up 16 in line with the market or so. Silver a little bit stronger, up 43 cents. We'll take a quick 90-second break and come back. We'll catch the opening bell right after this. It's Tasty Live.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Nicky, we are back, son, and you know what that means. It's just about 3 minutes before the market opens here. Even the S&P's just caught a small little bit here, up 32 or so. And I mean a small little bit since the last 90 seconds that I quoted them. NASDAQ up 122. They're all up around the same. Russell up 11 on a percentage basis, about half a percentage point, with the Dow up 250. Volatility continues to collapse a little bit here, down 31 cents to 22.70. Bonds up 5 off of the doldrums of under 14 to 114 and a quarter. Bitcoin hanging out at 74,000. Oil, which is the big story across the board here, will be interesting to see what happens to oil implied volatility. IV rank of 77. You remember that was over 100 just about 48 hours ago. OVX
colon
CGI has come into under 100. We'll see what it looks like to about 101, I guess is where it closed. We'll see where that opens today, shortly after the market opens today. Gold is up $15, been a very tight range here. IV rank of 51. You can see it's come down, but been going sideways as of late. Silver up 30 cents, kind of off of its highs here of 82 and change, more in line with what gold is doing. Nat gas is up 6 cents. It's a decent sized move, 2%. You can see it's kind of coming down here a little bit last couple of days. It'll be interesting to see what the market has in store for us today. You've already made a bunch of trades this morning. I mean, it only says 5 trades or so, but you've scalped out of some bigger positions, NASDAQ position, which we're leaning a little bit long in over the last 48 hours, kind of short call spreads against long NASDAQ futures. So those out pretty nice. You got out of a gold spread you had. You got out of a E-mini S&P We had on for two weeks, almost 2 weeks, I think.
1 week.
1 week?
Did that last week.
Nice when Craig was here. Good.
Things were popping off. And I was just going to mention that call spread that we had in NASDAQ. I closed it yesterday, middle of the day. Not really the high of the session.
You were short the call spread, right?
Short the call spread.
Yeah.
It was
So
a short.
closing at the high would not have been optimal, right? I mean, I'm just trying to point. You don't get everything.
Yeah.
Everything you want. But go
But I
ahead.
was saying with the vol contraction that we've had throughout the rest of the day yesterday and into today, even though the NASDAQ is up another 0.5% today, that spread has moved. I mean, it's a wide spread. It really hasn't moved all that much, maybe 1 point, which is small, like $50.
Yeah. Exactly. The heavy part of that was the future side of that trade.
Yeah. But the vol contraction side has helped.
Also.
Yeah.
Yeah. Sure. I mean, that's when a plan works together. It doesn't always work that way.
Of course not.
But that's when a plan works together. You got high implied volatility. Volatility is mean reverting. It didn't look like it. And 2270 is not low implied volatility. It's high relative no matter how you measure it. Let's see how the market is moving here today. I guess we can go to the Buckers real quickly. VRT down around $4. Circle down around 2 and change. CRWV, which is CoreWeave, down $2. MSTR, MicroStrategy, a little surprised here, down $1.80 or so, although it has quite a small bid the last couple of days. It has not mirrored really what's going on with Bitcoin itself. Tesla down 2 and change. Got a little bit of long delta in there. Let's see what Nvidia is doing. We played it a little bit there. Nvidia to the upside. Nvidia up around 70 or 80 cents. Hasn't moved too much there. 184 or so. BE down small. Intel down small. TSM now unchanged. Let's see what's moving the market to the upside here. Goldman Sachs up $17. Can't keep the evil empire down. MU up around 9. Carvana, which I don't trade. Market's kind of stinking there. It is a big mover, though, up around $7. OKLO, something you haven't traded in some time, is up $4 and change. What did you just do? Your little gold something?
Yeah, we sold that yesterday for like 9 something.
Closed it at 845 with gold basically unchanged here. Yeah,
volatility coming in there. I mean, I guess I could have just held it, but I have enough.
Run like a thief in the night.
Yeah, I have long delta in gold. So if we get a move in gold to the upside, I would expect volatility to expand, and so I can sell out upside calls in GLD as a way to be short volatility. But gold volatility is kind of. It's not low, but it's, IV rank of 51. It's coming pretty significantly.
Yep. Totally agree there. A little bit more of a recap here. What's going on? Meta continues its rally extending its rally into yesterday, up $5 or so. SanDisk up around $10. You mentioned that earlier. Qualcomm up $4.
Yeah.
IBM up around 3 and changed. Uber up around 3. You talked about that with Nvidia. So pretty much a broad-based rally of the usual suspects.
Yeah, today I'm doing.
Even the S&P's up 43. Didn't think this was happening last night when I went to bed.
Yeah, today I'm looking at my positions and doing kind of what we did yesterday of putting in orders at lower prices on stuff that is working. Like Goldman Sachs is up $15. I sold the 700 strike puts. They've come in like $4 from yesterday because Goldman Sachs was down yesterday. They're basically a scratch. I've got an order in for 770. I sold them at 870, so I'm trying to take $100 out of those. But I think the story today is going to be volatility contraction. Maybe we get a little bit, of a choppiness here at 6,800 in the minis, and you might get filled on something if you just kind of let it sit. Like you might get a moment where you get that tick and it gets filled, and then you're out of that position. And so.
You never know when good things happen, so you put something in at your price, right?
Yeah.
I agree. Even the S&P's up 43 here, trading. We're back to 6,800. This is a little bit above where we were 2 days ago when we rallied up to around this level and sold off on the day when we're down by 50 on the day. If you remember that, I think that was last Friday. Just as 6,800 again.
Mm-hmm.
50 handles off of pretty much that mean of 6,850, but coming from the downside now, not the upside. A little bit different volatility. A matter of fact, if we look at /VX and you go back to the 2 days ago, it got as high as almost 25 and its low was 2340. We're a full vol point lower than that right now. So anything that you put on should have worked out nicely for you, all things being equal, if you're selling premium.
So those were...
Now what is the question?
So I closed out the Microsoft. We did a short put with a call ratio spread out in April. We did it at like 6 something. I closed at 280. So a couple $100 on that. And then I closed out the...
Directional trade, right? And you got the direction.
Neutral to slightly direct. Because you were long delta, yes.
Yeah, you had a short put versus a call spread.
Call ratio spread.
Call ratio.
Yeah.
So you're right. I'll give you
neutral / slightly long, but short volatility.
Yeah, if it would have had a big quick move and volatility stayed expanded, you wouldn't have made it.
I mean, the stock's gone nowhere. It sat at 400 for 3 weeks.
Nice trade.
And then we scalped out of those.
This is that thing when you go higher. I'm sorry to interrupt you. Calls don't move as much, right? Volatility comes in, and those calls don't move versus the naked put too.
Family is not having to say you're sorry.
You're 100% correct. You're 100% correct.
And I just got filled on the Goldman Sachs put that we were just talking about.
Ooh, very nice.
But I also scalped out of those Nvidia calls that we sold yesterday into the move. We sold them at like $1.20. I just closed them at 44 cents.
Beautiful. So what was a better trade? The one you just closed in Nvidia where you make basically a buck, or the Goldman Sachs trade where you make basically a buck? Just out of curiosity, how you look at things. Doesn't really matter, right? $1 is $1 is the way I look at it.
Yeah.
Right? It's just
happening. They're all kind of the same. You're trading volatility, and
that is right.
They're both kind of working.
Yep.
Uber up $4 and change. I had some 80 strike calls that were left over from a diagonal of some sort.
Uber, the big Nvidia winner here, right?
Yeah, with 3 days to go. I've gotten this question on some of these. With diagonal spreads, you have the asymmetry of risk reward. So you have a potential upside that's greater than your downside generally.
Mm-hmm.
If you're wrong on direction, there's not a ton you can do. You're kind of out that capital, but you still have these long options that hold some sort of value. And generally, I try to keep the position small enough to where I can just hold the position. It's not a big deal. Today, with Uber up $4, those calls went from a penny to 75 cents. It's not like it gets you back to a scratch.
No.
But you got that little extra kicker that you can, sometimes you get bailed out.
Yep. Sometimes you get bailed out is correct.
You take the money and run. So.
OVX or oil volatility staying basically unchanged, 101 and change. If you go to /CL, if you remember, IV rank was around 77 and change at 78. So volatility staying steady with oil up $1.50 right now. I think volatility would have expanded if we opened, 92, 93 and went up to 94, 5, 6, 7. Since we did it in the pre-market, I don't think volatility got a chance on the options to really expand here up $1.60 or so. Not hampering the market as of yet.
That's ServiceNow. We sold those puts at 330.
Oh, you got filled on those. I saw you were working like
I think that's what you got to do in this sort of environment is stuff that's that's up a couple dollars, volatility is contracting, put an order in at your price and just let it sit, and it's because the markets aren't the greatest in there. You got filled at 230. Good job out of you.
230.
Dentist. I have one at the end of the day today.
Go to the dentist?
230.
Oh, 230. Got it.
I do have a dentist today, though.
Oh, all right. Well, got to take care of your mouth. It's the gateway to your stomach, which is the gateway to your whole existence. So it's true. It's true. It's true. It's true. Got to take care of your teeth, man.
Yeah.
Got to take care of your teeth.
It's the first thing people see, too,
There's a lot of studies that say, you don't have to be that bright, and you can have a good smile, and you too could have a podcast.
You're the cavity one.
Even more than that.
My mom wasn't the cavity one. You both have good teeth.
That's true.
Hence why I have good teeth.
This is true.
But you're a cavity guy.
My mom didn't get a first cavity until she was in her 60s, so I blame it on my father. So you can blame it on your father.
Okay, so you're the cavity guy.
I'm the cavity guy.
I got that.
Yeah. Oh well, it happens.
That's okay.
Can't be perfect at everything.
All right.
Let's take a quick 90-second break. We'll find out if our next guy is a cavity guy. I'm talking about Chris Vecchio, and let me explain. He's got some explaining to do what's going on with this market and some of these. What do they call them? Fertilizer stocks. We'll be back in 90 seconds. Tasty Live. Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, Tasty Live, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
We wanted to call in because recently, some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted, and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you.
This was not a paid, you're not getting paid for this advertisement.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Niggy, we are back, son, and you know what that means. Time for a little bit more Tasty Live. But let me explain, Mr. Chris Vecchio. How are you feeling today, Chris? I'm going to see how we're going to go with this.
I'm good, Tony. How are you?
I'm doing well. Thank you for asking. I appreciate it. All right, my man Chris, we got a market that's seems like it caught a little bit of a bid here over the last 2 days, only reversing the prior 2 days move. Here we are back at 6,800. Explain to me.
It's a nice bit of relief here to start the week. I don't know how much anyone's buying into it. I'm certainly not a believer until we get to the other side of the Fed meeting, because Fed Chair Powell is, as always, Nick, the high priest of investing. And for a lot of traders out there, when he comes out and says, sorry, we're not going to be able to give you cuts anytime soon, it's going to be the green light that some folks have needed to actually make a move in this market. Tony, there are some people out there, and this is not just for trading, who operate where they look outside and they see it's raining and they still check their weather app. And there's a large segment of investors in this market who are very much like that, who until a Powell, a Bessent, someone who has their hands on the levers of the economy tells them it's time to panic, they just ride it out. So I'm not saying Powell's going to say it's time to panic this week, but when you look at a Fed that's going to give us a new summary of economic projections, where they're probably not going to show anything good on the labor side because the jobs market has been getting worse, and we did just lose 92,000 jobs last month, and the 3-month run rate is turned negative. We also have inflation bumping up thanks to oil, which looks like it's going to be sticking around at these
We've had
higher
inflation
levels.
for the last 5 years, haven't we?
It's transitory.
We have.
That's transitory. Sorry. That's sorry. So maybe
It'll go away
they'll
sometime.
say it's transitory.
Yeah.
And then it'll be
It'll go
okay again. We
away.
won't talk about it anymore.
Sometime, just don't close your eyes
Don't
like
you
this.
wait.
I don't see
you
any
worry.
inflation.
It's coming back. Don't worry.
Yeah.
So the Fed is going to be in a position when they say, we thought we would be able to cut rates maybe by mid-year, and now we're probably going to have to push that back. And I think September is probably where they're going to land initially. Because again, you guys mentioned the transitory issue. The Fed's literature still holds up and suggests that you look for short-term energy supply shocks, because the concern that they are more worried about is what happens on the other end, and that's a decline in growth. The energy pushes consumers, businesses out of the market, input costs go up, right? And so they care more about that on the other side of everything. And that's why they say it's transitory. The decline in growth ultimately takes down inflation once the supply shock itself subsides. So I don't know what the Fed is going to tell us this week that invokes a great deal of confidence to make us believe that their help is around the corner. But you know what? I'm happy to be wrong. It's better to be an optimist and wrong than a pessimist and right, as it goes. And so if we get to the other side of this week and it's on the other side of the Fed and the market's still through 6,800, 6,850 in ES, got to stop worrying and learn to love the bomb in a very Doctor Strange Lovian kind of fashion.
Okay.
My question for you, doesn't this whole situation kind of give you a little bit of or at least the Fed, a little bit of an out to be sort of dovish into this? There's lots, the AI situation has gotten, it's growing, you Meta, you have all these layoffs. Doesn't it give a little bit of an out to be like, we're not totally sure? I mean, the market, the FedWatch tool and the bond market itself is telling you that there's no rate cuts coming this year. Don't they have a little bit of a wiggle room now to kind of be a little bit dovish?
You mentioned the layoffs in tech. Tony, I think it's something that only certain people observe, others don't. But I'm going to say that I think, Tony, you're one of these kind of people who would understand this. Tech companies
I hate it when people say you're that kind of guy. I remember
guys.
Right. Go ahead.
I think you're a little more cynical than the average person, kind of like I am, in the sense that when I see these tech companies doing layoffs, I go, oh, that's why you hired all those people during COVID, so that during the next downturn, you'd be able to harvest those layoffs to keep your margins intact.
Would you say that he is a little bit cantankerous?
No.
Would you use that?
Prior administration was cantankerous.
No.
I'm not.
I'd go so far as ornery, maybe.
Ooh, a new one. I like it.
That just happens when my body aches. My body doesn't ache right now. Chris, is your body aching?
We can fix that.
Yeah.
I don't know.
We have pills for that now.
I never got so cynical. I was when the hirings that you talked about during COVID. We talked about it on the show about how, and the amount of money that they were paying for people, that it just seemed like everybody was trying to climb over each other to get the first person with a pulse to say, I couldn't figure it out. And now that you bring up this point this way, I am cynical. I wasn't until just about a moment ago, but you definitely bring up a good point. So I'm going to have to give you ding, 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 some props for that analogy. So, okay, yeah, I can go with this.
And the layoffs, when you look at them, and this is the other big point here, the layoffs get a lot of attention because, oh my gosh, Amazon's laying off 10,000 people.
Yeah.
Look at the size of their global workforce, 1 and 2. How many layoffs does the economy churn through every single month? And just on average, it's north of 1 million. Some months it's close to 2 million. And that doesn't mean we're losing jobs. It's just there's a healthy creative destruction that has to happen in the economy for it to grow. People will have to leave jobs to get raises. People will have to leave jobs to start new businesses. to grow the economy. So you want to see some churn every month. It's just when you get these mid-cap companies that are based in Toledo laying off 500 people, it doesn't get the Wall Street Journal's front page like an Amazon laying off 10,000, even though the economic impact in Toledo may be a lot more severe than Amazon's 10,000 distributed workers globally. I think that the headlines we're seeing around layoffs right now, it's like with AI. I don't want to give Sam Altman too much credit, but when he said a lot of companies are using AI as a convenient excuse to lay people off, yeah, he's probably right. There's been bloat in some sectors where there was overhiring and that legacy hiring existed, which can I also just one more issue on this?
Sure.
Remember, not that I'm a big fan of Elon Musk by any stretch of the imagination, although I am long Tesla.
He used to be probably 3 years ago, but then he switched and made you guys angry, right?
No, it's just I've always thought he's been a little bit of I've been calling him P.T. Barnum for years prior to his recent turn politically, because I look at what he's been doing with FS.
I like to go back to the tape on that, but I'll give you the benefit of the doubt.
Yeah, no, go back to the old Jones and Friends days, because he was 2022 in 2021, because he was a guy like FSD and always moving the goalposts. Full drivings next year.
I'll give you that. I'll give you that.
Yeah,
I'll give you that.
Okay, so like that was my issue with him. So never mind. With respect to what's the hiring there with Twitter, everyone freaked out when Jack Dorsey got rid of all these people from Block a few weeks ago.
Yeah.
Isn't Jack Dorsey the guy who just was able to hire a workforce at Twitter that Elon Musk cut down by 80%? And yes, there were some bumps along the way, but the service remained operational. Jack Dorsey's a guy who overhires. Some of these tech companies, they just overhire. And so now they're harvesting their bloated workforces for layoffs. I know I'm feeling cynical this morning, Tony, but I just don't think that people should read into these little micro headlines when the macro picture on the layoffs is just very stable and showcasing that it's not really a hiring or a firing environment. It's just frozen and in a standstill.
Yeah, I think the AI, the scapegoat of AI is certainly at play here. I mean, I think for the most part, the Pareto principle applies to a lot of things, the 80-20 rule. And I think that at these big companies, they probably know that 20 or 30% of the workforce is doing most of the stuff, right? Like there's probably a big bloat across the board. And I mean, it's not good, but I don't think you can ignore it.
No, and you can't get rid of all those people. You need glue employees, right?
Yeah.
The people who post the videos of like, this is my day in the life as a worker at Amazon. I get up and I have breakfast and then I go get my
free
red light therapy.
advertising.
And yeah, and that draws people in. It's like, oh, I want to go work at that company. So,
It's true.
You are cynical. I'll give you that. I thought you were going to say. What?
My Achilles tendinopathy is acting up today.
There you go. You hit us with that before the show started. I'm glad you mentioned it now.
It's funny because the chat is saying it's two bats and an old guy on the show today. So just to give you a little bit of that, Chris, that's you're kind of you're moving. Even though we're the gray-haired ones.
It's St. Patrick's Day. The little bit of Irish in me is allowed to come out.
Let me guess how you got this. What is it called? What is acting up? Your tendonitis?
My Achilles tendon in my right foot.
And let me guess how this happened. Probably in a boating accident or in a riding accident. I mean by horse riding accident, by some dressage accident.
Very, very close, actually. Yeah. First one. Rowing in national qualifiers when I was 18. And Tony, you know what makes it even better? On the way home from the hospital 3 days later, a deer jumped into my side of the car and I fractured my L5, L6 in my
You seriously, I've said this before. I don't know what it is, but you've had the tree fall in the house. You had the like water burst in the basement. Like you kind of got
you've lived a full life.
For a lovable,
You're
nice
an old
guy.
soul.
You got like that sort of stuff doesn't happen to like the
60s, 70s, and 80s.
Yeah, but that doesn't
Tony,
happen to the
movie
low lifes like us. Like the nice guys like you got like this, like, I don't know. There's something. That's tough.
Maybe it's karma for past deeds. But Tony, you've seen the movie Heat, right?
Seen the movie? Which one?
De Niro, isn't it?
Yeah.
De Niro?
Yeah. It's like you wanted a normal life. Like, what's a normal life? Baseball games and barbecues? Like, no.
Nah. You don't need that.
Adventure.
Oh, yeah.
You've got one. I thought you were going to go with the, I don't know. We got down 150 handles lower than this, back to where we were in November or December on the E-mini S&Ps, and we're just dead cat bouncing off of that. I thought that was the story you were gonna go with.
But that's kind of how it feels, why I don't have much faith in this right now. There are little signs today that maybe momentum's turning. We haven't seen any close above a weekly moving average in any of the major indices, since the start of March, effectively. And today we're finally pushing through them. But the market's been range bound here for several months. And even if we get to the other side of the Iran war, just up front, we did have the AI, SaaS apocalypse, and private credit issues, which are still percolating in the background. Mm-hmm. So if there's a relief rally, I personally don't see 7,100 breaking anytime soon. We probably need a little bit more congestion, digestion, benchmarking of the risks, which, Tony, 2022, it took a little bit longer for the market to do that. But when Israel and Hamas started going after each other in 2023, you had 6 to 8 weeks of jostling. And then we all kind of said, okay, this is the new reality. We have to move on with our lives. And then the market kind of stabilized and normalized and then started going back to its preceding business. So we can't discount that from happening here.
The
market,
but hasn't that been happening the whole year? Like, haven't we kind of been doing that jostling all year so far?
Yes. And I think right now we're trying to figure out the probabilities of oil running away, because if oil's at $100 a barrel, you know what, for the US economy right now, that's digestible. Mm-hmm. I know everyone goes back to the pre-global financial crisis oil moves. So if we want to think about those levels as being the tap out points, we have to take into consideration inflation since then. So the $120 a barrel that was like, oh gosh, the world's ending in 2006, 7 going into 2008.
It's like 70 a barrel back then. That's nothing. That's nothing.
Yeah, that'd be $190 a barrel now.
Yeah.
No, it's
but you can also make the argument
now
that oil's not as important. I got that from people.
But he's saying
I know, he's making a good argument for oil at 100 is okay for the economy. I know, I get that.
It's twofold. We're net importers. We're net exporters now, right? Mm-hmm. We're not importing all the oil we were back then. Wages have doubled effectively since the last major oil spike in the 2000s. And in the movement of inflation, the erosion of the dollar means that for oil to get back to those same pain points, it has to go much higher from here. So the market right now, in my view, is digesting, are we clipping off the tail? We could live with $80, $90, $100, $110 a barrel. It's not going to be comfortable. The gas prices are going to go up, but the broader economy is not going to sink into recession. And if it's not going to sink into recession, then
that's not what everybody was saying 3 days ago.
If we're clipping off the tail, clipping off the tail.
But this is why I say you got to take a look at things as listen. I always said I'm a capitalist pig. Like, I'm always looking for an advantage. I'm always looking for a sign. I'm always looking for a buck. And this is why
you texted me that last night.
What's that?
You texted me that last night. Middle of the night. I'm a little capitalist pig.
Yeah.
Oink, oink.
Yes. It's true. We're looking for an advantage.
Good night, Tony.
Here. Yeah. You have to look at things like what's in front of you and take advantage of it. You don't have to marry it and get it. That's why I loathe these longer term views on what the unknown is going to be. Let's just look at what we have right here and what's happening. You mentioned a moment ago, 7,100. Over the next year, we've got an 800 handle expected move on the E-mini S&Ps. 7,100 is in the sight, and 6,000 is in the sight. 7,500 is in the sight. So if you go through a year, and you can't look at things as I don't look at things. Anybody can look at things the way they want to, comparing them to yesterday, because everything was completely different from yesteryear. Interest rates were completely different. Sentiment was completely different if you want to go with that. Seasonality was completely different if you want to go with that. There are so many different things you can look at.
No, I think it's a great point, but I bring up those other issues because the market pricing for volatility is still fairly rich enough where I'm out at 45 days now on the platform, the May 1st expiry. I'm looking at the 7,100, 7,200 short call spread. You're still getting paid out better than a 60% probability of profit, risking 4 to make 1. Risking 4 to make 1 isn't the sexiest risk to reward, right? There's not a lot of convexity there. But if you're looking at 69% plus a 4 to 1, and the market going to 7,200, realistically, do we think that's going to be happening in the next 45 days? Is it possible? Sure. But given what we have in front of us, I think we can be creative here. So I'm staying directionally neutral for the most part. I'm staying inside and down on stocks. So the last 2 days hasn't been great for me. Perhaps I'm kvetching and the tendinopathy is aching up because of my positions in the market. But
that's fair.
The volatility is still rich enough where I could go out right now, Tony. 7,500, 7,400 would be the short call spread leg of a short iron condor at the 1 standard deviation move right now at 45 days to expiration. So let's take advantage of this while we have it. It may mean that we're playing for a lot of theta decay ultimately. So it's a lot of hand sitting. You're not going to see the positions jump significantly because we just want this thing to grind sideways and time to burn. But take advantage of the pricing while we have it. And I'm remiss. I wish I followed my own words here because last week I took off a bunch of short iron condors in oil. And had I just held them for another 12 hours and even through today, we'd be doing pretty fine.
I'll give you just some math. We were 50 handles higher on the E-mini S&Ps when volatility
was 30.
Yeah. So, I mean, volatility is still bid.
Yeah.
It's staying up. That is one of the wrinkles that really started to grind my gears last week. That you're seeing the backwardation in a lot of these products disappear, and it's not because the front months are coming in dramatically. It's because the rest of the curve is kind of rising, and you see it in vol futures, and you see it in oil
and what
futures.
Is that? So what does that tell you? And I'll tell you what it says to me, but what does it say to you?
Well, at least for the oil futures side, it's telling us that there's going to be a prolonged supply disruption.
Right.
And then for volatility, right?
But it's not doomsday. It's not doomsday supply disruption. That's the key here.
And that's the benchmarking. And that's the benchmarking of the risk that you ultimately go through. You say, okay, is this going to be, the shipping lanes are open, we're going to be firing some rockets, but we're not going to be looking at $150 a barrel. We're going to be looking at maybe 110 on some days.
Yeah.
And if that's the case, the risk has been benchmarked, we move on. And then, I don't know, this is a hell of a brick in the wall of worry. It's a wall unto itself, but it would be a hell of a brick in the wall of worry if the worst of this doesn't come to materialize and the supply chain issues don't kink up.
Yeah.
Agree. You got another topic for us, or are you all done?
I'm so excited for this baseball game tonight. This WBC game coming up. The USA. How do you feel about Team Italy losing last night?
I didn't think you were going to mention it.
Yeah. What time is that game on?
Real
tonight?
Italians. Those guys are all Italian Americans from the tri-state area, Tony.
I consider myself a Chicagoan now. I'm more Irish than Italian. Maybe even by 23andMe. Who knows?
Good for you then.
I'm just kidding you. I'm just kidding you.
I think the game's tonight at 8:00. Yeah.
Okay.
You are right. It is.
All right. Beautiful.
All right, my friend. Good job out of you. Even the S&P's up 43. NASDAQ up 190 and change. Russell's actually the leader of the group by a skosh, up 25, a little over 1%. And the Dow is up 335. I think the interesting thing, volatility in by 53 cents, 2.5% move on this move higher by the E-mini S&Ps and the rest of the market. What do you think about volatility here, son?
I think it continues to come in into tomorrow.
I don't know.
You don't like
I don't know.
We're going to sit here at 6,800 all day today.
That would be good for the market.
Yeah.
I think
so too.
All right. Good job out of you, Chris. We're going to take a quick 90-second break. Maybe we'll put a zero trade on this next little break, or when we come back here. We're going to take a quick 90-second break and come back. We got a market measure at the top of the hour. We'll be back in 90 seconds. Thank you, Chris, so much for coming in. Oil still staying bid up here, $2. So sell your call spreads.
Place your bets.
We'll be back in 90 seconds. It's Tasty Live.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
We are back, son, and you know what that means. Time for a little bit more Tasty Live. That's right, with a market measure sponsored by the CBOE. But before we do, let's take a quick look at the market here, because you made a bunch of trades. I mean, you made some SPX trades just a moment ago. Why don't we go over that? SoFi, some HIMS, Rivian, all while talking to Chris, your multi-faceted individual that you are.
Trying to butter me up here.
Trying to do something.
Yeah, taking off a number of positions. I closed out of the PayPal puts that were part of a strangle. We've kind of legged out of that position. Close out of Rivian puts that we sold. We sold them at like $1 and change. They're at 72 cents. HIMS, we did that 1x2 short put to 1 put to 2 calls. So I kind of legged out of that as well. I closed out the calls first and then just put an order in to close the put. Stock had an uptick, got filled. The SPX positions were stupids, aka Super Bowls, where we sold a wide put spread to finance buying an upside call spread. Those are they net out to be about like $200, $300 loser on each of those, but they have 4 days to go till expiration, and those were right at the money.
Yep.
A couple sessions ago.
You got bailed out by the move. You had a multi-dollar loss.
I kind of want to put something on in similar fashion a little bit further out in time.
Okay.
I don't know if right now, we do it now?
I think you could wait a little bit. You've already had a 40 handle move on the S&Ps. That's pretty much near the...
We've ridden 150 point up.
Yes.
120.
No, it's about 150.
Yeah.
You can round
somewhere.
Up. Yep.
Around that. I feel like we'll wait a little bit, see what happens here. And then I close out some SoFi calls. Again, these are just positions that we sold that have come in 25 to 50% in a pretty short period of time. DraftKings, I closed off the 26 strike call that I had. It's a cover call. I'm just long the stock now. I'm just trying to take off risk when possible. And so that is all those adjustments.
Yeah, you're taking off all those adjustments and, to leave cash.
My delta from when we opened is about half of what it was.
And it's left cash in your account.
Yeah.
So
I am probably 30%.
Well, you can look at...
I have a big oil position. If you take that out of the equation, which you shouldn't, you should look at everything. Because everything is...
It's using a lot of buying power is what
it's using a lot of buying power. But it's a comfortable risk. I can hold that position. No big deal. But
it's comfortable risk till it goes wrong.
Yes.
Sure.
That's true. That is very true.
But your size is appropriate. Your contract size is appropriate.
Is in line. Yep.
All right. Awesome. Let's get to this market measure sponsored by our friends at the CBO.
Part
Rolling,
two.
Part two. Let's do it.
How does rolling impact tail risk?
Talked a little bit about this morning on the option jive, right?
Yes. One of the major challenges of trading naked positions is the risk of large losses due to the unexpected moves in the underlying, typically to the downside. Typically see bigger moves to the downside than the upside. One way to measure the tail risk is to examine the buying power expansion rate over the course of a trading cycle. So we're going to cherry pick some little stocks and look at the change in buying power of that naked position over different moves in the underlying. I think this will be an interesting one for you to keep in mind when you're looking at your positions.
Beautiful.
So Nvidia is the example that we're going to use. It's an example from last year. It demonstrates how stock movements and changes in implied volatility affect the daily the daily buying power fluctuations. So buying power, very simply, I guess it's not simple because there's a lot of variables here, but to give you what buying power is a function of stock price is a big one. So higher price stocks are going to use a lot more buying power than lower price stocks. It's going to be a function of volatility. So higher volatility is typically actually going to decrease your buying power because your risk is further out on the distribution generally. So lower vol is actually going to mean higher buying power, generally speaking. It's going to be affected by time. It's going to be affected by status of the stock. Like if it's a hard to borrow stock or liquidity isn't great, that is going to be affected in the buying power. It's also going to vary from product to product and from broker to broker. So there's internal risk parameters. Brokers can increase margin requirements, decrease margin requirements. Just keep in mind that margin is not like a right? So margin is risk that the broker takes on your behalf. It says, okay, if you're selling puts in Nvidia is probably not going to zero. So we're not going to margin you as if it's going to zero because that's what you should be margined at. We're going to margin you at 50% of that or 25% of that.
That's what you should be margined. That's what your risk is if it
That's
goes
what your
to
risk
zero.
is.
So the brokerage firm is taking $1 in commission, and for that they're saying, how much money am I going to hold for that $1 that you gave me, that greenback?
Exactly. And so those are all things that can change in the calculation of buying power, and that you should keep in mind when you're putting on positions. Why we always talk about not deploying all of our capital all at once. You're not always 100% in using all your capital. Everybody gets caught up in this idea that the capital sitting on the sidelines is like not doing anything.
Yep.
When you are trading options and you're at, let's just say, an aggregate of 4x leverage, and you're using 25% of your capital, you are effectively leveraged 100% of your capital. Your risk is 100%, as if you were cash secured. If you're 4x and you're using 50% of your capital, you're 2 times what your cash could buy in delta if you're just buying shares.
Yep.
So there's no money on the sidelines not working for you. So long-winded. Nvidia, 1 standard deviation strangle. We're looking at this from last February. Huge price action here. So you had stock price start at 147, volatility at 41. Your buying power is $2,000. You have the stock move $30-ish, 25 to the downside, 26. 25, 30, 25.
25. Yeah.
I did that quick. Stock moves $25 to the downside, 10, 15% downside move. Volatility explodes. Your buying power goes from 2,000 to 4,000. So it's about a 100% increase, 120%, 119% increase in the buying power requirement. You then get a move from 118 to 129. Volatility contracts. That buying power decreases a little bit. When you get a move from 129 to 117, your buying power increases a little bit. You can see that these are big moves, and this is why we do this sort of example, because these are pretty exaggerated moves over a 1 week time frame. You don't usually see 15 to 20% moves in both directions. This is abnormal. So when you look at this, think of this as kind of your outer bands of risk, a reasonable risk, 2 times the buying power expansion. That's not outside of the realm of possibilities. This is probably like your quantifiable tail risk.
Correct.
In the past 2 decades, the highest rate of buying power expansion was seen in 2008 and then 2020. These are crashes, although some don't consider 2020 a crash. We will consider them crashes here because your buying power does expand.
Because you're using math.
Yes, resulting in substantial losses for many traders. And a lot of the losses that you saw were a function of the buying power. I mean, we have seen many times, especially with futures, where your leverage is a multiple of what it is with stock options, where people don't consider that, the $1,000 in buying power can go to $10,000. And so that's where you get into problems, because it's not necessarily that the position is too big a loss or that you're blown out on the trade. It's that you can't hold the trade because the risk has changed.
Right.
And so it's really the biggest key to position sizing is being able to hold that position, being able to weather the storm. When you look at the market now, you say, "Oh well, COVID was just a blip in the system. It was nothing." Market's 100% higher. I mean, like we were at 4,000 during that 4,500, right? Something around there.
Yeah.
The market's doubled since then. If you could just hold the position, you're a mega winner.
Sure.
But that's the key here. So you're buying.
It's the same way like when you sell a naked put with a stock at 100 and you sell the 85 put and you say, "Oh, I would love to buy this stock down at 85 or my cost basis being 83 if you sold a put for $2 because the stock's at 100.
Yeah.
If the stock's at 80 or 75, you're not going to have the same outlook on it. It's the same way with margin, how margin changes. Markets move, volatility changes. That's why you have to keep the amount of buying power you use for each one of these positions, under some parameter. We look at 1 to 3%, 1 to 5% as a wider range.
Yeah.
Per trade.
A great point. When it's time to buy, you won't want to.
That's correct. Which is when you probably should, but this is an existing position we're talking about.
Yes. So to compare the effects of rolling versus doing nothing on the buying power expansion, we tested 45-day SPY 16 delta puts. So we are doing a little study on those just to show you the expansion in buying power. In the absence of position management, the buying power increases rapidly. So especially when the delta goes above 80, you can see, and then when you have an option that is out of the money, it's all extrinsic value. When the option goes in the money, your buying power increases because the intrinsic value, it has real value, it has tangible value to it, which is going to increase the capital that you're going to have to put up to hold that position. But you can see as your option goes in the money, your buying power is going to expand pretty significantly. You get to 2, 3x the initial starting margin requirement. So if it starts at $5,000 and it goes to 100 delta or near 100 delta, it's probably going to be close to 15.
Yeah.
Like you have to be considering this across all of your positions. If you're using 20 or 30% or 40% of your capital, that's probably a good place to be. Like that's, a reasonable spot to be. If you're using 70 or 80%, you're not really leaving a lot of wiggle room for you to take on some heat on these positions, which at some point you should expect to experience.
Expect the unexpected.
One of the things that you can do, though, is managing positions and rolling positions. So rolling when the short strike is tested can significantly reduce the change of a large buying power expansion. So here we're looking at rolling the position out in time, and you're obviously not getting to 100 deltas because you're rolling this position. So keeping your deltas in line and maybe rolling early, taking advantage of the higher implied volatility, it's going to greatly dull the volatility expansion, which is the second part of what we were talking about on the first segment today, where we were talking about P&L volatility. So P&L volatility is one aspect of rolling, a positive to rolling. The second aspect is reducing the amount of capital that you're using to hold the position. There's gonna be a gimme and a gotcha. Like you're gonna give up the quick win, you're gonna give up the quick loss too, is probably another side of the coin. But there are things that you're giving up by rolling. It's not everything is good because you roll, but rolling gives you these two things that are the hardest to control: the P&L volatility and the buying power expansion, because you don't know when buying power is when you're gonna get that sort of big move. Rolling is going to help you mitigate from that and not have to worry about that all the time.
You may have never even stayed in the trade if you didn't roll it. Your loss may have gotten too much.
Too big, and you would have been squeezed out, for sure.
That's right. Never give you a chance to take advantage of the volatility contracting.
Yep.
Next one, please.
Even better results can be achieved by rolling when the delta is consistently controlled as a smaller target, such as 30 deltas in this case. So if you were to roll your position, when your deltas get to 30, you're going to significantly reduce your overall buying power expansion. The caveat here is obviously you're rolling out in time, and so these positions are not going to move as much for you or against you. That's always the case. And so the overall takeaway here is just that doing something, rolling the positions, is going to reduce your overall buying power expansion, which is going to help you stay in positions a little longer.
And that's the key, being able to stay in a position, right?
Yes.
Good job out of you. Good job out of the team.
Couple takeaways here. Tail risk can be measured by buying power expansion rate. When you are seeing tail type events, your buying power is going to expand by a multiple. And so you got to be ready for that. You got to keep position sizes in check. Rolling can help to minimize the tail risk. So any sort of rolling you do, whether it's when the option gets to 30 delta, when it gets to 21 days, when it's at the money, anything you do that incorporates rolling is going to minimize the tail risk that you have, because you're going to be collecting premium, you're going to be further out in time, you're going to be reducing the buying power expansion, which allows you to hold the position. All those are good things. The smaller the delta we aim to control in our positions, the lower the tail risk. So here, if you're rolling a 16 delta option when it gets to 30 deltas, it's much more conservative than holding to 50 deltas. That's just the fact of the matter here. But I think there's a happy medium. I think if you keep position sizes in check enough, you can hold risk a little bit more if you want to.
Yeah, and it could also be like if you're looking at an individual stock that usually mirrors the market and some event comes out, whether it be news related or industry related to that one specific stock, you could make an overall like opinion on what you think the market is going to do and keep that delta. Like there's nothing wrong with having delta at an advantageous price, which means lower than where it is when you were bullish, higher than where it is when you were bearish, if your whole view on everything hasn't changed. Now, if you're doing it in like an SPY or a Q, and then the whole market rallies, the whole market sells off, you might look at it a little bit differently and say, you know what, I'm a little bit, more wrong on my directional bias here because the whole market is telling me I'm wrong, not an individual stock. And maybe you'll be more inclined to roll up that untested side or roll down that untested side. I really think it's a lot easier to roll down calls into this move, as we've seen so much here, because volatility expands so much, it makes that roll down. If you get a reversal, an advantageous roll down, where when you roll up puts and you've got volatility contracting while you're doing that, you're almost putting yourself
the worst feeling.
In a precarious situation. So I'm more inclined to roll down calls, which we haven't had until really just recently in the market, when we've had this two-sided action, a little bit more expansion and volatility than we had in the past. When everything relies on volatility is what I'm trying to say here. Yeah. And a lot of times you might have to stick with a little bit of that delta when you're thinking about rolling up puts into a move, or closing and recentering would be the other way of looking at it.
Well said.
Thank you, my friend. You just closed is that an EEM trade?
Yeah, we did that strangle, I think, last week on Friday, maybe.
Let's take a look.
This is not a stock we trade all that much. We did it on the 11th, middle of last week at 202, and it's coming 50 cents, 25%.
Yeah, on the 11th, volatility was closer to 50%. You didn't really, you don't catch the high here of 60%. You don't catch the low of 40 some odd percent, but it was around 50%. It had been expanding going into that. Now you're back down into the 40s. I'm just looking at IV rank there, and the trade comes in. Usually that type of trade would take 3 weeks to come in.
Yes.
Usually around 3 weeks is when you get around that 25 to 50% profit on a strangle, if it works out for you.
Yep.
Here today was able to work out, in 2 weeks or so. So good job out of you.
Good job out of you.
A good job out of the market too, kind of hanging in there. Volatility 2250 hanging in there too, although it is at the low end, 15 cents off its lows. Even the S&P is up 33, about 20 handles off of their highs. We'll take a quick 90-second break and come back. We got more Tasty Live. Would you say it's kind of a breather day after the last?
Yeah.
I would definitely say it's kind of a breather day. Top to bottom, you still have almost 100 handles top to bottom on the E-mini S&Ps. I'm talking the lows last night of 67.50.
This isn't going to last forever. I mean, this is volatility for you. 100 points, you don't get this.
You don't get this all the time. Now, got most of it last night to the downside. You got most of it to the upside here. So if you had any delta that you wanted
but then yesterday you got all of it during the day.
Yes, you got all of it during the day. You're 100%
basically
correct.
Unchanged going into Monday's open. Nowhere.
Yep, you're exactly right.
But this is volatility. This
is volatility.
This is what you want.
That's right. They are who we thought they were.
You'll miss it so much when it's gone.
You certainly will. You certainly will. We'll take a quick 90-second break and come back. We got more Tasty Live after this. We've got our boys from the trade desk coming in. We'll be back in 90 seconds with Tasty Live.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade. Make your move. Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live. That's right, with this
If you missed the live, here's our cherry on top weekly recap.
Ah, look what the cat dragged in.
Top of the morning to you all. How are we doing?
Rich McDonald from London, he was so excited to tell me that he was on a game show in LA.
You were on a game show in LA?
Yes. He was walking down the street and some Hollywood producer spotted him and goes, "Oh, we gotta have this guy." And what was the game show again? I forgot.
It was called Eliminate.
Oh, I know Eliminate! You were on Eliminate! Oh my god!
You've seen it?
Have you met me? Yes, I've seen Eliminate.
Did you get eliminated on Eliminate?
Who would not pick the Scotsman? Like who? Why? Oh, that's
don't know.
That woman's trash. I'm so sorry, Rich.
The camera's finished, and she turned round to the guy she eventually picked, and she said, "So where are we going on our date then?" He said, "Oh, I'm very sorry, I've got a girlfriend. I'm going out with one of the Lakers cheerleaders. I just wanted to get on TV."
In a tribute to you today, just so you know, we have one of our viewers sent Tony a bunch of Scottish things. The first thing.
I mean, I wanted just a man in a kilt, but apparently I'm just gonna get some pudding.
I don't even know what spotted dick is, really. It says it's delicious. I mean, this is the first time for me trying this. Vanetta, you?
Yeah, I'm on a dick-free diet.
Have you managed to warm up your spotted dick?
It kind of tastes like, you know, like the banana pudding or the vanilla pudding that you get, but that's like not refrigerated.
It's actually pretty good.
Yeah, it's not bad. And I imagine if you go actually to the UK, I'm sure there's places that can do it more authentically.
Is all the custard in cans?
Yeah, pretty much. It's one of those ones. If we end up in a war, then you just fill your bunker with custards and beans.
Control knocked me off my pivot today because they came up and they said that you were having, I actually had to go Google this, that you were having a conversation about traditional spotted dick desserts, whatever.
No, it's not a dessert. It's not a dessert.
It's a muffin.
Are you adding this to your repertoire?
It's a muffin. And we poured the custard on top.
You pour custard on top of a muffin. That's dessert.
Okay, American, you uncultured American. Okay, Dylan, explain to them.
I think that the good Dr. Sheridan accurately describes any item that has custard upon it as being in the dessert category, whether you're a sophisticated Milanese gentleman such as myself.
I can't be friends with Dylan Radigan if I eat SpaghettiOs out of a can because the Italians...
I mean, but you can't because remember, I'm from Saranac Lake. My relationship as a young man with the canned beans was to go out to the ice fishing shack. Because the canned bean is a very staple food for the ice fishermen.
So you grew up in the ice fishing community?
It's a card-carrying member.
Please tell me what the pleasurable portion of ice fishing is.
I haven't done it since, probably I was 16 years old, but our primary pleasure was smoking pot because you could get into the ice fishing shack.
There we go. Do you actually care if you catch a fish?
No.
Okay, perfect.
With your buddies, you're like, Sosnoff, grab the drill, and then it's like man work and you got to drill the hole.
Tony is going to counter that and say it's all about catching the fish. For sure.
No. I don't think he's an ice fisher guy. I don't see him sitting around the hole in the ice fishing just hoping a fish pops in.
There's not enough marijuana in the world or Coors Light to get Tony to go ice fishing.
Get the full scoop by checking out the archives at tastylive.com.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
All right, yeah, I'll talk to you.
There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again.
Oh, good.
So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive? Uh-oh, watch yourself. We don't want to get hit by a car. My brother did that once. He can't talk now.
Oh my God, I'm not serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank
Does anybody
you.
ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing is moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
I want to play a game. It's a relationship game. So I'm going to ask you each a question to your
Who
partner.
loves the hardest?
Yes, yes, yes. So are you ready?
TikTok.
Who's more stubborn? Who's more public? And who do you think takes longer to get ready in the morning?
Oh. He's got to do his hair.
Who's a better driver?
I mean, for sure.
Yeah.
Like, I live in Italy. Yeah. Like, we drive like.
I drove a truck in New York City.
I drove a tractor on a farm. I can fly an airplane.
Who loves the Fed the most? Who is more spoiled?
It's not even close. Like, you got buildings full of people. What do you want, Mr. Zosnoff? I have nothing.
I'm running Snow Leopard with this.
I'm a Mac. I'm a Mac. I'm a Mac. Multitask, MacBook handler, brother. iPhone in one hand, iPad in the other. Pop open top, Apple logo shining on the back. That's why all these player haters know that I'm the Mac. Easier to see a nun with VD than to see me ever typing on a PC. So if you got one, you can play a sad tune and play it back later in your room on your Zune. Windows made to break, and I'm here to crack it. And if I'm a Mac, that means that I'm immaculate. Style so clean, like it's disinfected. Clean surfaces where white light is reflected. Plastic case, Apple Store, keep my phone protected. Check my toolbar to see if networks are detected. Use my side swipe, applications hidden in it. This is Mac world, bitch, you're just living in it. I'm a Mac. 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 Roll into the coffee shop, know I'm on a power trip. Strapped with my laptop and my own power strip. Eye outlet, about to make your cable drop. Apple logo shining off the marble on the tabletop. So if you seen me, then you seen a star. Any place I sit down, call that the Genius Bar. Looks like I'm working hard, but to really know the truth, just taking pictures of my fine self in photo booth. Interface simple, why I need a Kindle. Working on that pad keeps my fingers mad nimble. So if you think I come up short, you must be wrong. More than one reason that these ladies call me Justin Long. I'm a Mac. I'm a Mac. I'm a Mac. Yeah, Justin Long, son. You catch that? Known by the ladies as the toolbar. 10-hour battery life. Force. Quiz.
If you missed the live show, here's our cherry on top weekly recap.
Ah, look what the cat dragged in.
Top of the morning to you all. How are we doing?
Rich McDonald from London, he was so excited to tell me that he was on a game show in LA.
You were on a game show in LA?
Yes. He was walking down the street and some Hollywood producer spotted him and goes, "Oh, we gotta have this guy." And what was the game show again? I forgot.
It was called Eliminate.
Oh, I know Eliminate! I know Eliminate! You were on Eliminate! Oh my god!
You've seen it?
Have you met me? Yes, I've seen Eliminate.
Did you get eliminated on Eliminate?
Who would not pick the Scotsman? Like who? Why? Oh, that's
don't know.
That woman's trash. I'm so sorry, Rich.
The camera's finished, and she turned round to the guy she eventually picked, and she said, "So where are we going on our date then?" He said, "Oh, I'm very sorry, I've got a girlfriend. I'm going out with one of the Lakers cheerleaders. I just wanted to get on TV."
In a tribute to you today, just so you know, we have one of our viewers sent Tony a bunch of Scottish things. The first thing.
I mean, I wanted just a man in a kilt, but apparently I'm just gonna get some pudding.
I don't even know what spotted dick is, really. It says it's delicious. I mean, this is the first time for me trying this. Vanetta, you?
Yeah, I'm on a dick-free diet.
Have you managed to warm up your spotted dick?
It kind of tastes like, you know, like the banana pudding or the vanilla pudding that you get, but that's like not refrigerated.
It's actually pretty good.
Yeah, it's not bad. And I imagine if you go actually to the UK, I'm sure there's places that can do it more authentically.
Is all the custard in cans?
Yeah, pretty much. It's one of those ones. If we end up in a war, then you just fill your bunker with custard and beans.
Control knocked me off my pivot today because they came up and they said that you were having, I actually had to go Google this, that you were having a conversation about traditional spotted dick desserts, whatever.
No, it's not a dessert. It's not a dessert.
It's a muffin.
Are you adding this to your repertoire?
It's a muffin. It was and we poured the custard on top.
You pour custard on top of a muffin. That's dessert.
Okay, American, you uncultured American. Okay, Dylan, explain to them.
I think that the good Dr. Sheridan accurately describes any item that has custard upon it as being in the dessert category, whether you're a sophisticated Milanese gentleman such as myself.
I can't be friends with Dylan Radigan if I eat SpaghettiOs out of a can because the Italians...
I mean, but you can, because remember, I'm from Saranac Lake. My relationship as a young man with the canned beans was to go out to the ice fishing shack. Because the canned bean is a very staple food for the ice fishermen.
So you grew up in the ice fishing community?
It's a card-carrying member.
Please tell me what the pleasurable portion of ice fishing is.
I haven't done it since, probably I was 16 years old, but our primary pleasure was smoking pot because you could get into the ice fishing shack.
There we go. Do you actually care if you catch a fish?
No.
Okay, perfect.
With your buddies, you're like, Sosnoff, grab the drill, and then it's like man work and you got to drill the hole.
Tony is going to counter that and say it's all about catching the fish. For sure.
No. I don't think he's an ice fisher guy. I don't see him sitting around the hole in the ice fishing, just hoping a fish pops in.
There's not enough marijuana in the world or Coors Light to get Tony to go ice fishing.
Get the full scoop by checking out the archives at tastylive.com.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again.
Oh, good.
So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive? Uh-oh, watch yourself. We don't want to get hit by a car. My brother did that once. He can't talk now.
Oh, my God, I'm not serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank
Does anybody
you.
ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
I want to play a game. It's a relationship game. So I'm going to ask you each a question to your
Who
partner.
loves the hardest?
Yes, yes, yes. So are you ready?
Exactly.
Who's more stubborn? Who's more public? And who do you think takes longer to get ready in the morning?
Oh. He's gonna do his hair.
Who's a better driver?
I mean, for sure.
Yeah.
Like I live in Italy. Yeah. Like we drive like.
I drove a truck in New York City.
I drove a tractor on a farm. I can fly an airplane.
Who loves the Fed the most? Who is more spoiled?
It's not even close. Like you got buildings full of people. What do you want, Mr. Sosnoff? I have nothing.
I'm running snow leopard with this.
I'm a Mac. I'm a Mac. I'm a Mac. G. Multitask, MacBook handler, brother. iPhone in one hand, iPad in the other. Pop open top, Apple logo shining on the back. That's why all these player haters know that I'm the Mac. Easier to see a nun with VD than to see me ever typing on a PC. So if you got one, you can play a sad tune and play it back later in your room on your Zune. When Windows made to break, and I'm here to crack it. And if I'm a Mac, that means that I'm immaculate. Style so clean, like it's disinfected. Clean surfaces where white light is reflected. Plastic case, Apple Store, keep my phone protected. Check my toolbar to see if networks are detected. Use my side swipe, applications hidden in it. This is Mac world, bitch, you're just living in it. I'm a Mac. 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 Roll into the coffee shop, know I'm on a power trip. Strapped with my laptop and my own power strip. Eye outlet, about to make your cable drop. Apple logo shining off the marble on the tabletop. So if you seen me, then you seen a star. Any place I sit down, call that the Genius Bar. Looks like I'm working hard, but to really know the truth, just taking pictures of my fine self in photo booth. Interface simple, why I need a Kindle. Working on that pad keeps my fingers mad nimble. So if you think I come up short, you must be wrong. More than one reason that these ladies call me Justin Long. I'm a Mac. I'm a Mac. I'm a Mac. Yeah, Justin Long, son. You catch that? Known by the ladies as the toolbar. 10-hour battery life. Force. Quiz.
If you missed the live show, here's our cherry on top weekly recap.
Ah, look what the cat dragged in.
Top of the morning to you all. How are we doing?
Rich McDonald from London, he was so excited to tell me that he was on a game show in LA.
You were on a game show in LA?
Yes. He was walking down the street and some Hollywood producer spotted him and goes, "Oh, we gotta have this guy." And what was the game show again? I forgot.
It was called Eliminate.
Oh, I know Eliminate! I know Eliminate! You were on Eliminate! Oh my god!
You've seen it?
Have you met me? Yes, I've seen Eliminate.
You get eliminated on Eliminate?
Who would not pick the Scotsman? Like who? Why? Oh, that's
don't know.
That woman's trash. I'm so sorry, Rich.
The camera's finished, and she turned round to the guy she eventually picked, and she said, "So where are we going on our date then?" He said, "I'm very sorry, I've got a girlfriend. I'm going out with one of the Lakers cheerleaders. I just wanted to get on TV."
In a tribute to you today, just so you know, we have one of our viewers sent Tony a bunch of Scottish things. The first thing.
I mean, I wanted just a man in a kilt, but apparently I'm just gonna get some pudding.
I don't even know what spotted dick is, really. It says it's delicious. I mean, this is the first time for me trying this. Vanetta, you?
Yeah, I'm on a dick-free diet.
Have you managed to warm up your spotted dick?
It kind of tastes like, you know, like the banana pudding or the vanilla pudding that you get, but that's like not refrigerated.
It's actually pretty good.
Yeah, it's not bad. And I imagine if you go actually to the UK, I'm sure there's places that can do it more authentically.
Is all the custard in cans?
Yeah, pretty much. It's one of those ones. If we end up in a war, then you just fill your bunker with custard and beans.
Control knocked me off my pivot today because they came up and they said that you were having, I actually had to go Google this, that you were having a conversation about traditional spotted dick desserts, whatever.
No, it's not a dessert. It's not a dessert.
It's a muffin.
Are you adding this to your repertoire?
It's a muffin. And we poured the custard on top.
You pour custard on top of a muffin. That's dessert.
Okay, American, you uncultured American. Okay, Dylan, explain to them.
I think that the good Dr. Sheridan accurately describes any item that has custard upon it as being in the dessert category, whether you're a sophisticated Milanese gentleman such as myself.
I can't be friends with Dylan Radigan if I eat SpaghettiOs out of a can because the Italians.
I mean, but you can, because remember, I'm from Saranac Lake. My relationship as a young man with the canned beans was to go out to the ice fishing shack. Because the canned bean is a very staple food for the ice fishermen.
So you grew up in the ice fishing community?
It's a card-carrying member.
Please tell me what the pleasurable portion of ice fishing is.
I haven't done it since, probably I was 16 years old, but our primary pleasure was smoking pot because you could get into the ice fishing shack.
There we go. Do you actually care if you catch a fish?
No.
Okay, perfect.
With your buddies, you're like, Sosnoff, grab the drill, and then it's like man work and you got to grill drill the hole.
Tony is going to counter that and say it's all about catching the fish. For sure.
No. I don't think he's an ice fisher guy. I don't see him sitting around the hole in the ice fishing just hoping a fish pops in.
There's not enough marijuana in the world or Coors Light to get Tony to go ice fishing.
Get the full scoop by checking out the archives at tastylive.com.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again.
Oh, good.
So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive? Uh-oh, watch yourself. We don't want to get hit by a car. My brother did that once. He can't talk now.
Oh, my God, I'm not serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank
Does anybody
you.
ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
I want to play a game. It's a relationship game. So I'm going to ask you each a question to your
Who
partner.
loves the hardest?
Yes, yes, yes. So are you ready?
Exactly.
Who's more stubborn? Who's more public? And who do you think takes longer to get ready in the morning?
Oh. He's gonna do his hair.
Who's a better driver?
I mean, for sure.
Yeah.
Like I live in Italy. Yeah. Like we drive like.
I drove a truck in New York City.
I drove a tractor on a farm. I can fly an airplane.
Who loves the Fed the most? Who is more spoiled?
It's not even close. Like you got buildings full of people. What do you want, Mr. Sosnoff? I have nothing.
I'm running snow leopard with this.
I'm a Mac. I'm a Mac. I'm a Mac. G. Multitask MacBook handler, brother. iPhone in one hand, iPad in the other. Pop open top, Apple logo shining on the back. That's why all these player haters know that I'm the Mac. Easier to see a nun with VD than to see me ever typing on a PC. So if you got one, you can play a sad tune and play it back later in your room on your Zune. Windows made to break, and I'm here to crack it. And if I'm a Mac, that means that I'm immaculate. Style so clean, like it's disinfected. Clean surfaces where white light is reflected. Plastic case, Apple Store, keep my phone protected. Check my toolbar to see if networks are detected. Use my side swipe, applications hidden in it. This is Mac world, bitch, you're just living in it. I'm a Mac. 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 Rolling to the coffee shop, know I'm on a power trip. Strapped with my laptop and my own power strip. Eye outlet, about to make your cable drop. Apple logo shining off the marble on the tabletop. So if you see me, then you see the star. Any place I sit down, call that the Genius Bar. Looks like I'm working hard, but to really know the truth, just taking pictures of my fine self in photo booth. Interface simple, why I need a Kindle. Working on that pad keeps my fingers mad nimble. So if you think I come up short, you must be wrong. More than one reason that these ladies call me Justin Long. I'm a Mac. I'm a Mac. I'm a Mac. Yeah, Justin Long, son. You catch that? Known by the ladies as the toolbar. 10-hour battery life. Force. Quiz.
If you missed the live show, here's our cherry on top weekly recap.
Ah, look what the cat dragged in.
Top of the morning to you all. How are we doing?
Rich McDonald from London, he was so excited to tell me that he was on a game show in LA.
You were on a game show in LA?
Yes. He was walking down the street and some Hollywood producer spotted him and goes, "Oh, we gotta have this guy." And what was the game show again? I forgot.
It was called Eliminate.
Oh, I know Eliminate! I know Eliminate! You were on Eliminate! Oh my god!
You've seen it?
Have you met me? Yes, I've seen Eliminate.
Did you get eliminated on Eliminate?
Who would not pick the Scotsman? Like who? Why? Oh, that's
don't know.
That woman's trash. I'm so sorry, Rich.
The camera's finished, and she turned round to the guy she eventually picked, and she said, "So where are we going on our date then?" He said, "I'm very sorry, I've got a girlfriend. I'm going out with one of the Lakers cheerleaders. I just wanted to get on TV."
In a tribute to you today, just so you know, we have one of our viewers sent Tony a bunch of Scottish things. The first thing.
I mean, I wanted just a man in a kilt, but apparently I'm just gonna get some pudding.
I don't even know what spotted dick is, really. It says it's delicious. I mean, this is the first time for me trying this. Vanetta, you?
Yeah, I'm on a dick-free diet.
Have you managed to warm up your spotted dick?
It kind of tastes like, you know, like the banana pudding or the vanilla pudding that you get, but that's like not refrigerated.
It's actually pretty good.
Yeah, it's not bad. And I imagine if you go actually to the UK, I'm sure there's places that can do it more authentically.
Is all the custard in cans?
Yeah, pretty much. It's one of those ones. If we end up in a war, then you just fill your bunker with custard and beans.
Control. knocked me off my pivot today because they came up and they said that you were having, I actually had to go Google this, that you were having a conversation about traditional spotted dick desserts, whatever.
No, it's not a dessert. It's not a dessert.
It's a muffin.
Are you adding this to your repertoire?
It's a muffin. And we poured the custard on top.
You pour custard on top of a muffin. That's dessert.
Okay, American, you uncultured American. Okay, Dylan, explain to them.
I think that the good Dr. Sheridan accurately describes any item that has custard upon it as being in the dessert category, whether you're a sophisticated Milanese gentleman such as myself.
I can't be friends with Dylan Radigan if I eat SpaghettiOs out of a can because the Italians...
I mean, but you can, because remember, I'm from Saranac Lake. My relationship as a young man with the canned beans was to go out to the ice fishing shack. Because the canned bean is a very staple food for the ice fishermen.
So you grew up in the ice fishing community?
It's a card-carrying member.
Please tell me what the pleasurable portion of ice fishing is.
I haven't done it since, probably I was 16 years old. But our primary pleasure was smoking pot. Because you could get into the ice fishing shack.
There we go. Do you actually care if you catch a fish?
No.
Okay, perfect.
With your buddies, like, Sosnoff, grab the drill, and then it's like man work, and you got to drill the hole.
Tony is going to counter that and say it's all about catching the fish, for sure.
No, I don't think he's an ice fisher guy. I don't see him sitting around the hole in the ice fishing, just hoping a fish pops in.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Golf play, normal distribution, reduced speed, increased standard deviation for a wider angular strike. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
And welcome to the St. Patrick's Day edition of the Liz and Jenny Show, live from the SIBO floor.
Live from the SIBO floor, and I was telling Jenny earlier, all exits are to the right. I look like a St. Patrick's Day stewardess.
All you need is a scarf around your neck to feel like a flight attendant.
It's true.
Stewardess is not politically correct anymore, Liz. It is flight attendant.
I think stewardesses wore these. Flight attendants have upgraded.
I still see the scars. Looking good. It is St. Patrick's Day. It's kind of crazy down here. Everyone's a little bit more lighthearted today.
And if you have a minute, check out our market movers. We had a good friend of ours from the way back in the days. When we say we've got 60 years trading experience, when we put him with us, we've got 90 because I think he started around the same time we did. And every year on a bet, he dresses as a leprechaun. So we got to have our SIBO leprechaun on today.
He was great. He was great. So Market Movers, that comes out on YouTube, on the Tasty Live YouTube channel. It's under the videos. It's shorts. Shorts, videos?
Video.
Yeah. So look for that later today. It was a lot of fun. We'll push it out on Twitter once it comes out.
And I'm glad something up for us. So Tony Batista today was trying to say that there's not a lot of Irish down here. I would argue that. I would say we're 50-50 Irish because there's a huge Irish contingency down here. Southside Irish represents.
Yes, definitely. And I will say...
But you know what? J.J. Keenahan, everybody thought he was Southside Irish. He's North
Side. I know. But I will say, I bet you if you pooled the brokers, so there's quite a few different roles down here, right? There are brokers and there are market makers, there are clerks, there are runners, there are many different roles down here. Brokers get the customer orders and announce the customer order, and then the market makers fill the order or quote the bid, quote the market.
Where are you going with this?
If you pooled the brokers, I bet it's 100% Irish. Brokers.
Oh, that's where you're going from.
The brokers. I think the brokers are almost all Irish.
And so let's talk about why I think there's a big Irish contingency down here too. Because way back in the day, so 30 years ago, you had to know somebody to get here. So when you see an Irish family, there's 20 of them. Right?
How many Harrigans are on the floor? And they're all from the same family.
And they're all from the same family. Yes.
Yeah.
So it's very common. You'll see brother.
Yes.
Mm-hmm.
Yes.
Yeah.
Yes. One of my roommates in college was a Harrigan, and when I came to the floor, it was like Harrigan. Do you know Bridget? Do you know Bridget? Do you know Bridget? They're all related.
And that's very true. So this was kind of, and I hate to use this term, but this is where they took everybody. This was the only place where, I worked with a former plumber. We'd work with former athletes. You could work with anybody. There was a lot of cops, a lot of anybody who could come in and kind of handle the aggressiveness of it was welcomed.
It was welcomed. And I like that you brought up the aggressiveness of it, because someone texted me yesterday that they're interviewing for a job in the pit, and I just wrote back, do you know, it's very, you have to be tough.
You should have wrote back, fear does not exist in this dojo, does it?
You have to be loud, you have to be fast, you have to be tough. It's still...
And you still have to be to this day. So you don't, like right now it's a lull, but still to this day you'll see the roar of when they try to respond to an order.
No, thick skin, short memory. That's how you survive down here.
I'm trying to think of where, right there, they've got...
You've got to be willing to wear a leprechaun suit and be okay with it. Pat looked great today.
Lots of bets were lost, but no one has done it for 30 years. He looked amazing.
He looked amazing. So, SPOOs are up 33 right now. It was quite a rally on the open.
Let's pop in.
Yeah, let's pop in and
this
see.
This is my first look at the platform since it's been a crazy day. Not kidding.
I could have surprised you. I could have told you anything. You
could have told me anything. Now, granted, I can look up there, but there is a camera in my way. But I do have the live footage of the SPX.
VIX 22.19. So really, Vol's been taking a hit.
That's come down a lot.
Yeah, Vol's been taking a hit. SPOOs are up 33, NASDAQ up 157, Dow 227, and Russell up 20. So percentage-wise, nothing over today. This morning they were all on the open closer to 1%. Now, not quite.
Yeah, they pulled back a little bit. It's not. What's oil? Can we look at oil? I didn't even look at oil.
It was going to be for Mikey. I'm just pulling up CL.
Okay.
Got CL at 94.13. If you remember Mikey's peaks, I think he'll. I think he's looking good.
That
looking
is.
Good. I'm going to go to Twitter here, and I'm going to go.
I got his peaks pulled up here. You can scroll down. Okay.
Yeah, I'm going to pull him back up because we got a lot of questions on this. How did Mikey pull this off?
So where is it trading right now?
94, which is.
Right
here.
That's pretty good, Mikey. Now, what
good.
Mikey needs is for it to hold.
This is today. This ends today.
Yeah, but you need it to. He won't make full profit or that full peak until the very end of the day at expiration.
I think you're looking really good, Mikey. Really good.
Well, the best part about it is through this forest, he can't lose. He can't lose anywhere on this screen because there is no. Even when it's a valley, it doesn't go into the red.
So we are taking live tweets. Send us a tweet. Include the hashtag LAZJNY. That's what we're looking at. We have a research corner to get to today, and we've got a lot going on.
Okay, so that being said, and I'm reminding Jenny and myself, I still like to say this on air, we are doing last call today. So if you don't get enough of us today, we will be putting all of our earnings trades in last call.
Yes.
And it's a doozy today. And I use doozy because I know Tony said there's nothing, but I think it's a big day for me because we've got, can you go to that real quick just to show what we've got on deck for earnings?
Liz saw Bob's list.
My enthusiasm was unprecedented.
Lulu, Oklo, DocuSign, Macy's. What else was on that list?
JBL? I have no idea what JBL
Something
is.
else caught your eye.
No, it was the Oklo Lulu DocuSign.
Yeah.
So I love Lululemon, the product, not the stock. Oklo's your baby.
You know what took a big hit on earnings that I missed because I wasn't paying attention, but I put it in my in-laws account as one of their dividend stocks.
Uh-oh. What? The maniacal laughter is what I like the best. The maniacal laughter.
Look at good old Campbell's soup.
Oh,
look at that.
Whoa, where'd you put it in? Where'd you put it in? 30? I'm going to guess 30. That's about when they got the account.
I mean...
29? 28?
Yeah, 26. No, right around 26.
Oh, man.
Well, yeah. Just I didn't see that, and they had earnings last week. I wasn't paying attention. Not that I would have changed it. They wanted dividend stocks. They wanted high dividend stocks. You want to take a look at this?
Hey, but if you don't, look at this. So our earnings out. Can you go to the trade page?
Okay,
Campbell Soup is a 24.
7%. 7%.
Can you go to the trade page? that's a high dividend, and it looks like the dividend's coming out because it says April 2nd, right?
Yeah, great. That's April 2nd.
So let's sell aggressive puts until we can put the stock in.
You're not going to get anything for the 3-day, 10-day, 16-day because look, if you go all the way out to May and Campbell Soup, you're only getting maybe.
That's not bad.
No, it's not bad.
That's what I'm saying. Try this. Open the 16-day. I just want to see it. Yeah.
So, yeah. 65 cents. Couple that with the 7% dividend.
Woo! What we're doing is selling an out of the money put in Campbell's Soup. We're kind of having a little bit of fun with this, but out of the money puts are a good strategy to sell puts until you can put the stock. So let me ask you this, Jenny Andrews.
I know you love and I can't even stomach saying it, the clam chowder Campbell Soup.
Oh, it's delicious.
I like the tomato soup, and
I don't like the tomato soup at all.
I use the cream of. Well, I have to add a lot to it, but I'll use the cream of celery in many recipes.
The clam chowder, straight up. Okay, but taking a look at this, what we're kind of talking about is selling an out of the money put to try to get the 7% dividend.
Yeah.
And in my mind, in my heart of hearts, I don't care if I never get that 7% dividend.
No, just keep the 73 cents, right? So I'm going to try to get 73 cents on that put. It's only using $400 buying power.
It's not bad.
So now, and here's my, it's quoted in nickels. So I've got my 75-cent offer up there. If this doesn't pull back, I won't get filled. I'm going to lower it to 70 cents because there's no point in 73 if I'm not going to get filled there. Okay, so now I have my 70-cent offer in. Since my in-laws wanted some higher dividend-paying stocks, this was one of them. Seemed like they couldn't get hurt too much. Now I'm going to have to actually do some work around it.
You're going to have to do some work around this.
I'm going to have to start slinging calls and puts and trying to make that. If the stock went from 26 to 22, they're out $400 on 100 shares of stock. I'm going to have to start selling some options to.
No, this is in the 16-day trying to capture the dividend. But can you open the regular? Yeah, go to May or April or anything you want to go to.
I'm going to have to try to make that.
Yeah, you're going to sell. You're going to sell premium around it. So if you've got a
$100 there,
a $21 stock that you're getting $100, that's
not
take you
bad.
21 months.
No, they only lost $400 on the move. So if I could get $100 a month, it's going to take me 4 months to make back the move.
Yeah.
Yeah.
Options allow you to do something versus, remember when we used to say this all the time? If you're just buying stock, you're on the wing in the prayer program. You're just crossing your fingers and hoping it goes up. Here, you're doing something against it.
What should I say when they call me and they're like, what happened to Campbell's Soup?
You wanted it.
You want it. You want it.
Yes.
All right, so we're working one short put in the 16-day, trying to get our Campbell's Soup stock before the dividends paid.
So do you think yesterday we stayed up all day long? I didn't know.
Wait. We stayed up all night long? You stayed up all night long?
No. I'm sorry. When I say we, the market.
Oh, I didn't know what you were talking about.
Yesterday the market kept its wings up, right? So at the end of the day, we were up, I think, 80. I'm talking Spruce. And I was up all night long. So she's going to have to correct me.
It wasn't a St. Patrick's Day party either.
No. There was no alcohol involved, unfortunately. But so yesterday we kept up, and I didn't know if we'd get a continuation of that. So when we opened up 50 this morning, I thought maybe we'd stay. It looks like we're giving it back. Now we're only up, what?
31.
31.
Who's up 31?
What's the lowest it was today? Like I said, during market movers, I wasn't looking at the market.
Okay, here, let's go back. So SPX, I sold put spreads in NDX this morning, and I sold iron condors in SPX.
Yeah.
Just to have a little bit of a diversification for my 0 DTE. I wasn't afraid. I wasn't thinking because after yesterday's rally, I felt like this market looked okay. I wasn't thinking we're going to turn around and really be down on the day. So I wasn't afraid selling those put spreads.
But I'm always more worried about the call side than the put side, and I have no idea why.
Well, and
probably because the Jade Lizard.
When I did an iron condor, I made it narrower. I had wider put spreads, narrower call spreads. That makes me feel a little bit better. But today we're looking at a low of 67.22. So Spruce up only 23. That's 10 points lower than we are right now. So if we're up 34, they were up 23.
Yeah. It's crazy. Oh, fun fact. Tomorrow we are back live from the SPX pit tomorrow, which we love it. We love Wednesdays. And Jacob's buildable studies that are actionable and tradable are back tomorrow.
I will handle the pain for this.
I'll go light.
Thank you.
That's not even a high five. That is the wimpiest of wimpy.
I am so excited to get Jacob's studies back. And we asked him to just start simple, put spreads. We're going to build. We're going to take questions. We're going to send Teams Jacob and tell him this is what we want next week. We're going to build on his studies week after week.
I'm very excited for
what our viewers want to see.
Yeah.
Yeah.
We had it a while ago. Somehow we got disconnected. We're back.
You hear some big commotion going on back there, and you think, okay, Spruce must be moving, but they're not. They're still up 33.
They're still up 33.
It's busy today. And I don't know if they're happy about that or not. St. Patrick's Day, I don't know if you know this, there's a bar in the building.
And we're going to it.
We're going to it today. No, we're gonna get some footage. We're gonna get a little bit of footage in the bar in the building after the show today, see what's going on, and we'll share that on YouTube.
We are going to. That's gonna be our. That's gonna be our goal.
We will. Okay, so as far as our account goes and things that are moving, we had a couple things that, if I sort and look at open 50%. Robinhood is let's take a look. Robinhood, we have the short 70 puts.
Did you remember we opened this up the other day, and this is something we always open up, and it might be where we start. Let's roll it out in time.
And we said we were going to leave it.
Let's get the heck out of it. Let's get the heck out of the way now.
Now let's go to
55%.
Yeah, let's go to May. We're going to close that.
Because if you open this is where I'd probably sell my put.
I know. But we're going to move. We'll move to May.
It's challenging to roll it up. Yeah, go to May.
We're okay. We're moving to May. So we have the 70 put. If we go to the May 70 put, we're going to take in another 233.
I like it.
Yeah.
I mean, if it was something that I was a little bit more apprehensive about, you can roll it out and down, but I don't need out and down.
Wouldn't it usually, if we're getting 233, give us 233 in buying power back if we're keeping the same strike?
One would think.
I thought we would, but
one would think.
All right, and that's aggressive, because if we opened up May, we'd probably start with the 65.
Yes, we probably would start with. We would start with the 65. That's what I'm saying.
But we went to the 70. That's aggressive.
Okay. I think that's aggressive. But it's Robinhood. It's something we want to be in. I want to give a big shout out to number one Frank the Great on the YouTube chat, and the chat, and Sergio and Brett is very excited to have Jacob back. The Jacob studies.
I'm thrilled to have Jacob back. And so
we want to hear from you guys. We want this to be buildable and actionable. And if you have a question or want to tweak it, we're going to give it to the master to tweak. So we want it to be kind of an interactive segment.
Yes, definitely. I'm sure Jacob loves nothing more than when I'm constantly teasing him. I want to study on this, and I want to study on this, and I'll study on this.
He loves it.
All right, so I put in that new hood order, that's filled, and then I put in a GTC to take 50% out of it. I'm just seeing what else we have here, this 50%. this 6E, oh God.
Oh, this is the TP special, and TP special is going to be on as well. We didn't take in much of a credit for it.
Yeah, we're
so
leaving this.
If you take a look at this, we did one. You were gone for 2 days, and if you look, you were gone for 2 days, 14 days ago, and 15 days ago.
know.
We did the call side the first day, and then we put the put spread on. So. You can leave it.
Yeah, we're just going to leave it. We're going to leave it for 17 days. April 3rd, check your calendar.
Will you look at it on the trade page? TP is going to be on with you in a couple weeks. I think he's going to be on with you on April 3rd.
Oh, let's talk about this. I want to say I'm thrilled. I've got a star-studded cast coming in. Liz is leaving next week?
Kind of.
Yeah.
Thursday, Friday next week.
Next week. She's leaving next week for a Royal Caribbean cruise.
Correct.
Spoiler alert. Let's look at Royal Caribbean today.
It's too high.
Oh, okay.
That's all I'll call it. It's too high for the hack that I've been doing every time I get on a cruise.
I mean, the funny. You leave.
Well, no, let's give this. I'm very, very, very excited because she does have an all-star
Oh my
cast.
gosh, a star-studded cast. Thursday, TP.
Which that's why I said you guys can address this. We love TP.
Friday, Fazia, who runs the Women of Tasty Trade on Facebook. She's amazing.
Go show where Fazia is too. You can find her also on the follow page.
She's on the follow page. So that's next week, next Friday. Here
right
she
down
is.
There. Click Fazia all the way on the bottom. Yeah. And if you click that, you can see all of her trades. She's very clear of the concept. She's a wonderful woman. You're very lucky to have her.
She's great. So she's going to be on with me for the full hour on Friday. And then another...
Shift to the right.
Another member of our follow page. Then the following Monday, that'll be a week from Monday, Tony from Mexico.
Yeah.
So Tony from Mexico is also... he's a tasty celebrity, definitely, and he's so smart. It's always coming. He said he has so much to talk about.
And in years past when you've been gone, he's been one of my go-to fill-ins. Now TP is our regular guy, but so I've always leaned on Tony from Mexico, and I can honestly say, every hour I spend with him makes me a better trader.
And it's cool. I'm so excited to have they're two different style of traders, right? So you look at Tony from Mexico, SPX, silver, ES, buy. He does a lot of these big dogs, and
he's big by big.
Yes, and we're going to get a lot of that from him when he comes on. And Fazia does a lot of the individual names: SanDisk, Nvidia, CoreWeave. She's trading SPX too, but AWI. Like she's got. They're both going to bring something different to the show.
And the other thing I like about this too is TP is a completely different trader as well. He's going to focus more on your bonds and smaller
and volatility
and smaller mechanical trades, and he does the cherry picks. So what I love about this, trading is not a zero-sum game. Everybody has their own style, and everybody can win.
No, I love it. So it's going to be great having that such a vast array of guests going from TP to Fazia to Tony from Mexico. Yeah. And I'll miss you dearly, but I'm really looking forward.
You won't miss me. I'll actually be watching. It's great. And so then you're going on vacation. You'll be gone for a full 5 days, I think. And
that'll be
week
like
the week after Easter.
Week after Easter.
And I'm going to try my hardest. I'm going to say it on camera to get just kind of to pepper the infield as well.
Right. Get a crew.
Yeah.
Get a star-studded cast.
Yeah.
I'm looking forward to it.
Yeah.
Okay, so back into our position page. We got on this topic because we were looking at 60. I've got TP coming on.
I know what this is. You don't need him to manage it.
No, I know.
It's basically the bat wing. Can you look at that on the curve view?
Sure.
It looks pretty cool. Curve analysis.
Where is it?
Curve?
Oh, because you know what? I think because is it because this is? Oh, there it is. There it is. I didn't know if we were looking at 60M and it was a different cycle.
Oh, I see what you're saying. But so look, that's so it's trading right where that the flag is. And so this is a very wide bat wing trade where in the middle, no matter where we go, we can keep $50.
$50. Great.
Yes.
We never need to do anything with those. They'll just roll off if it never gets there.
If it never goes anywhere, they'll roll off. If by any grace of God you get the movement in one direction or the other, the peak, how much can you make on each peak? I'm pretty sure they're symmetrical.
At expiration, why does it say only $50?
Well, that's a lie.
At expiration here, $50. At expiration
here, $50.
You know what?
Maybe it doesn't do it for futures options.
I don't know. Let me see the other side.
Nothing is moving. Oh yeah, the other side is
Oh,
$675.
yeah. That should be right. $675.
Yeah.
That sounds right. Filled in Campbell soup.
Ooh.
All right, so $675, and that's right. And that could be just a little glitch. Okay. Oh, so I'm kind of excited because right now my husband is at a quantum convention. So I put him on a mission. I'm like, quantum convention, you go find out. You find these like QBTS and
She's got him mic'd up, and he's like, "Can you please tell me about this?"
Can you tell me what's going on? Like, find out everything you can at the quantum convention and see if there are any good potential quantum stocks for us to look at.
Because I'm not very. I mean, I know I'm in a couple quantum stocks right now, and the ones that are the most in the news, I'm sure there's others, right?
I mean, so there was, like, here's QBTS, this is D-Wave Quantum.
IONQ, isn't that one too?
Yeah, we'll look at them. So, there was that big wave, quantum, they were, like, all everyone wanted back in the fall. Yeah. And then they kind of came to a screeching halt, and they're just hanging out here. So I think it's a good time if he comes back and is like, oh, I really liked, when I talk to the people at the companies, like, I really like this one or this one or this one. I wouldn't mind getting back in with some short puts in these companies.
Oh, I don't mind at all.
Let's take a look.
Now, with the problem here, Jenny, and I agree, I know where you're coming from with it, but right now we have an opportunity where there's still a high rank everywhere, and these seem pretty low.
14.
Yeah, especially when you're looking at, gold, oil, silver. You're looking at lots of things.
Oh, hey, guess what? We have it.
Even the ETFs have a high rank.
Look, we have it.
Yeah, I figured we did.
Let me see.
You're not alphabetized, yeah.
QBTS, we have it. Sold it 18 days ago, the 18 put. I'm going to put in a GTC for 50%. Are they all low rank?
I think so, like IONQ.
18 rank.
Yeah, I mean, it's kind of, and you'll see when you're trading and you're a vol chaser, it kind of goes in cycles.
Right.
Do you remember when these were through the roof?
Yeah, but you know what? I would rather get in at this level with a low vol
at 70
than at 80 with a high vol.
I agree.
I like when products are near
agree.
their bottom of their range, and I like to get in then. So I'll take the low vol at this level rather than the high vol when it's at all-time highs.
Sure.
Okay. So back to, do we have anything else that's really... DraftKings were up 27% in less than a week. Oh, we did 2 staggered puts.
Each one is 26%. We did that for a reason. Let's hold off for 50.
Leave that. Let's leave that. And 32% in our IBIT, which this is a zebra with an added
put. We got to take that put off.
Yes.
And let's add an additional put.
Okay.
Like, let's go to the weekly, to the 7-day.
So in IBIT, we have this zebra, which is like a synthetic stock position, and we added a put to get extra premium. And we just did the put instead of the Jade Lizard because we wanted to make more than just 20-30 cents if it ran through the calls.
Well, and we also had a little bit of capital on our side. So we do the Jade Lizard with that fat tail, and I bet weekly because it holds up a lot of capital. When you close this, see how much you're going to get back.
But we don't need it. We have capital.
No, that's what I'm saying. That's why we did it. And I would stick with just a put, but I would go out another week.
We're going to get $1,300 or $1,400 back.
Which
but if
is
we do
a lot for a $30 stock.
If we go out to next week's expiration, what is it? 10 days? March 27th?
So, yeah.
Or the 13 days?
You
March 30th?
No, I prefer
No, it's the 27th.
I'd go 8 or 10 days.
The 27th. And 27th is the day I'm having Fauzi on.
Oh, wonderful.
You'll be on vacation.
You and Fauzi are going to manage this. You're going to be full profit.
So if I go to the same 39 put, it's only 50 cents, but maybe I go up to the 40 put.
Yeah, and we don't need, 70 cents is a wonderful collection for 10 days.
Yeah, for 10 days?
Yes.
We'll do it.
And you got 80% on that? I don't know that I would put in a GTC for 50 if you're only collecting.
No, if we're only collecting.
Yeah.
So right now we have this 40 put for about 73 cents. Okay. That's IBIT. 1040. I feel like time's really slipping away
from
us.
Even the S&Ps are only up 13.
I know. I don't know if I don't think I ever got out, and I'm going to check in my SPX Iron Condor or my NDX puts.
I bet you're out.
I don't know.
You're out if you put
Oh, yeah, my NASDAQ's out.
If you put
50%.
If you put an order in, you're out.
NASDAQ's out. SPX is out.
Yeah.
Out on both. Nice.
Yeah.
Okay. we have a research corner. We have tweets. What do you want to do?
Well, let's get to Twitter real quick because we have tweets, but we'll get to the research corner as well. Let's just go top down. Bob, we love your list. Thank you very much. We're going to look at those on earnings or on last call today.
Oh yes, we'll be on in the afternoon, 2:30 to 3, and we'll look at all the earnings.
Patty, it's good to see you, Patty.
Okay, good morning, friends. Speaking of quantum, what are your thoughts on IONQ? I'm underwater, so if you're underwater on IONQ, kind of like what we were looking at Campbell's Soup with my in-laws underwater on Campbell's Soup. If I could go out and get some credit.
So there is decent credit.
You can go far with these calls. I hesitate to go through earnings.
Can we, Patty, not a trade recommendation. So not a trade recommendation.
Oh, the spark?
The fire plug or the fire starter.
Sure.
The
but do you want to go?
Can we just call it the flamethrower?
Do we want to go through earnings or not?
No, if it's a flamethrower, I would go very near term. This is what I've been doing with mine.
Okay. But it'll get called away if it gets to it.
Yeah, but you have to see how wide you can get.
Yeah.
Like you can with the fire starter, it's pretty good. Instead of selling a call, I'm doing an upside ratio spread against
How
stocks.
close do you want to go?
Well, I've been doing them weekly. I've been doing downside and upside. So let's just go 10-day.
Let's just look and see.
And so if I have stock, I've been buying, say, buy the 32 put. You have the stock, but buy the 32 put. What are you getting?
Oh, you don't need to. She's not asking to protect the downside.
No, I do both sides. That's how. If you're underwater, then if it goes down, and that's why I'm doing them really near term because it isn't additional capital. So buy one and then sell
just
something
do them
for
for
nothing.
even.
Yeah, or make sure you're not paying. You can move it down one more and go to the 30. Yeah, there you go.
Okay, so this will just if it goes down to 30. We'll give you a little more.
You're going to take in $200 in credit.
In 10 days, though, at the end of the week, on Friday.
That's why I do them real near term.
Yeah.
I've been doing them 3-day, 3-day, 3-day. And then if I'm underwater on the stock, the kicker is the upside ratio spread. And you want to make sure this is the trickier one because you want to make sure you're okay with the.
The problem with doing it to the upside is that your stock would get called away at 36.5 with this upside one.
But you're also going to collect an additional $247
if you end at 36.5.
So move it up a little bit. See if you can take that.
I moved it as far as I could. It's a debit.
So take it down by take the 36.5 to the 36, and just keep moving it. Like move them both until you get to the other way. Sorry, one more, and it moves it pretty far. So if I was going to sell that 37 call, I'm actually happy with the kicker of if it's going to get called away at 37, I've got an additional $216.
So you would make the money back if it, let's say, it ran up to 37. You'd make the money back from 33 to 37 on your stock, and then this could make 35 to 37, $200. But if you go too far through, then you've got that extra short call and your stock would get called away, or you have to roll this out, or you have to roll out the short call.
Yes.
There's a lot.
But it depends on if you're underwater. This has helped me. And in
IONQ, like she could be in at 50.
Do you know where I learned this though? We've talked about this before.
Yeah, I know where you learned it.
Oil.
Oh, and
the oil. Remember when I had to scratch and claw my way out of something? So, Patty, when you just said you're underwater, I thought about my CL position. It was the biggest position, the biggest loss I've ever had as a retail trader. Back then, I think I've had bigger ones
since then.
But back then, and it took me a year, and I would ratio spread, and claw my way out of it.
Just keep trying to make some money every month. But
I wasn't trying to make it back in one foul swoop, right? So, if say you're in at 50, I don't think it's going to go from 40 to 50 overnight. Maybe
I know
it does, maybe
it's
it
tricky.
doesn't.
It's tricky because I'm going to guess there's nowhere around here that's going to be
Nothing's a trade
near her break even. Because if she got in at 50, I don't want my stock all the way at 37.
But I'd rather do something than the wing and the prayer program.
Yeah, I mean, there are positions that I have that I think, okay, this is more of a long-term investment, and I just have the stock, and I just
put
leave
black tape over it.
Right, put black tape over it.
I mean, we've been asking for 27 years.
For black tape.
Not for black tape. For a black tape. Something that we can physically move them into and it won't let you open it.
Right, like a category that you could put them in and you don't see them.
Yeah.
Like, I want to move this to this category and I don't want to look at it.
Yeah.
It's tough. But, honestly, if you...
I was saying, you're going to get black tape in the mail now. We've been asking for black tape.
If you go far, you can definitely do something because let's say 50,
I don't like ratio spreads far.
No, but you could slowly chip away at it and get your break even far. Like here's the 50 call for 80 something cents, and then the 20 put where you're getting $1.40. I know it's $1.40, $140 in 60 days, but then you're reducing your cost basis by by $1.40 every 60 days. So you can do that 6 times a year. You're improving your basis. You're improving your basis, and then you're getting your call. If you get called away at 50, you're not going to be upset about it.
I think this is the more traditional way. The fire starter has been real fun. It's been real fun.
But great question, Patty, and hopefully IOGA and Q comes back for you. Ladies, put this on a week ago after I had a nice earnings play win in BBWI. IVR is high and BP is low.
You're speaking my language. IVR is high and BP is low, so he's got a straddle. And let's take a look at it.
No, he sold a call and bought a put.
Oh, you've got the combo in.
Yeah, Mikey, trading the combo.
But that's short. You're short the
stock. Sold the call and bought the put. Yeah.
You're short the stock.
20 in April. BBWI.
Let's take a look at that.
Oh, Bath and Body Works. Yeah, I heard this mentioned in the news. I don't know why.
It's one of Tim Knight's big shorts too. And so what Mikey did, which I love, is he did the combo. He has synthetic short stock, which was the only way for people to get short stock back in the day.
And we're just short the put, so we obviously did hear this somewhere that we're in it.
Yeah, but we're reverse of Mikey.
We just have a short put.
He's long the put and short the call.
Yeah, he sold the call and bought the put. Synthetically short stock. Mm-hmm. Looking for a down move in Bath and Body Works. Honestly, that place is packed.
I haven't been in there in a long time. I need to go though.
Okay, my daughter likes to go. There's something, and I like their mini hand sanitizers.
I don't mind Bath and Body Works.
I was just in it this weekend when we went to the mall, and the line is like 30 people deep to check out.
Yeah.
The line is 30 people deep to check out.
I mean, it's got to catch a bid at some point. I'm okay with our put.
Okay. Bob, good morning, ladies. The attachment on this was screwed up somehow. Trades are okay. Must have had a bit of a snafu this morning. Oh, the potential earnings plays. Bob, thank you. We love the Shamrocks. And we were going to get to all of your earnings trades in last call today.
Yeah, we are. I mean, I was very excited. I know Tony said there's not a lot of earnings today. I was like, whoa. Oklo, Lulu, DocuSign. It's going to be a big day, Bob.
It's going to be a big day. It's going to be a big day. All right, who do we have next?
Ajit. We haven't seen Ajit in a while. See if you like spreading this off, but aware it's a volatile one and we'll be moving off the back of MU tomorrow. Micron has earnings tomorrow.
Western Digital. WDC, Western Digital.
So he's got an out of the money put. I'll go to his strike, so you don't have to go back to it.
WDC, if you take a look at Western Digital, it has been parabolic from, last summer, low price of 79 to 300 now, Western Digital.
Yeah, that's big.
Crazy.
I'm trying to figure out what put he sold.
Crazy.
So he sold the 250 put.
You can get far. Straight 300?
In April 17, 417.
250 put.
32 DTE. Ajit spells it all out for me. It's really easy.
It's a nice bang for your buck. You're using $2,500 to collect $750. I get it, Ajit. I get it.
That isn't a, and so his assumption is that it's going to move on the back of Micron.
Okay, and or he'll keep $750 as long as Western Digital isn't below 250.
Yeah. That's why short puts are amazing. Ajit knows this too. Western Digital, as parabolic as it was, and we've been trading these a little bit, saying if you wanted to get back in, when
you could see Micron's up. Yesterday. Yesterday was the crazy move in Micron. You went from 426 on the close the day before to opened up at 446. So up $20 yesterday, up $14 today. Micron. Hopefully.
I hope Jack JT still is long at it. He was long at like
75.
Yeah, something so low.
Yeah, I think it was 75.
That's why he's not tweeting us anymore. He's just on the beach with his wealth.
Jeez. How hard would it be if you got in? He got in like
no chance. There is no scenario in this world.
You got it at 455.
That I still have it at 455 because I'm a trader.
But if you turned it into a zebra, then you can keep it going.
Then I keep it going.
Yeah, then you can keep it going.
Then it's.
I'm trying to keep things going.
That's why Bloom Energy has been so good to me because
just keep it going.
I keep it going.
Yeah.
And then it doesn't look like, ooh, I gotta close this because I have such a good profit in there. Because you just keep transferring
it.
You just
keep it going.
Yeah.
So somehow, to try to keep things going, and you can by changing it to a long collar, change it to a zebra. But when some products get so expensive, then the zebras are so expensive.
It's hard to enter into an expensive zebra. It is not hard to keep it going.
Right. Yeah, to keep it going.
That's a
It's
mental
hard to-
game. It's a very weird mental game for me.
But thanks, Ajit, for that. I want to make sure we get to everyone's. Happy Hump Day. Thanks for checking on oil for me. I added a long call spread, so look, he's got even more profit potential.
More trees. I love it.
And Ajit is looking. Here's his Micron. This is Micron.
Okay, there you go. There you go. And that's for the earnings tomorrow. And I have no problem entering it the day before. Sometimes I like to wait if we're in volatile times, but
yeah,
I don't mind.
All right, here's Bob's list, and we had Bob's.
So we have
Bob's
5
list.
minutes. Is there? Can we go
And Blue
to?
Wackadoo came in. Good. Hopefully you're out. If we're all out, you should be out too.
He probably
yeah,
will be.
You should be out.
And
And
then
look at
Frank
this,
the Great.
Liz. Tomorrow.
Jack Tucker was from yesterday.
Okay, I'm going to show you on the research corner.
Just go to my favorite chart.
It says FOMC rate decision tomorrow.
Now, are they doing that because will they have that because the government shutdown, or is that not going to happen? I have no idea.
This is on the option drive.
I know we've had it on the option drive before where it didn't happen.
Fed Watch Tools pricing a 98.1% probability of no rate change.
Well, that's a pretty high probability of no rate change.
Okay, and PPI. So busy day tomorrow.
Yeah.
This is Liz's favorite chart.
No, it's the SPX. They expected to move.
Here's your favorite chart.
This is my favorite chart. I like looking at it on a Tuesday because this is from last Friday, and it kind of shows how things change so much, right? So the last 2 weeks were fine.
Crazy. Look, 29 VIX, 27 VIX. We had crazy moves.
Crazy moves, right?
Big expected moves.
So let's take a look at what's going on right now with the expected move.
Now
SPX.
we're at a 22 VIX.
22.
So 22 VIX is going to be nothing.
And for the weekly move, that's going to be the 3-day? Yeah, the 3-day.
Yeah, 109.
109.
109, which I guess
Still kind of high.
Still high, yeah.
So with the elevated VIX, it's still relatively high considering the volatilities that we've traded through.
Yeah.
Do you remember when it was summer and we had to put a calendar on every day?
Oh, and VIX was 8. I mean, like, if we survive trading VIX at an 8, we can survive.
If we survived premium selling with VIX at an 8,
we can survive anything. Yeah, we made it through.
Yeah. Yeah.
Yeah.
And you kind of know what to do because the market does change. It bobs and weaves, and the market. I'm never going to try to outsmart the market. You have to trade what is given to you.
Right. Yes, definitely. You know what So on this is where I looked at this. This is biggest movers up and down last week, and you can see Micron,
this is what alerted you to.
and when I saw CPB, I was like, geez, I think it's in my in-laws account.
This is
how I saw it.
This is where you got it? Okay.
And Ulta down 17%.
14% and 17% are big.
Adobe, APP. Oh, AppLovin. We've been in and out of AppLovin.
We're out of AppLovin now. Get back in.
Let's look at AppLovin and get back in. I'm out of it. That was my... AppLovin, that was our January put.
We went super far out, yeah.
And we got out. Let's see the move.
Wait, pop out the side. I want to see. Let's take a look at. I just want to see in and out. I mean, you're gonna have to go back for a while. Go 60, yeah.
All right, we sold December 125 puts for 450. Bought them back for 375. We took $75 out.
That's why we went to the 276.
Yeah.
We did it on 211, so it was only on February 11th, and we took it off on March 6th. That's not bad.
December 125. Let's see what they are now. They're probably less than 370. Every time we look at this, December 125. Oh, they're at 455. We can sell them again.
Isn't that where we sold them originally?
Sold them for 450. Bought them back for 375. We're back in. We're back in AppLovin.
So how much capital is this to?
Let's see.
So in an ironic turn of it, it's only $455 to put.
No,
it's only
$1,200. But hey, if we can get $455 again.
Now, we put this on. I just want to be clear about this. We were looking at this on earnings, and sometimes these set up where you can go all the way out to December. We didn't get the up move. We got a down move in AppLovin, which hurt us a little bit.
It hurt us, and we were in it for a little while, but then we just took
a month.
Now, at the time, all of these had 0 open interest or close to. This was the day we put them on, and then the next day there was open interest in all of these strikes.
Yeah.
You could see the 135 has 500 open interest. Now, the market's wide. I don't know if we'll get filled at 450, but I'm going to try. Right?
I mean, those are famous last words. We're going to get filled. Come on, hit it. Yeah. And it's kind of crazy how wide it is that you can get filled. Put a GTC in to take $100 out of it.
Okay.
That's, I think,
How many times can we get in and out of the December 125 put in F11?
6. I think it's going to be 6.
All right, 450. I'll put in a closing order to buy it for 350.
Sounds great.
And we're out of time.
I know, this was a very fast day. We had some technical difficulties in the beginning, which cut our show a little bit, but that's okay.
Yeah, sorry about that. All right, everybody, have a safe and fun St. Patrick's Day.
Yeah, absolutely. Okay, so I was going to say this. Instead of saying trade small, trade often, I'm going to say I'm going to read it. May the road rise up to meet you. May the wind forever be at your back, Jenny Andrews.
And isn't there
the rest is like a death march, so I just figured I'd give you the first two.
All right, everybody, have a wonderful St. Patrick's Day. We will see you all tomorrow.
See you tomorrow, everybody. May God hold.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Winding down from the weekend, Saturday night like we should. I know I should work a bit harder, but baby, your love is too good. You knew what you did when you planned it, you scammed it, making right off like a bandit. I know that you worked a bit harder, 'cause baby, your love is too good. Touch me, hold me, love me, know me. I like how you do it, you're helping me through it. Baby, your love is too good. You knew what you did when you planned it, you scammed it, making right off like a bandit. I know what I know, it's time to.
What's up, everybody? Welcome to Option Trading Concepts Live. I am Jamal Chandler, joined by Thomas Westwater, as it is not Westwater Wednesday. It used to be that. No, it's Tuesday. Before it's Thomas Tuesdays now. Mikey Butler is out on vacation, so it's just the two of us hanging out today. What's going on, man?
Yeah, not much. I mean, I'm getting whiplash from the weather here.
Oh, God,
warm, cold, but we're getting there.
Yeah, I know. It's. I mean, what can we say? It's March in Chicago. This is kind of how it goes sometimes. This is why I was saying a couple weeks ago. This is why I don't get too excited at the 65-degree days or the random 70 and throwing on the shorts, because I know that this is coming again, a 15-degree day, 15-degree morning, and it sucks, and we're just going to have to work our way through it.
We'll get there. A few more weeks, but it's crazy because now it's light out when I'm putting my kids to bed. So, we got the blackout curtains and stuff, but still a little gets through. And my son's like, he's like, it's not dark yet. I'm like, yeah, but it's still bedtime.
He's probably putting up a fight on that one.
Yeah.
I mean, I don't blame him. I would try. When I was growing up, for me, it was tough going to bed knowing that the cool shows were coming on. It was that was the tough thing. Now I feel like kids don't really pay attention to shows. I was talking about this with my wife the other day. We were watching the Oscars, and they had that one song come on, which I guess was part of the K-pop Demon Hunters show, and they came and did the song and they performed it, and she was like, it was 9 p.m. probably our time when they were doing it. And she goes, oh, they missed an opportunity. These kids didn't see it. And I was like, you could have told the kids the exact time that would be on and they wouldn't show up. They don't care because they know they can see it anytime they want somewhere else.
Right.
It used to be appointment timing for things when we were kids. It was something's coming on at 7:30. I'm going to show up 7:20 and be in front of the screen waiting for that thing because I might not never see that thing again.
You remember the TV Guide channel where you had to wait to see the channels would scroll down and you wait?
Oh, yeah.
It's crazy.
Oh, yeah. Do I remember it? Before the TV Guide channel, when they had the TV Guide, actual TV Guide.
Oh, they mailed it to you?
The thing that they would mail to you. I memorized that thing, dude. Thomas, I'd read that thing on Sunday. I'd know what was coming on the whole week. By Thursday, I'd tell my mom, oh, yeah, this is coming on this time. She's like, how'd you know? I saw it on Sunday. I memorized it.
That's stunning.
This is the way I did.
It's crazy how things change.
Yeah. And that's why I use all of that to study markets now. I use all of that, those analytical things I learned early on.
It set you up.
Yeah, it set me up for life. Speaking of, let's take a look at the market here. Sharply lower from the highs of the day. Let's do a 1-minute chart here because things have changed a lot. It's funny. Yesterday at the close, Nick and I do on Mondays, we do Last Call. And I was of the mind that, first of all, I didn't think we would have an update today. Mm-hmm. But if we did, and we got to 6,800, I felt like somewhere between 6,800 and 6,850 was a fade. And it turned out that's the case. Looks like we got as high as around 6,808. And not long after the open, which seems to be somewhat of a theme recently. And then we just started to fade here. And so now it's we're in the lower end of the channel, and we wait.
Yeah, I really don't like the price action too much. This it's like the 9-day EMAs, capped upside for a while on the S. It's all about oil. I mean, it's still, oil being up, stocks a little, running into some weakness.
No, 100%. Like oil is still the driver, right? Like it's traded as high as 95. What? Oh, I guess overnight. Sorry. I mean, it traded 97 and at 63, but it's still the driver of the market. I mean, anytime we see a spike in oil, the market's going to freak out a little bit. That's just kind of where we are, right? I would say the reason why I don't think we've completely rolled over is because the dollar hasn't gone positive on the day yet, and neither have 10-year yields. I think when you get that combination of dollar, 10-year yields, and oil, all of a sudden, things are negative and it's not looking good. So I do wonder if we're going to get that prior to the meeting tomorrow, though. I still think like we're going to start to get into a holding pattern. Mm-hmm. I hope it doesn't start, but it's seemingly starting. I mean, volume seemingly slowed down. We got another hour here until noon. Usually we want to see 1 million contracts on the ES by noon, and we're close. We're close. That's good. At least volume's kind of holding up. I feel like I don't want to say worried. I just feel like we're heading into this area right now where things are going to slow down a little bit. Even though nothing's going to happen in this meeting, it's a catalyst, and nobody wants to trade heavy prior to the catalyst. And so it's just about to get a little bit quiet at the end of the day and probably early tomorrow before we actually have the meeting.
Yeah, I mean, the thing is we've had some weakening in the labor market, right? But now no one is focusing on that. It's all about energy. What's the Fed going to say about oil? What's Powell going to opine on? I mean, of course, he'll say something like, if this goes on for, an extended amount of time, then our inflation expectations go up. But I think we get a new dot plot tomorrow. We get a new round of SEPs, summary of economic projections. So, I mean, I think that and Powell's commentary are going to be where you're focusing for, the algos are going to scan all that right away. You're going to see the initial move. It's probably going to fade it. Then we're going to latch on to one phrase Powell says. That seems to be what we do.
Yeah.
He says one thing, and the market latches on to it, and then sometimes they clarify in the coming days and weeks what he actually meant. But I think this is one where you got to be watching his questions and seeing how they're going to handle an energy shock. So.
How many different ways do you think they're going to ask him about that energy shock and how inflationary
they'll try to prod him, from each and every way. He's going to have, his phrase he says, probably something like, it's going to take time to see this work its way through the market or something like that. I mean, ultimately, the fundamentals for oil before this happened weren't that strong. Global stockpiles, OECD stockpiles were building. And, all the forecasters through the second quarter, the surplus was expected to, go up. So it's all about what's happening in the Strait of Hormuz right now. The U.S. is trying to get this multi-nation coalition together. I guess Trump tweeted on it just shortly ago saying, we asked a few countries, they said no, but we don't need their help anyway. And I guess we'll see how it goes the next few weeks trying to escort ships through the Strait.
Yeah, it does. And all this news, again, seems to occur around certain levels. Like I said, 6,800 definitely seems to be the level to fade. 6,808 is where we got as high to. I mean, the last time we were at that level was last Thursday, and we faded hard from there and into the weekend. Seems to kind of almost coincide with 25K too. I mean, you can basically see we're at 25,000 today, and then we ended up fading there in the NASDAQ. And the Russell was the strongest performer today. And I'm not, I really haven't paid attention to new levels in here. I know 2,700 was the big fade, but since then, I really haven't traded much of the Russell. Couldn't tell you. Obviously, 50K was a big level in the Dow, and we've completely lost that. You can just completely throw away your Dow 50K hats now. So tragic.
Yeah.
It's so tragic.
You'll see them at Goodwill.
The one positive thing today, Thomas. VIX futures they're not in backwardation anymore. They're in contango as we head into expiration tomorrow morning for the H contract. So if, as of now, we're not in backwardation, if for some reason between today and tomorrow we do sell off some, then the J contract will continue to trade above the K and we have some backwardation. But right now we're basically flat.
Yeah, that's interesting. I mean, it's kind of seen as a risk-on thing, but again, I think we're ahead of this event risk that's FOMC tomorrow. So maybe if this holds into tomorrow, we get a rally after, But again, I think if something crazy happens overnight, oil goes up another 4 or 5%. There was some attacks overnight. Iran attacked, I think, some UAE facilities or something like that. But anytime. We're a headline-sensitive market right now.
Oh, yeah.
So this could change, I think, pretty quickly. But, yeah, it's an encouraging sign. Just don't know if I love the technicals on this. I'm getting long equities right now. I actually lined up a little bit this morning. So, yeah, and if volatility comes back higher, maybe I'll do an iron condor on the S&P 500. But, I don't know. I'm not feeling good about direction either way.
Yeah. Speaking of, I'm not sure if there's anything that you have done more recently. I just did very small things here. Today, let's see, where did I start? Just say SPX. So yeah, I did a bearish trade, of course, just a little bit at 6,800, just because I felt like that was an area to fade in SPX that basically correlates with around 6,750. So I did a super bear today. I sold the 6,750, 6,760 call spread to buy the 6,700, 6,685 put spread. Obviously, that next level here is 6,700. We danced around that level for majority of the last couple of days prior to this move today. So figured it was worth a shot here. I mean, again, I got plenty of long deltas. Each time we make these moves higher, the account is looking good. So anytime that happens, I feel like I should at least put on one short delta trade because, like you said, the technicals here just really haven't looked good. And it always ends up being a little bit weak, just like we had today. We moved higher. We get these levels, the weakness kind of sets in, or oil goes higher, or something derails the rally. So I figured I would go ahead and do that. And then I also did Lulu has earnings tonight. I decided to go with the calendar, double calendar, 15 points in each direction. So we got, I don't know. Do you ever trade this thing?
Lulu?
Yeah.
No, I haven't traded in a while.
Yeah, it's probably smart. But I always try to find simple and cheap ways to do it. And again, these calendars, the put side was 75 cents and the call side was 70 cents. So, I'd like to feel that it's going to go down, but I don't know. And the double calendars have worked better than not. So going $15 wide, essentially from 165, gets you to 150 and 180. We'll see what ends up playing out. Like to do that. And I think I did one other thing. Some other stuff. I mean, I've largely tried to just manage in this time period. EWI was one that I've been short a strangle in. And I had it in April. I was short the 120, 160. I mean, this thing, my God, this thing has been, all over the place with South Korea, being at highs. Volatility was crazy high. And I sold the strangle probably in this general vicinity. And, I just had to weather the storm some. But finally, I think it's calmed down along with the rest of the market a little bit. And so I was actually making money on the trade today. But I decided this vol is still fairly elevated when I look at it in the 50s. I mean, that's pretty high for an ETF. So decided to go out to May, still same level. And just kind of, it's a little bit wide, but you know what? This vol is high enough that I think this thing is going to come in and I'll be able to win on it. So especially since it's calmed down. So went out. I had the 120, 160 in April. Now I've got the 115, 160 in May. So I was able to collect like about $110 more to put a similar strangle on and widen out just a little bit in May. So that's what I've kind of done. And even yesterday I was kind of doing a little bit of managing because like you said, I just don't really trust this market. It proved me right today. When we get to these certain levels, we kind of fade off of it. And so I just want to sort of balance that long delta I have any way I can. Any things you've done?
Yeah, I mean, I took off an IWM put spread, and then I took off a Rocket Lab call spread. The Rocket Lab one is I've been doing call spreads on it for a while. It's just worked. This is the first time it hasn't. I think that's just because of the overall market effect, of the war. IWM, I just wasn't liking how the position was going out, and now I'm starting to feel a little more bearish on things, where I'm just, the chance for rate cuts are going down a little bit. They're definitely down from earlier this year. Labor market's weakening. Now we got these energy prices. I don't know if the market should be holding up as well as it has, actually. I'd like to see a bigger sell-off. I think maybe it's still yet to come.
What do you think causes it? Something besides oil, or what?
I think it's if time runs out to where the Fed could cut, and then we start thinking about rate hikes. I think that's what can cause the market to kind of have a big, maybe a correction. The 10% down move. We're still riding this, I think, momentum from the past few years, and the AI narrative is holding up pretty fairly. But I think without that, we'd be in for a lot more pain. It's a trade on confidence, I think. So I don't feel too confident anymore, and it feels unnatural for me to do that, to start flipping more into the bearish side, because I've been bullish for years now, and so now it feels like a little unnatural to start doing that. I just don't like how the market's developing, how the labor market's going, things like that. I think GDP trackers, things like that, are down. Not like we're looking at a recession or predicting that yet, but I think this is an economy where you can start to see margins come in, corporate earnings, guidance get softer, things like that. So,
does it give you any confidence that we bounce off? We're still we've bounced off of lower levels from late November.
We're holding the line,
yeah.
So it's like, but again, I don't think, I think maybe we should have taken more pain now to avoid that later. Still think there's going to be a lot of people trying to bottom fish, call bottoms, and I think we're going to need something to break, that kind of market sentiment. So I'm not saying it's going to happen, but this is where I'm starting to look at my trades more and get a little less exposure to the long delta side on equities.
I hear you. I mean, it's definitely something kind of worrisome when we sit here day in and day out. What else are you looking at overall besides oil? I mean, is there anything in the grains that you're paying attention to? Anything in metals that you got going on? Is there anything like you're doing to offset some of that?
I do like kind of buying this corn pullback, and I'm already in a corn position, but I might get a little heavier. So I'm in a short put spread at 425, 435. It's probably time for me to just roll those prices up. But the thing is, for what?
Which month?
I'm in 38 days out.
Oh, okay.
So, the fertilizer prices are really high right now. Farmers are making their decisions for what to plant. We actually get the prospective planning report. That's an annual report. It comes out once a year on March 31st. It kind of tells you what farmers are going to be doing. But right now, the fertilizer prices are going higher. So it could disincentivize you to plant corn because it's very nitrogen intensive. You have to put down a lot of, nitrogen products into the ground, where soybeans, you don't have to do that so much. So I think some farmers are going to switch acres from corn to soybeans, so you get less corn acres, and then throughout this year, you get a little lift in prices on corn from those lower acres, so or at least supporting the price. So I do like, corn has a 79.3 IBR rank right now.
Yep.
So you could sell those put spreads and do it in a good fashion. So that's kind of a trade I like. I'm not sure if I would do a pairs trade where you're shorting soybeans at the same time. We pushed that meeting with President Xi back. The soybean market did not like that at all. And China came out with some kind of statement where they're saying they're going to buy more row crops. Those are things like cotton or something like that. And the market took that as maybe we'll buy less soybeans. I don't think they specifically said, I don't think saying we'll buy more row crops meant specifically that we're going to buy less soybeans. Actually, soybean exports, I think, for this week actually beat expectations again. A lot of that was going to China. So they're still buying ahead of this meeting. So they're trying to, it's like a preemptive thing to do before you start talks. Hey, we've been buying soybeans, soften up the U.S. side a little bit from that. But I do like long corn here.
Yeah, I actually got long soybeans. And again, they've all been bid, like you alluded to, because of the fertilizer situation. That's kind of one of my haymaker trades, if you will, when things go awry. Obviously, when oil goes back up and there's still issues with the Strait of Hormuz, decided to get long soybeans for that different reason. I just did a call spread, and again, it's only like $400. I mean, it's very small premium, and it's with a big upside to it because again, if we, like you said, I still have like long exposure to the market, and obviously every single day we come in long exposure to the market is either going to get hit if oil goes up. Then there's that yin and yang, and so I wanted to have something to offset that in the event that we see the flare-ups once again. So that's my way of playing it.
Yeah, I agree with that. I mean, and soybeans, you're still 50 IVR. It's still very tradable. Wheat is still like the low volatility product, like we've been all year.
Yeah, why is that?
I don't know too much. I mean, I think some wheat shipments are maybe affected a little bit, but I think overall the fertilizer prices are what's impacting the big planting decisions for corn, soybeans. Just a little more volatility in there. Reflected in the product. I mean, the wheat volatility, it has gone up since this started. We were trading only in like the 20s for the IVR, so we are higher. I do like long wheat staying above the 21-day EMA. Just not as much, you're not getting as much as you are in corn. So, I mean, I'd rather trade that or even soybeans. Yeah,
it's this one hasn't interested me as much for like you said, for that reason. I just feel like there's not quite the volume, but also just I don't know, corn and soybeans are just way more interesting for those reasons, and I think you laid out the reasons why. I mean, it's pretty clear, but this one has definitely not been one I've touched at all. Guys, we are, of course, hanging out here in the YouTube chat on the tastylive YouTube. Please jump in, ask questions. We'll get to those in a little bit. We'd love to get to those. Happy St. Patty's Day, by the way, everybody. Where's your green, bro?
Yeah, I don't know.
I'm just messing with you. I put this on randomly, and whatever, if it has green. I never really pay much attention to that, honestly. It's not something I do. Yeah, I got a little tiny bit.
When is the official St. Patty's Day?
What?
When is the official St. Patty's Day?
Today.
Okay.
Yeah, today.
See, I'm oblivious to that.
What?
Yeah.
What?
Yeah, I do like that colored shirt, though.
Oh, thanks, man. Appreciate it, man. Yeah, a little something. Every now and again. I don't always dress like a hobo. Every now and again, I might dress like an adult. Yeah, this market is not for the faint of heart, man. I mean, this is a different market. I know everybody's trying to compare it to 2008. I don't even, that's totally different.
Yeah.
It's a totally different scenario. It's not the same. 2008 certainly wasn't a war situation, if you want to call it war, conflict, whatever you want to call it. It certainly wasn't, that's not the reason why oil was rising. So I just don't feel the need to sort of make an equivalent in any way to this market to that. I think it's very different. As a matter of fact, I would say back then, the days where oil went up, the market went up a lot of times. There were plenty of times. There wasn't the same it wasn't like an inverse correlation.
No.
It's a strong inverse correlation, what we've seen now recently, because again, it's more fearful. So the only correlation is that oil going up is going to lead to higher gasoline prices. That's about the only thing. And I've already paid that recently. That sucks. I knew it was coming. What can you do about it?
Yeah, I mean, volatility has dropped in oil. I mean, we were trading above 100 in the 90s. Now we are down to 73 on the IB rank. So volatility is coming in. I mean, that could change, I think, but as we get a little bit more baked into this conflict, I think you need bigger and bigger headlines to really, cause some fear. You move to a level, you adjust, so I still think, you could get a wide range. So if you could do an iron condor, I have mine between, where's that? I think it's between 110 and 68. Yeah, 110 and 68.5. So, I mean, I feel fine with oil being a 90 here.
Yeah, I'm kind of stuck here right now. This is one of mine with the 79 and 80 call spread in the money here, and then also the 90 and 91 call spread. Those are the two I have. One of my fears is in this situation, and I was telling this to Nick yesterday, was truthfully, and you kind of hit on it. Look, there could be a situation where this is just the new level, right? Above 90, and volatility might come in. And that's the kind of fear, because then there's no way to even monetize this iron condor at this point. There's no relief in price, therefore it's not going to come back towards my strikes, and vol's going to come in, and it's just going to be, in the money. And at that point, I'm lost. Obviously, anytime your condor gets the strikes breached to the upside or the downside very strongly, you lose on it. And I mean, that's not the worst thing in the world, because again, these are risks defined, but that is, I think, a real possibility that oil ends up hanging out at a higher level than it has in the past. And now, there's nothing you can do about it. So I'm not sure what to do with these yet. I'm not sure whether to just close these and move on. I mean, I got a little bit of time here, but I personally don't think this thing is going to de-escalate inside of 30 days. Like, I don't think there's any chance. And for that reason, it's like, I'm stuck. There's nothing I can do, whatever. Just leave it the way it is. But I do think that that's a possibility that a lot of people aren't thinking about. Oil possibly has a new level, and therefore eventually volatility will adjust.
Yeah. And I'm with you. I don't see this conflict really being wrapped up anytime really soon. So I do think you continue to see oil, trade anywhere from 85 to like 105 around there. I think is a good level, but stay elevated. I mean, if so we have like a group of Marines headed to potentially give the president the option to put them on Karg Island, where a lot of Iran's oil exports go through. I don't think they've made a decision on that, but that would be considered an escalation. It would technically be boots on the ground. Once you put boots on the ground, from what history shows us, is you're there for longer. It's not just taking them out. So
yeah, that's that thing.
Yeah.
And that's part of the reason why I don't want to. Again, I already got 2 iron condors in the money. I don't really want to try to go further upside and add another, because again, we're still waiting for that. And that could still happen. And then that's when that escalation leads to higher prices. And then I'm just like screwed on another iron condor. I don't want to do that. So I'm just waiting for now, like most of us, I think. And again, trying to find other ways, getting the soybeans, the soybeans call spread, right? If there is escalation, at least I can kind of win on that. Because again, I'm already short oil. If you're already short oil, if you're already long equities because you think there's going to be a bounce back, at some point you got to start doing something a little bit different, because you don't want to just keep doing the same trade over and over again. I mean, the definition of insanity, as they always say, doing the same thing over and over again, expecting a different outcome. The outcome is not changing as of right now. Everything seems to be still the same. The dollar is still up. 10-year yield is still close to, it's just dropping below 4.2. Wow, that's interesting. For no reason at all, I think. And we're still seeing oil prices hang out above 90. Nothing has changed as far as the rhetoric. So to me, I don't want to, I'm either going to, like you said, try to find ways to reduce exposure, or add a couple of things that in the event there is the next flare up, I can kind of win on that.
Yeah. One thing I've been looking at is potentially trying to get long like home builders, like ITB or something like that.
A while for that, yeah.
ITB, we're bouncing right off these November lows, so we've had, the 30-year drop a lot, the Treasury futures CB pushed yields up, inflation expectations. That's dragging mortgage rates up. So, the home builders have taken it on the chin. I don't know. Technically, it looks like a good bounce here.
But I mean, aren't you worried about the fact that these rates are going to kind of stay and we're not getting any cuts? That's going to be prohibitive if these things move, right?
Yeah, I mean, CP's bounced back a little bit, but I don't know if we get back to these levels where we were trading the beginning of March and the end of February. I still think there's a lot of buyers that have just been sidelined for so many years that they're saying, screw it. We've saved up for years and years. Like, we're sick of waiting for rates to come down, and new construction is speeding up. I don't know if the latest month's data is out, but before that, it's normalized to an extent. So ITB, I think it's a decent one. I might get in here. What's the other home builder ETF, like XHB? XHB, yeah.
It's been a long time, man. I mean, these things used to be the bells of the ball. Like, you trade these home builders so much years ago. But, of course, that was a different time. It was a very, very, low interest rate time. And so these were just, flying off the shelf. I can't tell you the last time I traded a home builder. It's been a long time. It will come again. They will be interesting, just like a lot of this tech stuff. I mean, the way that the prices have risen over the last couple of years, again, the pandemic brought that forward. And we've left behind a lot of these home builder names. But at some point, again, probably really soon in the next couple of years, these are going to be hot. You just know it.
Oh, yeah. Yeah, I agree.
It's the ebb and flow in the market. I mean, it's just natural.
Yeah.
Looking at the chat here, my man Robert Darcy's in the chat, who thought we had a fake background when we were at the SIBO. What's up, man? How you doing? It's great. Let's see. Any questions here? Used to be a better trading vehicle there, yeah. Oh, somebody believes with you. They believe with you with the market. They were looking for more of a bigger downturn as opposed to just bleeding the way that we are to some degree. SanDisk Micron bearish trade. I don't know, bro. I actually think that these names are going higher. If you had to ask me where I think these names will be by the end of the year, I wouldn't be surprised if they're higher. SanDisk, Micron, and STX, Sticks, as I like to call it, WDC. Actually, I had something working in here earlier and I forgot. I had a calendar that I wanted to try. Damn it, it's gotten away from me very much. These markets are so wide, though, it's almost impossible to put anything on. I wanted to put a calendar on in here. I think this WDC is going to be 400 within the next couple of months. I do. I mean, I know you see charts like these and you're like, this is absolutely ridiculous, this growth, this movement. But something's going on here, and something has been going on here for a while. And sometimes the market is just right on these. And the fact that all of these names are doing it, I think this is the classic thing we see, right? Up and to the right, vol is high, similar to what we saw in Nvidia for a long time. I've seen this in so many different type of names. I think that these names are going to continue to go higher throughout the year. And I'm going to try and find cheaper ways to get long them. But, I mean, it's almost, they're getting to the point. SanDisk is damn near untradeable at this point. I mean, I don't know how you really can trade it. Honestly, it's pretty hard to do. But I don't know about bearish. I don't know. What do you think?
Split. Yeah, I'm not trading SanDisk. I do think Micron, that memory market is, they have a big backlog, I think. Or they're just having, they have demand for years and years. So I think it is a market where they go higher.
Feels like it. It feels like it. They just continue to do it. Nvidia, do you always typically close positions if they're going to expire out of the money? Example, I sold puts on Nvidia for the 172.5 with March expiration, so 1 day to expiration. Yeah. Why you still got this on? I mean, definitely close it. Definitely close these. I mean, this is, first of all, there's no commission on any trade that you're closing, so you should know that. And these are basically worthless. You might as well close these and move on to the next trade for sure. I mean, for the most part, I try not to hold positions this close to the expiration. The only thing I've had was recently I had a couple of SPX butterflies. The put sides were closer to 6,700. I literally closed them yesterday and moved further out. I could have waited for today. I was just worried that they were going to fall through, and then I was going to have to manage them for the next 2 days. And I'm taking off Thursday, Friday. I just didn't really want to deal with that. Probably impatient closing it. But again, I had no idea we were going to move up 50 points today, right? I mean, you just never know. So, yeah, I mean, I certainly don't hold anything this close to expiration. I would close it. Sounds like Jared kind of told you that's a good idea. I completely agree. I definitely do that more often than not. Yeah, I mean, like you said, I've had a couple of positions from expiring out of the money, and 95% pot ended up being a total loss. Take the money, bro. Definitely. You got to take the money. IGV, SMH chart setting up seems quite similar to July 2024. If SPX dips to 6,500 tomorrow, I think it would be a good buy into the end of March. 6,500 tomorrow, huh? Yeah? Wow. These are the kind of numbers that are being thrown out here, Thomas. What I'm not sure about is if it would be led by semis. If I told you tomorrow we dropped 200 points, what do you think would be leading the way?
I think it'd just be oil a lot higher, in this environment.
And what would be down?
What would be down? Stocks.
No group in particular? I mean, it probably would be semis. I mean, if we're down 200 points, they're so heavy that they probably would be. I mean, even yesterday, so Nvidia still got the conference going on. Yesterday afternoon, Nvidia goes up, a little bit. It brings all these different names with it. I mean, you saw Apple even moving. You saw Palantir moving. You saw Meta moving. I mean, they're still such a heavy part of this market that they would probably be the one. I don't know. I have 100 shares of Oklo not covered going into earnings. Okay.
They report after today, right?
They do, yep. Expected move about $6 either direction. That's about 10%. This has jumped back up too. So this was up earlier because of I think they got a license from the NRC, and it actually had faded heavy. And as soon as looks like about 10:30, our time started to rise back. So you got shares considering doing nothing, hoping for a bounce, or putting on a call ratio in April. I like that idea. That's actually a good idea, I would say. Call ratio, 70-75. And I'm not sure where your shares are. I'm not sure where you took delivery, if you just have shares from a lower price. But yeah, I mean, these can be pretty nice, pretty profitable for you, I would say. And you're taking a little bit of advantage of the upside vol. It's $15 out of the money. Again, there's a $6 expected move. I mean, that's not to say it can't exceed that, but it's not a bad idea, I would say. And it can work out for you. So I like that idea. Collecting, if you collected 130 right now, it's saying 119, but if you collect that, it's pretty sweet. I like it. Just sold a Lulu call spread. How do you feel about Lulu? Like the company, not the stock.
The company, I don't know. I mean, I think, didn't they try suing Costco saying your pants are too similar? I think
probably.
I don't know. I think is the fat over on them? I'm not dialed into like fat.
Neither am I.
So.
I'm not dialed into them in general. And I just it seems to be like a fad is over. I mean, just look at the stock price, dude. Like just from a year ago, I mean, this thing is way down. I mean, it's in half. And that to me is always kind of telling over time. There's been barely a lift in it. I feel like not only is the fad kind of over, I shouldn't say the fad is over because people still wear stretch pants.
Right.
Like a lot. People still kind of feel, that's the thing. But there's all these competitors now. There's ALO, there's I forgot the other one. I mean, there's a lot of competitors, I would say, and I think for the most part, that kind of does you in a little bit, right? I mean, I don't know. You could argue whether the stock ever belonged at $400, but again, a lot of that had to do with pandemic. Who knows? EWI, if you're crazy bullish on these memory names, you have to have the guts to be bullish on a chart like EWI because I'm sure they're saying a lot of that production is done in South Korea. Again, I just think I just like the idea of selling vol in an ETF like this. I know it's been crazy, but to me, this is the classic thing that we've seen quite a bit, whether it's silver. A lot of people are hoping to see it in oil, see the bullish chart, huge move, and then eventually the big sell-off, and then now it's kind of middling within an area that makes me feel good about selling the 160, 115. That's my strangle now. I feel good about that because of this huge move. And then now it's sort of trying to find its price. So that's what I do. What else we got here? Palantir suggestion. Long Palantir, add position. You a Palantir guy?
I don't trade it usually. I've traded maybe once or twice the past year. I don't know. There's really low IVR here.
It is. I kind of like, I wouldn't be mad at the idea of if you can pull off a calendar in here. I mean, it might not be that cheap. You could do it being long the earnings, 165, 175. I don't like that one because it's only worth 10 and you're paying 8. That's 15, you're paying 9. Yeah, typically if I do a $15 wide diagonal, I want it to be closer to half the price, like $750. This is a little bit more expensive than I want. I mean, maybe this is a somewhat liquid name, so you could probably use a weekly. 165, 180, that a little bit better, I would say. And the reason why I like something like a diagonal, because I feel like this name can be explosive at times. I mean, you can see, somewhat of a strong move. I mean, again, even off the lows here, the middle of March, like it's jumped $20, right? So I kind of like doing things like that. I don't know the last time I've done just a straight up like call spread in anything. I haven't done many of those in recent times. I mean, even still, this is a $15 one, like 40% pop though. So, yeah, I mean, I think one way or another, I think you're either doing diagonal, I think you're doing a simple call spread, or maybe a calendar, if you want to do one of those. Again, being long the earnings, I think is kind of nice here. You could, even go $20 up if you feel, 175, almost $5. Again, this probably fades if it continues to drift higher. The only problem is the kind of market we're in right now, right? And so these names have suffered the most. It also suffered a bit during the software thing, which we haven't heard hardly anything about. And if anything, we've seen software somewhat bounce back a little bit. Somebody mentioned IGV earlier. We've seen a lot of those names bounce back, I would say.
Yeah, I'm long some software. A couple weeks ago, I sold a put spread in CRM. That's doing fine. I mean, I think, they were being down so much that they avoided a lot of the pain here. So I did like that thesis a lot of going long the software stocks a few weeks ago. I think that was smart.
Yeah, I mean, a lot of times, I feel like a lot of times there's these rotations in the names that have just been, knocked down quite a bit. And we saw those names get absolutely slammed. And a lot of it was like, almost like, unfounded fear, And so as a result, I think once the market started to sell off and certain names were sold off, they started to try to find things to get long. And it just turned out to be a lot of these software names. I mean, even Intuit, which, you could almost argue that it's not almost unfounded fear. I mean, their biggest product is the tax software. I mean, right? I mean, that's something that seems like that could easily be replicated, but lo and behold,
they got a stranglehold on the lobby. So like they're pretty big into protecting their product via lobbying the government.
Yeah, sounds about right. Why wouldn't they be? Why would they not be? I mean, there's so many companies that seem to do that nowadays. Real. Viore. Thanks, Ryan. That's the other one I was trying to think of. Lululemon, Viore, ALO. I don't have any of them, SOXL. Who is trading that? Oh, Iron Condor and SOXL, huh? 32 IVR. This is the three times. That's right. And they're looking at, I'm sure you're looking at May 1. That seems, so this thing is a little bit wide for me personally. I mean, look at these markets, 350 at 480. I don't know if I love that. 70, 75, 35, 30. I mean, good luck to you. Why wouldn't you go regular? I don't imagine it's that much different. This is a little bit better, but these are super wide. I think you can find a way to, I mean, you got to be careful in this thing. First of all, obviously the vols are really high because it's a 3 times ETF. And these markets are just a little bit wide, meaning like when you really want to see a market that's like 310, obviously like 310, 315. I mean, that's more like a SPY. But even if it's not, you want to see 310, like 330. I mean, honestly, maybe 20 cents wide. This thing is super wide, and it's wide for a reason because it's a 3 times ETF, right, on the stocks. And these typically just don't have a whole lot of liquidity in general. Like, how many options have traded in this thing? I mean, look at this. I mean, you got one strike to trade at 2,000. Wouldn't be surprised if there's somebody closing something. But, like, there's just not a whole lot of volume. So just be careful in something like this. You can try to find a way. I mean, I'm pretty sure there's other names that you can get, that you can do an Iron Condor and that are, even SMH probably. I mean, I know it's probably not the same thing that you want, but this is arguably a way better product to be doing an Iron Condor. And again, like I said, these markets aren't the absolute greatest either. 30 cents wide here, but at least you kind of know that you'll be able to get out of this. It's a lot more liquid than that other thing. I can't do it.
Yeah, you want to know you can get out when you have to.
To put your guys on the spot, your predictions for the end of day SPX? End of day? I'll go 67.50. I'll go basically flat.
6,700.
Ooh, nice.
I think we de-risk just a little bit more ahead of tomorrow's FOMC.
Given the short position I put on today, I'd live with that. That would work for me. That would totally work for me. Oil's still kind of hanging out. See, this is exactly what I thought the rest of the day was going to be like. And this is exactly what it's going to be at for Futures Power Hour when Chris and I are on. The market is kind of getting quiet here ahead of the event. Not much is happening. Like I said, this 10-year was below 4.2 for a little bit, but has bounced back. I mean, that's the kind of where it almost feels like to me like we're just going to kind of close flat. But I would accept, even though, like I said, I'm long, I put on a couple of shorts today, I would accept your scenario of 6,700. I'd be able to take those off. It's fine. It's fine. Yeah, man, there's, I'm really just trying to find ways to like de-risk a little bit, but there's not a whole lot of things that, because we're just hanging range bound, it feels like most of my positions are subject to that range, if you will, right? Like the things that I have that are long delta, whether it's short puts or whatever, or other long delta stuff, really take off at 6,800, which is exactly why, like I decided to do that super bear trade there because they're not making the kind of money that I really want them to make yet, and there's no reason to take them off. Right. And if they continued going, I'd easily make more money, even if I'm losing on the short. But the reason why I put the short on there is because that's been the area where we fade. Mm-hmm. So it's kind of like, in between, there's nothing I can do. I think FOMC doesn't help the market. Thoughts? I don't know what that means. How do you take that?
Yeah, how can it help the market? I don't know. I mean, we'll get the dot plot, we'll get the economic projections. I think it's going to come down to what Powell says, really. I mean, but what can he say besides for, we're going to ignore oil prices and continue to eyeball a June cut? Oh no, the cut odds have gone down. I mean, the energy is kind of causing some chaos in the signals for the market. It's all about how long it goes.
Yeah, for sure. This is a developing story, though, this VIX market. I mean, H contract, again, expires tomorrow morning. So if you guys have any VIX options that are in the March, essentially the 0 day, just know that right now, obviously, this is being priced off of this H contract, 2240, 2245. That's why this right here is literally right at the money. And so just know this, at the end of the day, you're going to be done trading this. You can't trade it tomorrow morning, and it will settle to whatever price this H contract settles to in the morning. So if we're down big in the morning, this is where an interesting way can play out. I don't advise this because, so many things can happen in the VIX contract. And I used to work at SIBO. I used to work in their futures division. I used to work on the VIX settlement process, which is a really fascinating process, by the way. And things happen quickly. So, for example, I know a lot of people may hope for the fact that you're long this 22.5 call, we're down big tomorrow morning, and VIX prints at 29 somehow, which would be crazy. But yeah, that would be an advantageous situation to be long this call somehow. On the other end, we could open tomorrow and nothing happens in the morning, and you could be long this 22.5 call, and VIX futures end up printing 21.90. You're out your 50 cents, right? So just be aware of that. That's why a lot of times people, I would tell people, like, you don't necessarily want to hold through expiration unless you just, literally feel like gambling. And tomorrow you think we're going to be down big on the open, which, you never know, could be possible. Or we could be up big in the morning, right? And VIX futures could be down to below 22. Then, you can make money on this. Who knows? I mean, again, you need to understand that this particular strike could eventually move big depending on how the market opens tomorrow morning and vis-a-vis how VIX ends up opening. So just be aware of that. But that's another complexity. Anyway, this whole situation is fascinating because theoretically we are back in contango for the first time in a while. This is trading 22.40. April contract trading 22.65. I mean, it's basically flat between April, May, and June. So that's something that's different that we haven't seen in a while. And bonds are back up. I mean, all is trying to be right in the world, Thomas.
We're trying.
Gold back to 5,000 here. And this has been kind of listless, I think, recently. I actually think that this is between gold and silver, some of the best vol to sell on the board because they've calmed down so much. I kind of doubled down on SLV yesterday. I went to May, and I was short a strangle in April for the longest time, one of my best trades. I've continued that trade out to May, and I'm going to keep that going because I think, again, this has been eclipsed recently by oil vol. Oil vol is now some of the highest on the board, of course. Gold and silver was that. They are starting to fade as their moves are not quite as big anymore. I mean, just look at this. Like 72 handles. It was 118, 139. I mean, this is, 100 plus points in either direction gold was doing every day, and it's just not been the same. Same thing with silver here. 4 points, but we're used to seeing 6 to 10 handles in either direction in silver. It's calmed down quite a bit. You got any thoughts on any reason why? I mean, dollar's been up, but...
Yeah, I mean, dollar's been up, but we've been losing a little bit of the dollar strength. Euro for, the past couple of days having some upside, and gold is still dropping. So I don't like gold or silver here. I just haven't touched it. This is the first full week where I haven't had a gold or silver trade on in probably 2 years.
How's it feel? Does it feel naked? Do you feel naked?
I mean, I was long for the longest time. I would just, in gold, I'd buy long call spreads because the price and vol would expand at the same time. I just don't feel good here. The war hasn't helped it. You figure at the start you'd want gold, but it's all about the dollar. People wanted to get into pure safety. I don't know if we get a bounce back when it ends, because the rate cut forecast is down. We're even looking at potential rate hikes later, into next year. I don't like it. I'm going to stay away for now. If volatility expands a lot, maybe I'll do an iron condor if I can get something like that. But for now, I'm not playing a direction.
Yeah, I haven't played a direction in either one of them for a while. Vol selling, I think, seems to be the best way because, again, the moves have calmed down. I got to say, one of the weirdest things about this whole conflict situation has been the way gold has acted. I mean, typically we would have seen it way higher. Typically would have seen that ratio over 100. we usually do in times of serious like geopolitical conflict, and we hadn't. I think that's just so strange, and it's not going to change at this point. But that was just so weird.
Right.
And to me, I mean, that just kind of tells you something about this, how different it is. So yeah, I'm selling vol in those right now. That's why I haven't sold any in gold. I'm holding off in case there is an expansion. But honestly, I think it's going to be all sort of contraction in the vol, in the metals. Folks, that's our time. That's the show. Thanks for watching. Of course, we'll be back here tomorrow, the usual time. If you want to check us out, you can always get at us on Twitter. I am at Jamal Chandler. Thomas is at FX Westwater. And of course, Mike is at Trader Mikey B. We'll be back here same time tomorrow at 11 a.m. Central. Hope to see you then. Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
When somebody says tape action, what do you think of?
To me, tape action is a little bit of a historical term because that's how they used to relay the different information for all the different underlyings that you could trade. They would share like the price, the volume. So it'd be a way for people to kind of get a gauge for different markets. But now I just kind of think of it as that little line of information on your screen when you're watching your financial news outlets and seeing what all the different products are currently trading for.
What's a Johnny trader?
A Johnny trader is defined as Nick Batista and myself. We are smaller traders, smaller accounts, mid-sized accounts where we can't sling anything we want. We can't do multiple contracts of anything we want. We are really defined to specific parameters in trading in a small way. So a Johnny trader is just someone that might be doing one lots, one contract here and there, or trading smaller price products.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Baby, your love is too good.
What is going on, everybody, and welcome back to Risk and Reward. Today's Tuesday. We got a little bit of a choppy market, but we had a gap up and a little bit of a continuation. So we've seen some direction in the market, and it's holding its gains so far. So we'll touch on that, some oil, some metals. Before we get into everything, brother Gus, how are we doing today?
Doing good, yeah. St. Patrick's Day today.
It is. I forget. Yeah,
St. Patrick's Day. You do not have your green on. You are wearing all black.
Did you peep that earlier?
I did. I didn't feel the need to pinch you or anything. I'm not that committed to the game, but I am wearing green pants myself. Let the record show.
There we go.
Errol can attest.
You got some
more of a forest green, really. It's not like a proper like St. Patrick's green, but it counts. You know,
green is green.
Colors are a spectrum.
Yeah.
And my portfolio is dressed in green as well.
There we go.
For today. So
it's only right. It's only right. It's St. Patrick's Day.
Yeah, always pleased with that. Just eking up a little bit higher on the indexes. Oil a little bit higher, metals a little bit lower, crypto holding those gains. So it's a good look for anybody with a little bit of long delta going on.
Yeah.
And trying to see if any of these pennies are panning out. I actually don't think any of them are. I think
you got to give them some time.
I think all of them are red. But yeah, that's all we're doing is just sitting around and waiting for the one day when we catch a run. So yeah, I'm a happy camper.
Good. What's going on, Brett? What's going on, Josh? Superstar. What's going on, guys? What are you guys looking at? What are you guys trading? And what's been top of mind? Again, I've seen the conversations around crypto picking up a little bit again, too. So I know we were touching on that yesterday. I think if you got a little bit of long delta on in there, too, that's been holding and been working out as of late as well. We can go ahead and just jump right into the Tasty platform. We don't really have too much going on over here on my end. We traded a little bit of the NASDAQ today. And then we're trading a little bit of QQQ. We got some short-dated contracts in there. As we were trading at the highs, we sold a couple spreads. We had sold some yesterday too. We chopped those for about a $40 cut, and then we threw 2 more on today. So those are 3 days left till expiration. And those are just to express the trade idea over the next couple of days. But if we begin to reclaim certain levels that we'll touch on here in a little bit, we might take those off a little bit early because we don't want to realize a full loss on these ones. It's not the intention, at least. But with that being said, I mean, we got VIX coming back in a little bit over here. So anybody getting short some VIX, that's coming back in. The volatility that we've been seeing over the last few days has been nice. It's still been different from what we've really seen. But what's standing out for the most part on your end? I know we got VIX, we got SPY, got the gap ups.
Yeah, my long puts on VIX are actually red today, which is interesting. I don't know exactly what's going on with that. I guess the premium is just collapsing as the VVIX, the volatility of the VIX begins to collapse a little bit. But yeah, still plenty of time on those.
It's coming in still. Yeah, I'm surprised a little bit too because it does look like it's taking a stair step down today. It's making lower lows, taking out some lows that we had put in last week on VIX as well. So maybe we just need to give it a little bit more time because if we get another rally towards the highs, I'm sure we'll probably see that come test near 20. If we could see something like that.
I was surprised to see this as well. I have 4 of these contracts on. They're down $4 a piece notional. So that doesn't sound like much, but I mean, on a percentage basis, that is like, I don't know, 5-6% of each of these contracts. So strange to be seeing that. Aside from that, I don't know. I mean, crypto doing well for me. We're just eking a little bit higher. These IBIT longs starting to look better and better. My bottom one that I put on most recently, which is the top of the ladder, has managed to flip green for me, so I'm pleased with that. Have the ETHA leaps on as well that Jared and I got on together. Those are looking good. That was a pretty perfect little bottom tick there. Target shorts have flipped back to green today. Got that cooking, and that's sort of it for me. NEO and NIO is one that I'm eyeing pretty aggressively. I put on a fairly aggressive short position on this last week. It was something like 8 to 10 days to expiration when I put it on. I have a short call vertical at 6 and 550. So we did. The issue was that I put it on amid this big green candle. I believe that's last week Monday or Tuesday. On the gap and then run with that candle. It looked like the top was coming in, and then it did manage to just eke a little bit higher, like added 40 more cents before it looks like we might have gotten a doji on the top there and might be working our way back down.
Yeah.
So those are 3 DTE now expiring on Friday. So I would need a pretty large move there, but we're down like 90% on those. So I'm just going to let it eat. It was a very small position. I knew it was a high risk, situation as I got involved. Hoping we can get a break below 550 there. That's what I'm monitoring the most closely. Other than that, it's just all the long delta gradually moving green. My Zillow position still looks just horrible.
What's been going on with Zillow? What's been going on with these housing listings? Yeah. What do you think really is hitting Zillow? What do you think is going to be the effect on Zillow with all this AI, just hypothetically speaking? I mean, I know we can see them use AI to their advantage, but...
Yeah, I agree. And I mean, especially with, because I just sort of said initially, because Google said that they were going to start working on housing listings was the initial thesis for this trade. And that really knocked Zillow down a peg. But that was before this giant rundown that you guys are seeing here. That's the gap that Errol's mouse is pretty much on right now, was caused by that Google news. And then it just has continued to slide. AI seems to be hurting it. And I don't really see how AI should hurt Zillow that bad. It feels like, if you ask ChatGPT to find you some houses, it's probably going to use Zillow and give you a Zillow link to go look at.
So you might think...
I would think it should be tied in a little bit more, but the market does not seem to have that belief. Hurting pretty bad on these longs.
Something that I think is really interesting too, because you would think a lot of these SaaS companies, a lot of these software companies would just incorporate that AI into their model. Something I've seen was, Canva, for example. Canva has blown up in popularity. It's a graphic designer studio that allows you to create graphics and little templates of whatever else you want to create. And something I've seen is some creatives using Canva inside Claude.
Yeah.
Right? The other way around, instead of seeing Canva develop that AI and then use that for your efficiency process. You know what I mean? So kind of interesting how we're seeing the AIs of OpenAI, Claude, and all of those, pulling from those other third parties rather than the other way around.
Yeah, and Figma is a similar graphic design service.
What's Figma? What is that?
Its ticker is Fig. They're actually publicly traded, just IPO'd earlier. Well, I was going to say earlier this year in 2025. It was a really exciting IPO and went flying up. You can see that gap. There are pre-IPO candles, but it's fake. It's fugazi. But early August last year, we had that giant gap up on IPO, up over 100, and then it's just slid and slid and slid. But that was the reason for the initial excitement, was all of the AI tools that they had for graphic design baked in. So it's the reverse of the Canva situation, where they decided to go straight at it with AI. That initially excited people. Hasn't really panned out. It seemed to find a little bit of stability at this 25 to 27 level, but this was one I talked about on air. I had people who are not involved in the markets at all texting me saying, "Oh, should I buy Figma on this IPO?" And I was like, "No." I was like, "Please don't." And you texting me is the biggest bearish indicator I've ever seen. I might have to get short now, and I wish that I did.
Like you just answered the question.
Yes, exactly.
You texted me with a little bit extra information.
Once if you're hearing about it, we are officially into sell the news territory.
Yeah, and it looks like exactly what we got over here. I'm curious to see how those are going to work out. I'm just a little bit surprised about Zillow. To be honest.
Mike said, Gus wanted to say thank you for the heads up on Bax. Used to work there years ago. Put on a 17.5 short put in April, up almost 30% today. Might take the money and run. Good. Happy to hear it, Mike.
I'm a shareholder again. Baxter International.
Yeah, I have long call Leafs on myself at the 35 strike for January 2028. So I'm certainly going to continue to hold. They are still slightly red for me. A toll-free call. Who sold my phone number? So one of you people, don't do that.
Did it say toll free? Does it say scam likely? That was a good one that they added. Scam likely.
I like the scam likely. No, it just says toll free call from an 844 number. So we're gonna hard pass on that. But yeah, this Baxter International, this was a Congress trade. I saw Congress putting on 6-figure swaths of Baxter, which is a very strange spot for it with how beaten down it's been over the last 3 years. It's at 6-year lows right now. So once you start to see powerful people coming in and scooping stocks that look that bad, always presents a interesting buy opportunity to me. So I elected for the Leaps because obviously they're buying shares. Nobody in Congress, save for Nancy Pelosi, is slinging options. But there's clearly a long-term thesis there. So leaning into the long-term angle. But yeah, happy to hear it, Mike. That's a good way to attack it. The 17.5 short put. And I would say it certainly wouldn't hurt anything to take the money and run, especially if your expiration is in April. I have a much longer thesis on it, but if you're up 30%, just take those profits. Nobody ever went broke taking profits.
It's St. Patrick's Day.
St. Patrick's Day.
Better day to do it. Take the
Baxter,
pot of gold.
Irish name. I don't know.
Kick it pass. No, we can go ahead.
Thank you, Brett. Appreciate it. ENG helped me rally help me exit some of my 320 SPX. Good. The Errol and Gus rally is real sometimes.
It's real. It is for the airline industry, at least.
I love to take more credit, but really, I think it's just that we're right like in the middle of the day, which is usually where
right
the
after
start to turn is like after the lunch window, and that's when things will start to turn around. If we're gonna go red to green, it will happen on this show. But but I mean, it's really because of us though.
Yeah, 100%. No, I know we pulled some data not too long ago, and I think the most active time windows was the first 2 hours, and then I think between 1 to 3 is central. But it's looking like this airline industry is catching a little bit of a rally here. I know this one was on. I know Jamal had UAL and I think DAL on Trader Fade on one of those segments a couple times, and they're really catching a bid. I feel like Delta Airlines is one of those ones that you can never count down on. I mean, those are ones that get helped by the government, no matter what's going through some of these names. So they've been catching a little bit of a bid. So if you have some long Delta on in the airlines, I know that's probably been really nice on your end. We got some earnings coming right around the corner on some of those.
Yeah, on our social media series, Split Decisions, this morning, Tony actually gave an interesting thesis on American Airlines. So that would be his pick of the litter, just because of how cheap it is, and the expected move is like $3 or $4 in the next year. So if you can be directionally right, that's huge on a percentage standpoint on a $10 stock. So there's maybe a little bit of room there, and I think, I mean, if you made me play it, it would have to be upside with how beaten down this thing is. I'm actually sitting here thinking maybe I will get long. I'm not going to do it with these oil prices. That is scaring me. I think the fear is going to continue in the airlines as long as oil stays elevated. And being short oil already, I don't feel like I need to reaffirm that sentiment by getting long airlines at the same time. I'd rather just be short the oil. Oil logging slightly higher today. Not higher highs. Not back at the peak just yet. But up another 2.5% today. USO is the vehicle that I've chosen for that. But yeah, I mean, as long as on USO, we just really, as long as we don't make higher highs, as long as we don't eclipse like 125, I'm feeling okay about this position, because that was sort of my whole thesis in the first place, is just with how elevated we already are, with most of the fear already baked in, with the Strait of Hormuz already closed. It's like, what could happen to really, send oil to a whole new echelon?
Yeah.
So that was the main part of my thesis for getting short. Plus, I had a little bit of house money to play around with from my first oil short when I managed to get out on the fake out collapse. Have two shorts on there, July 17th 75 put and a May 15th 85 put. So some playing the levels there. Just hoping the conflict will resolve itself sometime in the next 60 to 120 days.
Yeah, we got some good time on those there. Some of the metals too. Go ahead and check out some of silver, some of gold. I kind of gave up on the metals trade over there. I know the volatility kind of died out on us. I feel like the trade more is so in oil. Indices is always on the back burner, of course, but seems that oil is taking all that liquidity, all that volume into the market to be kind of in play for that trade that the market's kind of watching right now.
Yeah, these silver shorts are hanging out just close enough to my strikes to scare me, but we are well clear.
You got some shorts on, right?
Yeah. I'm short SLV. I have a 77.75 short call vertical that's 59 DTE. Obviously wishing I would have been tighter with my expirations on that. I didn't necessarily think that we were going to get back below 75 this quick, especially in these times of uncertainty, but we have.
What do you have on there again? How much time you have?
It's a what?
How much time you have on in there again?
60 days, 59 days to expiration.
Still pretty solid window.
Yeah. I mean, and again, the whole thesis here is similar to the oil thesis, just that, these are a risk off sort of vehicle that people will use in times of uncertainty or times of fear in the market. Yeah. And so I was thinking, while there might be a little bit more to come, we're just in such a weird spot with the metals because we already had the run up, and it's hard to even use them as a risk hedge when they're as elevated as they are. So I was like, how much higher could we realistically get? And that's panned out a little better with silver than it has with oil. But it's scaring me. We're just moving sideways right here at this level, and it's starting to, I don't know. It's just feeling dangerous whenever it's not decisively moving in the direction that I need and or well clear of the strikes. When we're just hovering, consolidating right around this level where I feel like I can still get burnt, it's scary. But plenty of time, even if we were to all of a sudden jump back up above the 75 level.
No, I like it. I think I'd rather be sitting short in here rather than long right now. And then especially with what the metals have been through and with oil taking a lot of the attention, I honestly wish I had a little bit of short delta sitting in here. I just don't like the favorable risk to reward at getting short now as we've pulled back over these last few days. But,
yeah, and the premium has kind of gotten zapped out of these. That was part of the thesis for getting in and choosing the verticals as the vehicle was to take advantage of some of that call side premium. Now that we're just consolidating, the volatility has been removed a little bit. I don't know. I mean, IVR 47 is still a little bit elevated.
Yeah, it's not terrible. You know, I mean, you could get long, you do the debit, credit, whatever the case is, but from a percent perspective or a range perspective, it does seem that it has a lot of range to go still from relative to the rally that we had seen earlier this year.
Yeah, and I'll tell you what, really, Bitcoin is in a similar situation here where it's like it's higher and it feels like I should be starting to feel good, but we're not really getting the decisive move anymore. We sort of had two nothing burger days back to back here since we initially logged this 74 level, basically unched on the day to day, down 0.03%. And yesterday was even more unched than today. So it's I don't know, it's looking scary, but this at least feels like bullish consolidation. We made the higher highs, consolidating at those levels, seem to be finding good support at around 74.
Yeah.
So hopefully we sweep through and move even higher in the coming weeks. Still have hundreds literally of days on all of these contracts. 304, 657, 640, 675 DTE are my 4 IBIT longs. So time isn't exactly of the essence yet. But if it wants to go ahead and move, I wouldn't be opposed.
Right, absolutely.
These are all gamma plays in the first place anyway.
100%. Anything else on your end on the Tasty platform that you want to get into before we shift gears here?
No, I wouldn't say so. I mean Rivian.
Yeah, RIVN.
Rivian doing the thing.
It's doing its thing.
Yeah, just
we're on the daily. This is a pretty big rally.
Yeah, another good daily
really large rally. Yeah,
yeah. This is what Rivian does. The tops and bottoms, and then working back towards the tops. So when this thing catches momentum, it often catches momentum hard. So this is one where Rivian is a stock where usually in the face of a day like this, and I already am long. This is not a thesis that I'm going to put on a trade right now or anything, but. Usually when a company has a day this good, I would always be like, I'm not gonna get long in the face of this move. This feels like it could be overextended, blah, blah, blah. But with Rivian is unique in the way that it will often, it's sort of a momentum stock. If it's moving up, it moves up hard and fast, and vice versa. So it's not necessarily as dangerous to try to get long in the face of a giant green candle like this.
Yeah, no, it's definitely has that like parabolic type momentum-y feel to it, just from a visual perspective. But with that being said, let's quickly touch on SanDisk. What was SanDisk up to today? I know this one has been going on an absolute tear towards its highs.
Long and slightly higher highs there. I suppose we are at all-time highs? Not quite. No, 723.81 all-time high. So not quite back at those levels yet. That was back in February, early February. We touched those levels. So testing them again, but maybe some resistance coming in.
Yeah, I mean, these are, at its highs right now. The premium's not terrible. I don't even know if I want to put something like this on, but if the premium was there, I know it's only $10 wide, and I don't even know if I want to assume that much risk on this type of swing position. Because, I mean, we keep ripping towards the highs, and do I want to take on an extra $675 worth of a potential max loss? I don't know.
I mean, I'm tempted to get short as well, I must say. I mean, it's like... It's freaking SanDisk, man.
And it's at its highs right now.
Yeah, and we're at a 15x. In the last year, feels like at a point this must become overextended, and we saw that happen the last time that we tested these levels. I mean, we ripped all the way to over 720, and then February 3rd to February 10th. So literally one calendar week later, we went from 723 back down to 540 in 7 calendar days. So. There is downside momentum if it comes, but at the same time, it's like, do you want to step in front of this face ripper, especially for the risk profile on those? I feel like if I were going to attack it, I would. What expiration cycle are you on? 59. That's the same one I was thinking. I would maybe even go a little out of the money just to try to take advantage of some of the premium here, and because if you catch the downside move and it comes through big, like where's the this?
These are some pretty wide markets, surprisingly, on SanDisk right now. I know we're fluctuating around 450 on the bid ask, then we kind of shoot to around 390 in a second, 415. I mean, if we can get a decent fill, I think it's a solid one. Where are you looking? A little bit further out? Is that what you like over there?
Yeah, like this, this is just insane spread. I don't know if you could even possibly get a fill on this, but I'm looking at like the 690, 680 on this same expiration cycle, which is 290 of buying power for 710.
You're selling the which one?
I'm selling the 680. Buying the 690.
Selling the 680 calls?
Yeah.
Got you.
That's what I have set up here.
Oh, I got you.
Yeah. Going a little more aggressive here. But the risk profile on this is very attractive. And especially considering the last time, actually the last 2 times that we've been near these levels, just 5-6 candles later on the daily chart, we're down $100+ So if with those types of moves historically logged and the 3 to 1 risk, 2.5 to 1 risk profile that you're getting on these, that is a little bit attractive to me. But that's all predicated on the idea that you could get a fill on this spread, which is $17 wide.
Yeah, I know it's a little jumpy right there.
Yeah.
But no, I mean this spread is not terrible. I know the spreads are getting a little tighter as we go in a little bit more here, but I think we definitely keep SanDisk on the radar at least. I mean, if you can get a good fill too, I mean, I think whatever you do choose there, it might be worth a shot. Might be worth a shot.
Yeah, I don't think I'm gonna pull the trigger just because I don't know if I want to step in front of this, but I feel like a week from now I'll be having crazy FOMO that I didn't press send order on that one. But yeah, that's everything I got. If we want to go trading view.
Yeah. We can go ahead and jump over here to trading view. We took a few trades here today. We were trading above our level of value over here. So initially we were just kind of looking for a pullback into that level of value for a little bit of a dip buy. You can see we got stopped out pretty quickly. What was that? Maybe a 5-10 point stop over there on a couple contracts or a few contracts right there. And then we started trading outside this level of value again. So I'm like, okay, if we get a pullback to value, maybe we can come and take out these day highs that we put in over here in the morning. So that was kind of the thought process. Whenever we pulled back into our level of value, we then started to see a little bit more momentum kick into the market. And as we came over here and took out some of these swing highs, started to scale out some of the contracts. And then the market was just it was just taking a little too long. I think we started to see a lot of choppy price action. So we were going to hold this last position that we got out right here from this trade. We were going to hold this to these day highs over here. If we can draw a straight line. I'm not much of Picasso for sure. But we were looking to see if we could at least take it to that swing high that we left over here in the morning. The market just started to chop around a little bit too much. And it was just a personal decision to take it off and be like, you know what, I'm not too comfortable sitting in these markets and playing the waiting game. It's like whenever there's a trade that starts to feel like it's running on hopium is usually where I'm like, all right, if I'm sitting break even on this or if I'm up a little bit, might as well just take that off and redeploy the capital elsewhere if we're given another opportunity. But that was really the most decent opportunity I think that we got for the day. The markets have been pretty choppy. The market pulled back again towards this level of value, and we cut it after 4 points, just because we noticed the market seemed to struggle above 25,035. So after that, just foot off the gas. Whenever we rallied back towards these highs, we ended up selling an out-of-the-money call spread on QQQ. So we sold a couple of those. We might take one off before the close or, de-risk a little bit if we reclaim this level of value over here. But until then, we'll be patient and see what the market wants to give us. If we can come down here and test this value area low, I think things will get pretty interesting, whether that's going to be a long or a short. But until then, we'll be patient and sit in our hands. You sold a March 20 S&D K call spread today, 780, 790 worth the risk for time. Yeah, $10 wide. I mean, if you're getting the premium as well, sitting towards its highs.
Yeah,
I mean that's something I'd feel comfortable taking a loss on, to be honest.
Yeah, that's a much more that's a fairly conservative way to attack it as well. I mean, 780 would be like 10% above all-time highs. So it would take a pretty considerable move above any precedented level to really hurt you there, and especially with the expiration. Oh yeah, your 3 DTE on that. I feel like that is certainly a much safer way to attack this, especially if you have the buying power to tolerate it. I'm with that. Because I mean, when you're already pushing all-time highs, when it seems like there's resistance already coming in at those levels, and then you would need another 10% move in the next 3 days, it's like it would take something quite incredible to beat you on that.
I like it. I know over here again, I was looking at it's going for 390 right now in the May 15th cycle. But I know you were talking about March 20th. I'm curious to see. Oh, March 20th expiring at the end of this week.
Yeah.
I got you. I like that actually. A little more short term. It doesn't seem like you're collecting too much though, huh? It's not that much. Let me see, $1.35.
$1.35.
No, it's not that much, but I mean, you could manage it a little bit early, and then also it's a little bit past that one standard deviation call that you're going to be selling to the upside.
I'm actually surprised to see one standard deviation that far out with 3 DTE, but I guess it just has been insanely volatile.
Yeah.
So,
Markets seem to be jumping around in the 10 to 15 point range. Anyways, I think I'm going to keep an eye on that. I might send something through on SNDK. I think it's worth considering at least before the market closes. But no, with that being said, we'll see how the market wants to respond again. We debated on taking another short at this value area high, but I'm kind of just in the boat to wait for something that I can have a little bit more confidence and conviction in so we can start building a little bit more momentum for this week before we really start pulling the trigger on ideas that we like. And with that being said, we can go ahead and quickly check out where Bitcoin has been on the futures market, at least for Ethereum and Bitcoin.
Yeah.
Where we're sitting right here. Oh, actually, we are out of time. It's like, actually, I don't know. We're actually right out of time. I was like, wait a minute. No, so we'll see what we get. We're just going to be really patient to pick our spots when it comes down to scalping this market, especially with the increased volatility that we've been seeing. I think it'll be worth it to be patient for those opportunities. So
yeah,
we'll see what we get there. Anything else top of mind before we wrap for the day?
No, nothing for me.
SanDisk is interesting. I think we got to look at it. But with that being said, that's going to be it for today. Ansa, Tafe, Brendan, Brett, everybody else, Rancher, thanks for taking the time to hang out with us. Be sure to stay tuned for more segments coming on next, and we'll catch you guys next time. Peace.
We wanted to call in because recently, some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted, and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you. This was
awesome.
Not a paid, you're not getting paid
Right.
for this advertisement.
If your trade's not going how you expected, it's not necessarily that your assumption is wrong. Maybe it's just not right. Yet. Rolling is managing a trade by closing your position and opening another one like it for a credit all in one order. The cool part is that you can change the expiration to get more time, or you can tweak the strike for a higher probability. Usually we want to roll the expiration instead of the strike. Remember, duration over direction. Exactly when and how to roll trades is a learned art, and it can be a little bit subjective. Usually we only roll if we haven't changed our assumption, and we almost never roll winning trades. If you have changed your mind, don't roll. Instead, you probably want to close it if it has undefined risk, or just let the probabilities play out if it has defined risk. So before you cut your losses, consider rolling the expiration or maybe even the strike. Pretty simple.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
We're back. It's still Tuesday, March 17th, 2026. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's your co-host, Jamal Chandler. Jamal, how you doing today?
Doing all right, Chris. How you doing?
I don't want to say bored. That's certainly not the way to describe these markets, but all things considered, it's a pretty quiet day for our stock markets here, although maybe the FOMC meeting tomorrow has something to do with it.
Yeah, I'm kind of bored. I'll say it for you. I mean, that's kind of the way it seemed that things were going to go once we got to midpoint in the day, and I think we're basically square within the window where nobody really wants to trade a whole lot, right? Feels like it.
Pre-FOMC drift, 24 hours before the Fed meets, the market typically quiets down, and we are on the precipice of that now. President Trump was calling for an emergency rate cut this week. Not getting an emergency meeting, although the Fed did meet today, not at his behest, but that's because how the schedule works, Jamal. We aren't going to get an emergency rate cut tomorrow, at least if the CME Fed Watch tool is accurate. Oops. I point that out because as it stands, the market is not pricing in the first cut until September. There was a brief flicker on the screen earlier today where the market was pricing in a greater chance of a hike tomorrow than a cut, which obviously not really the way that we're thinking about things. But it's interesting to see how the market's now dealing with this reality that the inflation issue is going to be sticking around a little bit longer. The Fed's hands are going to be tied. And we do get a new summary of economic projections. So until the FOMC gives us the green light to keep going with this meager market rally at the start of the week, feels like we're kind of going into a holding pattern between now and maybe 2 p.m. Eastern tomorrow.
Yeah, I mean, there's definitely a holding pattern between that time period. There's also a larger holding pattern, like you said, with rates. I mean, there's no way we can cut given this Middle Eastern situation. So it seems as though there's not going to be any movement on any rates. Although, I think the interesting part is how other countries are going to maneuver. And I'm sure you'll probably get to this, but the idea that the RBA raises rates, right? I mean, I wonder if that's going to be something we start to see from other countries at some point, but because we're definitely not moving. I don't see how we can. And I'm of the mind that I don't think this situation ends quickly. I think it ends, much later than expected. So how in the heck can we change rates?
The RBA raising rates, to me, piques my interest, not because the currency fell thereafter. It was a split decision, 5-4, so not unanimity and certainly no consensus as what to do next. But 2022, what central banks were raising rates first? It was the commodity currency central banks, the RBA, the RBNZ, the Bank of Canada, the countries whose currencies sit at the tip of the supply chain when it comes to these sorts of issues. So the RBA hiking rates, it's certainly something that we could see other central banks join in, maybe not this week, but perhaps over the next few months. Jamal, whether or not the Fed tells us anything of interest tomorrow, we're going to have to look to the summary of economic projections, Powell's press conference, of course. He's probably wearing a purple tie, although I don't know if purple tie means time to buy this go around. Let's turn our attention to this equity market move here. This is giving me lots of trouble today here, Jamal, these new hands. Turn our attention to the equity market here. We find ourselves at the same levels basically where we were yesterday. 6770, 6800 or so. We're trying to pivot through that early March swing low around 6770. We're doing a little bit more progress through it today. But just like yesterday, that rally that we've had cut short as we go into the later part of the European trading session. So Jamal, volumes here, they're not exactly light. 1.2 million contracts have moved across the screen so far. Volatility coming in is perhaps the biggest change. We did see IVRs back into the 20s today, whereas they were in the 40s at the start of the week. So talk to me about this little consolidation we have going down here in ES. What do you make of it in the context of this decline in vol?
Yeah, the consolidation is exactly the thing I'm paying attention to, Chris. And it's centered around the upside of around 6,800, somewhere between 6,800 and 6,850. I think it's pretty clear that today we faded right off of 6,800. It was 6,808, a little bit above. But I mean, that's the area. It's been the area for a while. Again, that was the lower end, right, of the area for the first couple of months, 3 months or so, dating back to December, 6,800 to 7,000. It's tightened up some, and now it seems to be around 6,600 to 6,850, I will say, and maybe even tighter than that within the week, if you will. But 6,800 to 6,850 is an area we tend to fade off of, and that's exactly what happened today. I know I put a short spread in the SPX around there. It was a Super Bowl selling the 6750, 6760 call spread to finance buying the 6700 to the downside. We've danced on that 6700 line for a while there, and I wonder if that's something that's going to happen between today and tomorrow. We'll see. I don't imagine there's going to be enough selling velocity towards the end of the day here to get to 6700, but that's the channel. That's the new channel now, and so I think you just have to adjust accordingly.
Yeah, you mentioned the down channel here remaining in place. It's one of the reasons why I'm not getting too jazzed up about this rebound at the start of the week. To a large extent, it reminds me about the price action from last week, where on the other side of the weekend, you get some concern about oil. Oil prices come back in because the situation's not escalating. Equity markets bounce, and then you go into your second half of the weekend, things just kind of start to slip away. So not to say that the market's going to rhyme so perfectly, but we do have this FOMC meeting tomorrow, Jamal. I'm just having trouble. Work with me here. I don't even want to frame the conversation. If you're an equity market bull, what is Powell going to say tomorrow that's going to give you ES at 6,900? What will you need to hear from Powell?
I will need to hear from Powell that he somehow has something to do with the dynamics of oil, because that's about the only thing that's going to get us up that high. I mean, there's nothing that I don't think he can say that gets us to those levels. Because again, I mean, there's strong resistance at 6,800 to 6,850, and that's all related to the price of oil, I feel. So unless he has something to do with oil, Chris, I don't see how anything he can say can lift markets. I could be wrong, but I just don't see it. I mean, that's obviously the number one factor here in why markets are so low. And unless that price changes at some point, I don't see any higher prices in equities.
You know, it's one of those tough situations, and I argued this point in 2022. Granted, maybe it was wrong, but dealing with inflation from an energy supply shock or supply chain issue, does raising rates help that? Resolve that problem at all? What about lowering rates? I mean, maybe lowering rates incentivizes the flow of credit into businesses that would take advantage of the opportunities of the market being out of equilibrium to bring it back into equilibrium. So for example, if oil prices go up to 120, someone out there says, I'm going to borrow money to open up a new rig and pump that oil out of the ground, right? Would higher interest rates help facilitate the buildup of new infrastructure to relieve supply chain issues? No. But then again, are you going to cut rates? And as inflation's raging in some places and people are burning a hole in their pocket, do you want to give them access to more capital? Right. So it just leaves policymakers in an absolute stuck spot. Now, I'm curious if the Fed says, Powell has this whole tiff with President Trump. It'd be very funny if he goes, this is the best economy in the world, as we're repeatedly told. It's a golden age for America. We can afford higher rates. We can afford higher rates to curb inflation. Let's go for it. Lessons learned from 2022. It's not so transitory after all. We have to take these risks seriously. I mean, that to me is going to be the wild card. If Powell at all makes any references to mistakes made in 2022, that probably scares the market, because the issue then was not the Fed hiking, it was that it didn't hike soon enough.
What do you want from here, Chris? I'm a trader. I really couldn't tell you if there's any chance for you to raise rates or lower rates that'll stimulate the market. I can say it's clear for Trump, right? He's a former real estate guy. He's always going to want lower interest rates. I don't think that's ever going to change. I don't think you're ever going to be able to convince him otherwise. And so therefore the administration is just always going to push for lower rates. But I think, right now, I think we're really kind of in this very precarious area for markets. It's starting to feel like this is something that could just drag on for a while. And that's the real tough part, right? Like, how do you adjust for that in a market where clearly, right now, 67 seems to be the downside. 6,700 appears to be. There could be new downside. I know people are starting to talk 6,500 in case things get worse. Who knows? But to your point earlier about volatility, it is nice to see volatility contracting some. It gives you some reason to believe that maybe, at some point things calm down, even if we do have a new level in oil price, and we'll get to that at some point. But I also think it's a good point it's probably a good time to admit that even though we're seeing this age contract come in, it does expire tomorrow morning, which is going to be somewhat interesting, I would say. We always seem to have those Fed meetings where it just expires right before the Fed meeting, and then the new contract comes up, in this case, the J contract. So those are all pretty much flat. J, April, May, and June are all pretty much flat across the curve. That is obviously subject to change depending on the type of move we get on the other side of the event tomorrow. But I've been sitting here wondering, like, what is even tomorrow about? Like, we've had plenty of meetings, in the past where we're like, we're not going to change rates. It's all about what he's going to say. But I don't even think there's anything he could say tomorrow that's really going to affect markets. I really have been racking my brain. I really have no idea. I mean, do you?
Not sure how the Fed can react so upfront. I think a good point of reference here would be to go back and look at what the Fed said in the March 2022 FOMC statement, where, because it was so close in proximity to the start of the war, and you think about the timing, it was February 24th, 22, before you get to your Fed rate decision in mid-March. So it's, the Ukraine-Russia war wages for about a week longer than the U.S.-Iran war will have waged prior to the March Fed meeting in 2026. So they didn't really react then. They were very much in wait-and-see mode. I don't think anyone should be of the mind that they're committing to any direction. I don't think they're going to commit to saying, we're definitely not cutting rates anytime soon. They're just going to say, we don't know. The fog of war is too great, which brings back one of the issues and one of the analogies that I used to use back in 22 and 23. I mean, in 22, the Fed was saying, we're in the driver's seat. Everything's fine. Don't worry about what's ahead. And everyone's looking around and going, yeah, but there's inflation ahead. We can see it. It's like right there in the middle of the road. And the Fed's looking back and, one hand on the wheel. Oh, don't worry about it. We're fine, And once the Fed sobered up and had two hands at 10 and 2, even if there was inflation ahead, the market would say, okay, well, the Fed's got it. It understands the issue now. And everything calmed down in 22 once it became clear the Fed understood the scope and scale of the problem and was acting with the alacrity and urgency to help stem the problem. So I think that's probably the most important vibe to get from tomorrow. It's not a number on the summary of economic projections. It's not going to be, did their inflation target move up by 0.5% versus 1%? It's whether or not the Fed itself is clear-eyed, sober about the risks that come ahead, and it's willing to adjust its course of action depending upon what obstacles appear on the road in front of it. But the whole, we're not worried about this, it's transitory, we're going to keep our head in the ground, like that is not going to make anyone happy. So let's hope Powell avoids that problem and has learned the lessons of 4 years ago.
Transitory. That was a fun time, wasn't it? Man.
I'm waiting for Kevin Hassett to say it. He's going to say it. Him and Howard Lutnick. They'll say it.
That's going to be great. That's going to be
great. I want
a
polymarket on this. Someone make a polymarket on Lutnick saying transitory. I will take that. Okay, so speculation aside, right? And we say today's a bit of a boring day and not much has changed. That's probably why we're hemming and hawing about the Fed tomorrow and not today's action. What has changed here, Jamal? We're a little bit above the 1 week moving average, which we couldn't get through yesterday. I suppose that's still the line in the sand, roughly 67, 70 here in ES.
Yep.
Even if you're through there, triangle resistance on the shorter term time frame is going to run into the 1 month moving average up near 68.55, 68.60, depending upon what day we run into it there. So give me 68.50 tomorrow after the Fed, Thursday, that we've cleared this downtrend, that we've ended the consolidation, that we've made it through the event risk. And then you'll find a believer, somewhat of a believer in me. But until then, I'm looking at this very cynically, and I don't buy this bounce, given the state of everything else in the market.
I'm actually a little bit surprised that we did bounce today. I was expecting us to be down, honestly. That's why I was all too glad to at least sell a little bit into the bounce, especially once it hit 6,800, knowing that it possibly could have gone to 6,850. But again, I would have been fine. I have long deltas. Sometimes I think I might have too much long deltas, honestly, but given this environment. But I was really genuinely surprised that we bounced today. And now that we pulled back, I guess, this was just the bounce to pull back a little bit and sit, like you said, right in the middle of the range. And it feels like this is just kind of where the day is going to end, save for some chance of a, fall lower. But it seems like we've been saving those for Fridays recently, right? Like the last 2 Fridays, we've done nothing but go down. It feels like we've been up on Mondays and lower on Fridays, and that's kind of been our weeks because nobody wants to hold risk into the weekends, given how much rhetoric is spewed all throughout the weekends about the conflict in the Middle East.
NASDAQ. Same story here, although maybe it's just my bullish eyes trying to deceive me. I could for sure make out a left shoulder head, right shoulder here, although the right shoulder is lower than the left shoulder, so maybe not so much.
Maybe.
We don't need to go.
Talk that positiveness, Chris, about the NASDAQ. Talk that.
We could take a look at the trend line that's off the highs here in January. I mean, there's different ways to approach this. I think just we're stuck in a consolidation right now. We've been chopping around, getting too directionally bold or bared up isn't going to do anyone any favors.
No.
The volatility still persists, and that's why out at 45 days, Jamal, I mean, if you wanted to go out to the 1 standard deviation move right now and just stay inside of it, you could do a 4-to-1, 72, 73, 62, 63 on your short, put in short call spread sides of this iron condor position. It's a decent risk to reward 4-to-1. It's a decent probability of profit, just a shade under 60%. But the market's still wide. I would even think that if we think we're going to get a chop around here, we could pull this in a little bit and get more favorable. Let's go more favorable risk to reward here. Basically a 2-to-1. I mean, do we see us breaking 7,100 anytime soon?
I mean, no.
I personally don't, given the information that we have in front of us and how the market was trading beforehand. We're not going to wake up, the Iran war is over, supply chain issues magically go away. What about AI, SaaS apocalypse, and private credit still percolating as albatross is around the market's neck? So yeah, Iran ends, relief rally here, but the dominoes and the kinks in the supply chain are still making their way through the system, have yet to be worked out. So, we get these rallies here. I think they are opportunities to sell rallies, just like in oil. They are opportunities to buy dips until we get clearance from something in the Strait of Hormuz otherwise, and that something has yet to appear.
Yeah, I mean, there's if you're like me and you have all different long positions, you got to eventually start trying to find ways to be a little more directionally neutral, which I kind of have done as well. I mentioned last week that I'm kind of loaded to the gills in iron condors. I got like 2 of them at least, and they were actually for this expiration for Friday. I had to move them out further because, again, they were the short put spreads were sitting right around 6,700 and 6,675, and I just didn't want to deal with that risk heading into expiration and getting closer to the weekend. So I moved them further out. I think this is of the same ilk. I mean, you can certainly put on iron condors at will with these extreme sort of seemingly extreme now sort of areas, 7,100, 6,400. I mean, the last time we touched 7,100 was January, maybe. It's been a while. And if anything, you're more nervous about the downside. Like we are always more nervous about the downside, but that's why you sell the downside when you can. So
sell the downside when you can. Jamal just tinkering with some of these strikes. I mean, 2-to-1 still here. 61, 62, 71, 72. Not too shabby. I'm personally sticking with my 44 DTE, where I have layered in a number of these short iron condors. The market is still very much in the giving mood here. So if we wanted to go 63, 61.50, and then to the upside, we'll call it 72.50, 7,300, 150 points wide. I mean, you could tinker with the strikes to get better risk to rewards, but the market wants to allow us 1 standard deviation move over the next 44 days for the end of the month is 7,400. Come on. We can't just look this in the face and say, do nothing. So I'm going to continue to stay directionally neutral. I'm going to try to harvest the vol here. I am not confident in the move to the upside. I am more concerned about the swing to the lower, down back towards 6,600. Mm-hmm. I think that's a distinct possibility after the Fed, because after all, Jamal, I said this morning with Nick and Tony on Let Me Explain. Powell is the high priest of passive investing. He is the person that a lot of folks look to. As long as the Fed feels comfortable and has their hand on the steering wheel, I am not going to panic. And so if a lot of people's investing decision is, well, the Fed tells us they're going to cut, as long as they're still indicating they're going to cut, like, why would I get out of stocks? Powell comes out tomorrow and indicates that cuts are pushed back, that the inflation's a problem, that they learned their lesson from 22. Maybe they should talk about withdrawing, easing, and think about hiking sooner than later. So, something of that variety. There's this whole group of market participants who really do not react unless Powell gives them the green light. So Powell's words tomorrow, they carry a lot of weight, even if no rate decision change is expected, right? Less than a 1% chance of a cut, no chance of a hike, 99 point plus change of a hold. It's the words and it's his vibe. I hope he doesn't go out there sweating and like oily and tied disheveled and is mumbling it to the inflation section. No one's going to have any confidence through that. So Powell's demeanor and intonation matters a lot more than I wish we would actually hope it would.
I don't see how people can say they don't believe in certain levels in these indices or in these futures. You can just see we went up to 6,800 and a little bit over, and we faded. In NASDAQ, similar deal, just 25,000, a little bit over, and we faded. So I just don't see how people can't say that technicals don't mean anything or how these numbers don't mean anything. It's ridiculous.
It's ridiculous, sure. Also, this particular pattern, like 6,950, 6,650, 6,900, 6,650, right, 6,800, right? Like it's just very clear.
Yeah.
But it's also like the round numbers. Like, why are we going in the 50s or the 100-point increments? So, all right, Russell's up a little bit more today too. We haven't touched that 33.9 IVR. Back to the midpoint of its trading range, November lows, January highs. It's been chopping around here the past few sessions. For me, I was sitting on long deltas here last week. I got rid of them. I'm glad I did, with the call spread side at least. That theta decay is working against me, and this is not exactly screaming that it wants to go to the upside right now. Maybe some green shoots like an ES and NQ. You could see that we're moving back above those 1 week moving averages today in all the charts, RTY included. But progress hard to come by, not clearing the hurdles. No one wants to jump the hurdles before the Fed meeting, Jamal. So if anything today, if I was getting close to like 21 DTE and I've been trading something directionally neutral for the past month, and maybe the action that we had here at the start of March dislodged some of that positioning. But, hey, if we have a chance at 21, I'm not in any of those right now, but if I was 45 in and now it's 21 out, or give or take tomorrow's 21 or Thursday or Friday's 21 days, maybe this is a gift to reset, to recenter your strikes, to buy yourself more duration, right? Give yourself a little bit more time. I would not want to be in, say, like a 2,500, 2,600, or 2,700 short iron condor position sitting close to support with a Friday expiration to get out, knowing that we have a Fed between now and then. You don't need to squeeze every single penny out of every single trade.
It's true.
Getting back to 45 days as opposed to waiting until 21 this week. These are the times to maybe flex those rules a little bit.
Yeah, I haven't dabbled in Russell 2000 in quite some time. Same thing with the Dow. I really haven't done much in either one of those. I feel like they've kind of lost their way a little bit more, and maybe that has a lot more to do with rates, I'm sure. But they definitely don't look. At least I feel like there's a little more clear defined areas in NASDAQ and S&P. Not so much in the Russell and Dow. So for that reason, I haven't touched those.
Not even that crazy about selling downside in the Russell here. Much more interested in looking at what potential just selling the upside would look like on these rallies, but staying consistent with that 23, 25 is the downside part of this range. We could go 25 points wide on either end here, Jamal, and you can get a decent 3-1, a little bit better than a 3-1 on some of these short iron condor positions in the Russell stuff. We'd have to break the November lows or break through the January highs in the next 44 in, 21 out. Come on. Is that realistic? If it is, it's probably going to be on the downside. So yeah. I'm not even going to play with the downside. Just what's going on higher here. We can do 2,700, 2,750 just inside of the yearly high here, January 22nd. I don't think we're going back there soon. I don't know. I'm going to take this bounce today. I'm going to sell a little bit of upside here in the Russell.
Immediate fill.
Couldn't finish my sentence.
It's going to work out well. It's good.
Or yeah, for the person who's on the other side of the trade. So
I mean, selling up against 2,700 is first of all, I know you got other long deltas, but selling against 2,700, I mean, it's been so long since we've touched that. If we're at 2,700, a whole lot of de-escalation has happened in the Middle East. I'll say that.
Oh yeah, it's like we'll wake up to news that a new canal has opened up across Saudi Arabia, right? Like they don't even need the Strait of Hormuz anymore. Just Kuwait, make a right as soon as you get out of port. We'll take you right to the Red Sea. Now, you'd have to see something dramatic. It would have to be something monumental to get stocks to have that kind of rip.
Oh yeah,
which I just don't see in the bingo cards right now. Which is why I think we can move on to bonds here, which are edging up this Tuesday, mind you. At least they still are. ZB sitting here making some progress. The lows that we had in January here in February, right around 113.5, those are holding up again, and bonds have retaken the uptrend from the January and February swing lows. You could see ZN likewise building off of yesterday's Morningstar candlestick pattern with a push through its 1 week moving average too. So I think that's probably the good news as it pertains to oil, because oil is up today and bonds are starting to rally a little bit more, and oil vol is in, almost suggesting that we're finding a new comfort level for where oil prices will be, and therefore we don't need to continue to play the game of run up the tails of inflation expectation concerns. I don't know. I'm just simply hypothesizing here. What I don't need to hypothesize, though, is that this development in bonds is good news for a short iron condor position that was struggling in recent days, Jamal, because we were quickly zipping down towards the short put spread side. This is a chance to get out of a position and free up some buying power, because it's not really taking a trade-off at significant profit. 2 legs in here would yield a $31.25 winner after, a week of heartburn. So I'm not sure it's been really worth the squeeze. But hey, the upside is it's not a losing trade in bonds again. Jamal, would you stick with this? Would you stay short the iron condor, looking for a recentering of this move back towards 112? Or is this bounce the past 2 sessions enough of a gift for someone who's in my position to say, good idea at the halfway mark of the 2026 range, didn't work out this time. I can get out at a scratch and move on and not worry about it.
Well, at least it's still 34 IVR in your situation. I mean, I'm short an iron condor in ZB, and it's back down to 18 IVR. I'm pretty sure when I sold this, it was about 29 to 30 IVR. So I definitely should close mine. But look, the interesting thing too is let's could we see the chart of the just the daily chart of bonds again, because it's just been an interesting pattern. I mean, whether it's been at a January expiration on the 20th, if you would have bought that dip, it would have worked. Buying bonds when they've fallen has been the trade. I mean, when you did it at the beginning of February, look at that move. That's why recently I was scared. There's no way I was going to buy bonds here. I just didn't know what was going on, man. Things did not look good. The way that rates were rising, the way that they're still being held up. I really wasn't sure that there was going to be a bounce back, even in the 113. If this had happened, a couple of months earlier, I would have wanted to buy, but I just couldn't pull the trigger, Chris. And so again, I just decided to go ahead and do an iron condor, which, worked out slightly. I made a little bit of money, but this is, this environment. I mean, you wonder, are there chances where we continue to go higher in rates? Is this situation going to hang around for a little bit longer? Are we going to have to start talking about rate rises? You mentioned RBA and some of these other countries that did it prior to us doing it. Is that the scenario? I don't know. But it was scary when it got to 113s. I thought this is a falling knife and I don't really want to catch it, but looks like we got a little bounce back.
We get a little bounce back today in bonds. Bonds up, stocks up, oil up.
Make it make sense.
Fascinating. I'm not going to try to make it make sense. It doesn't make sense to me.
And I don't think it should, actually, on a day like today. I think this is that kind of day, right? This is the kind of day where you see a lot of different movements that happen prior to the Fed, where there's a lot of repositioning, and not all of it makes sense, I think. I'm not surprised by that. I mean, gold is kind of flat. Dollar's kind of flat now a little bit. These moves don't particularly make sense.
Whether or not they make sense, let's check out one thing. Downtrend, recent highs. This is the Iran war trend in the bond market here. And so I have 115 effectively marked off as the line in the sand right now. It's a pivot low that you have here on March 9th. 1, 2, bang, 3. And there's that pivot low. 115 seems to be the deciding line right now. So I two ways to look at this. And this is how certainly I'm approaching it. I'm thinking about taking off my notes position here, which very much like the bonds, if we were to take a look at the move off the highs that we had, you can see how we've turned a corner somewhat. But failure in bonds here, I would imagine, would drag down notes too. It would be difficult for notes to stay elevated if ZB is going back through it.
Mm-hmm.
So 115 closed today and ZB 112 closed today. As someone who's short the iron condor from closer to 112.5, I would be more comfortable holding this for an additional day and not worried about the buying power, clearing up capital to trade other things if we see a little bit more price improvement. But let's just hypothetically, by the end of the day, we see ZN back to like 111 and 26 and ZB is trading at like 114 and 26. Rejection at those swing levels. Yeah, I'm probably going to get rid of the notes going into tomorrow's session, because then there's a disconnect here that I can't stomach. Oil's going back up. Why aren't inflation expectations going back up still? Why aren't bonds responding in the form and fashion like they were previously? So something needs to correct here. Either my oil longs are toast or the bond neutral positions toast. But I don't want to have too many eggs in the same basket. So I'm going to be sayonara for the time being.
Yeah, I mean, I think this is just one of those false signals right now. On a day like today, I just don't think it's fully, the math's not mathing really for the most part. I don't know how much you really read into it on a day like today.
Nor do I. Treasury auctions this week, we do have a 20-year bond auction coming up, Jamal. Last week, 10s and 30s were obviously the big ones of interest. This 20-year one, 21 comes out this week. 21 was today, I should say, because it's Tuesday. It's already Tuesday, Jamal. Tomorrow is a Fed meeting, I suppose. I really need to get some sleep and stop watching oil ticks through the middle of the night.
Just put alarms out that let you know when alerts out that let you know when it hits certain levels. That's what I do.
If you're looking
I haven't been
for
woken up recently.
Smarter man than I am. If you're looking for the read-through in these auctions, 10s, 30s, and now the 20s, same story. Even though yields are up, bid to cover ratios are intact. Foreign demand is high. Foreign demand is high is the most important story here, in my view. The notion that some of these news stories, Gulf states are saying they're going to withdraw investment from the U.S. to help cover losses for the damage taken from Iran. Okay, does that mean they're going to be less active participants in our treasury market auctions? Because Middle Eastern countries have been big drivers of those auctions in recent years. 2025, we had more foreign buyers than we had in 2024. But that's just not the case. War's going on. People are happy to fund the machine, Jamal. So you're not looking at right now a lack of demand for U.S. treasuries, even at the long end of the curve, even in the places where inflation expectations are theoretically embedded. And I suppose one final note to that, and maybe it's a better show than tell. I'll see if I can find it. But 5-year inflation swap forwards, which is like 5 years from now, where do I think inflation will be 5 years after that? Those inflation swap forwards have not moved throughout the entirety of the crisis. So traders still very, 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 very much of the mindset that no, this is not going to be a long-term problem.
Yeah.
You can keep whistling past the graveyard.
Yeah, I mean, it's a near-term shock, right? And I mean, the only question is how long is near-term, dare we say, transitory? I mean, is it a month? Is it 3 months? I don't know, man. And I think as of right now, oddly enough, the good thing is that oil doesn't know. That's why the vol is still so high. Because there's a scenario I'm worried about, and I'll talk about that when we get to oil.
Oh, I think we can keep moving then, because notes here, we have our plan. We get the, sub 115 close in ZB. Well, we can go to metals first before we go over to oil. Oil will wait for us as it's making everyone wait on it these days. So maybe it can be the waiter.
Like waiting for
Jamal,
Godot, waiting for oil.
Gosh. I'm waiting for this gold to go. It looks like a bear flag down here, which I am not happy about that. I am not happy about that. Why am I not happy about that? Because I'm still long. Because top left to bottom right and then consolidating a flag is, Jamal, let's again do the inverse test. If this was bottom left to top right, and we had just broken through former spike highs and now we were flagging up here, what would a gold bug like myself be buzzing about? I hate when I think about things in those terms because it makes me realize that I am far too long in this market right now for my own comfort, which is to say that I'm still long the 5,000, 5,100 call spread that we put on months ago.
You are?
It's still working. Yeah, you know, to quote Tony this morning, I'm being a little bit of a quote capitalist pig, unquote.
What's going on there, man? On Tuesday mornings, you guys are starting to really get after it a little bit. That's hilarious to me. I think it's great.
Yeah.
I think it's great. I think you know what?
It's St. Patrick's Day. He's allowed to. We're both Italian and Irish.
I honestly
so
think we all need to help him embrace the role of being the bad guy, if you will. I think we really need to do. That's actually who I was putting out. I'll just say it out now. It's actually who I was giving a dig to earlier when I was saying the people that understand these major levels don't mean anything. He was arguing me up and down about 6,700 as if it didn't mean anything. I'm like, what are you talking about? It's obvious that we're dancing on 6,700. So you know what? I'm with you, okay? I'm in solidarity. From now on, I'm going to poke the bear for sure. Why not?
Well, I don't want to poke the bear here, Jamal. I want to poke the bull. I want the bull to come back out.
For gold? Okay, let me ask you this question. Forget the chart. Why are you still long gold?
See, as much as I like to think that the regime that was carrying gold higher last year is still very much in effect, there's also the reality. Like, why do you buy gold, Jamal? Why are investors buying gold? It's a hedge. It's a haven. It's so that when something hits the fan, you have something that has value that other people are going to want so that you can sell it to them so then you have cash to cover your losses, right? Hedges, safe havens are not meant to be capital appreciating vehicles, capital generating vehicles. They're capital protection vehicles. And maybe I myself lost sight of that because of what happened last year. And incrementally, maybe the buyer for gold has been out of the Middle East because guess what? If you're trying to get away from the petrodollar system, right? What are you going to use? Does Saudi Arabia have enough trade with China to substantiate holding on to yuan? No, but they definitely can stomach holding on to gold in exchange for their oil. Now, again, you can't get your gold into the Middle East because the ships aren't going through there. So do you really want to pay for things in gold? Jamal, it's just at the start of crises, gold goes down with everything else. The fact that it's not going up is starting to make me concerned.
Exactly.
That there's a bigger narrative violation occurring and a bigger regime shift occurring, because even in the wake of the Hamas attack against Israel, the Russian invasion of Ukraine, gold was doing better than this. And in neither of those cases were there supply chain issues involved that could directly import the shipping of gold worldwide. So I'm struggling to get my head around this personally, but thank God I don't need to do much thinking here because the charts are telling me everything that I need to know. It's not going to be a great trade as it once was, but in the event that we do need to cut our losses here on the gold long, if we get a little bit more deterioration, Jamal, this was purchased so far out of the money with so much duration that even if it drops below 5,000, I could still cash it in for a nice little $2,800 winner here. It's going to be less than that if it drops below 5,000 or 5,100 in the GC J6 contract. I'm in GC M6, so we'll see how this works out, but I might just have to step away. It's not behaving like the way it should. We can take a winner here, albeit not the size of the winner we had when the war started. What say you?
So that was a very eloquent explanation. And it reminds me of one of my favorite scenes in Training Day when he was asking him, why do you want to become a detective? And he said, I want to become a detective to protect and serve and, a bunch of other things. He's like, yeah, right. Why do you want to become a detective? Because, he said, why do you want to be, he's like, why do you want to become a narc, right? And he's like, I told him his answer, and he's like, yeah, right, but why do you want to become a narc? Because I want to make detective. You're still long gold because of the moves that it's made in the past and the way that it gave fast money. Just admit it. It's true. I get it. That's what we've seen from gold for the better part of a year and a half. It's done that, and it has not disappointed. I think the trade has changed. I think the trade has changed. And I will say, I don't think there's anything wrong with you holding on to the call spread at all, because if we really are in a serious conflict, you would expect gold to move. The fact that it hasn't moved big during this situation actually really makes me even more worried about it. That just doesn't seem to make sense. I know sometimes it does take a little bit to get going in the middle of these conflicts, but eventually gold is usually higher. As a matter of fact, during most conflicts, we usually see the gold-silver ratio where? Closer to 100. It's nowhere near that. And I know a lot of that has to do with the price of silver, but it just seems pretty odd to me. And so because of that lack of behavior, and because of the fact that it actually does seem to be obeying the laws of the dollar now, where it actually moves down on the days dollar moves up and vice versa, that makes me feel like it's just a different trade now. I actually feel like gold and silver vol are going to be the vol that comes in probably the most over the next month or so. And that's already been happening. That's why I've still been in the SLV trade with selling vol. I was in the April. I just rolled it out to May and basically kind of doubled down. That's the way I'm playing it now until proven otherwise, because it just doesn't seem like it's the same trade, at least not right now anymore.
Counterpoint. It's gold and King Kong ain't got shit on me. No, yeah. Denzel's line from Trading Day.
Of course.
Okay.
Of course.
That has been my attitude, and actually, quite frankly, that's been the problem.
That has been your attitude. That has been your attitude for sure. For sure.
But recognizing that is step one. So step two is, when do you change how you're trading the market here if something has changed? Look, I have the feeling worse, feeling better lines on my chart. We are very much entering the feeling worse territory for silver and meandering near the washout lows from March 3rd. We tried to bounce from there yesterday at the start of the week, and it's been very feeble. Downside momentum persists. We couldn't get back through the uptrend from those February washout, March washout lows. Gold, silver looking much, much, much worse. So establishing new longs, no. Hanging on by a thread, yes. Jumping back in with 2 feet immediately, not a chance. The liquidity drive here is what concerns me still, because as much as what we're seeing come in oil today, for example, oil is still being bid up across the curve through those mid months, and the gains are starting to become a little bit more, seeing them a little bit more towards the mid portion of the curve than anywhere else. 43.3 IVR as well, Jamal. Do we like being long gold when vol is contracting? No. And that has been the story here, right? This has been the story since the start of March. IVRs were in the 80s, 43.2. For those that don't believe us when we say there's a contemporaneous relationship between gold, vol, and price, at least there has been. That is something that is holding up. You've seen it hold up again here the past few weeks. So let's just, maybe that's going to be the tell, Jamal. If I get out, I'm going to wait to see gold vol pop again. I don't want to see another new incremental low in gold vol prior to the prior session. Once gold vol stops declining the rally, then we could start sizing up new long positions, but not until then.
Yeah, again, it's just been really odd to me that gold and silver were actually on the rise at the end of February, and ever since the start of this conflict, they have looked weak. It is not, this start of this conflict has not been good for gold and silver bulls.
Not been good for gold and silver bulls. I don't think there's anything to change there right now. Copper still meandering, bouncing around. The range-bound trading north of 5556 continues to hold. A quick peek at CPR shows that the volatility likewise has been coming in over the course of the month. IVR is now down in the mid-30s. So selling the put spread a little bit less appealing here, but thinking about this, is it worth holding on to right now? I'm still holding on to it, Jamal, like so many of these other trades that where volatility is sticky. It's coming in, but it's staying sticky and markets are meandering and just kind of grinding around. You're playing for theta decay here. So the fact that this is still like only a $40 winner, basically, I could cash it out now. There's 41 days to expiration. To realize any sort of meaningful profit potential in this, I've just got to trust the charts and trust the grind and trust the fact that this thing has just been chopping around and holding 5.5, 6 for many months now. Would I put into something new on here? No, not at 577. Give me 570 again and maybe layering in another leg of the shorts beyond the 40 odd something days to expiration cycle to build in would be worthwhile.
Yeah, I mean, it's the same story here. Vol coming in, not really any big movements, honestly. In one way or another, it's not like you're seeing failure, but you're also just not seeing the strength that you had seen once upon a time. So, I mean, I think it's this sell vol on the metals. I mean, if you've seen any charts more recently of all, whether it's equity vol, oil vol, metal vol is turning the corner. And not only that, the historical vol shows it. Historical vols have calmed down with them. They're not moving as much. The ranges aren't nearly as big as they had been, and that was the thing that was keeping the vol propped up. So it's kind of sell vol on those right now. The opposite of what's going on with oil.
No, which oil recouped a portion of its losses in the overnight hours, which I think is important here. We do see that oil is back to 90, we'll call it 95 on the nose right now, 2.74% move to the upside. I saw that there have been some folks commenting on Twitter that maybe the oil volatility that we've experienced over the past 24 hours is a function of what's going on with the SPR bids. There have been more than a few people in the space that I have been following that trade oil, not just here in the United States, but across the world, who would seem to suggest they think that the front month compression that we've seen at the start of this week has to do with the way that the DOE is trying to get traders to pick up the SPR slack. So right now, the DOE is trying to get traders to buy this oil at basically like a 20% premium above what the delivery is. And so given the way that the machinations work, in theory, you could probably arb out somewhere around 20% in the market if you help the DOE get the SPR into the pipeline. But the catch is that the only way to take advantage of that arb trade, Jamal, as some of these traders have been pointing out, is if the front end of the curve is slapped down during this bid process. The SPR bidding process ends today. So I don't know this to be the case, quite frankly. Admittedly, in past SPR release episodes for the IEA, oil was not the cut of my jib the way that it is today. And I've certainly been trading oil a heck of a lot more since 21 and 22, way more directly through the futures itself as opposed to the ETFs or the equities. The point I'm getting at is right now that the only thing that matters with oil are the actual numbers of what's occurring. Forget whatever short-term noise we're seeing. Forget the day-to-day machinations. I'm certainly not scalping this market. I bring up the crude oil tracker, the Hormuz tracker, which really, I just clicked download and then you said you're not downloading.
Do you have oil positions right now?
Oh, yeah.
Yeah.
Got oil's the thing that I'm trading the most right now.
Long it?
Long it, short puts, long calls, short iron condor, just a little bit of this, a little bit of that. And there we go. Michael McDonough.
You can make a case for the idea of being long oil, long directionally oil, long metal, pick one, gold or silver, and long the market. You can make a case for those three. Maybe 2 out of 3 work at some point.
Bloomberg has a great tracker right now. If any viewers at home have access to a Bloomberg terminal, you can type in ECAN Hormuz Go and get this. You could also go to WSL Shipping Go and find it. It is updated every 30 minutes. It says real time as real time gets.
And so what is this?
What's the point? These are the number of commercial tanker crossings for the Hormuz, for various dry cargo, for petrochemicals, for directionally east versus west. It's covering everything, every possible angle we could look at shipping. And you know what we're seeing here, Jamal? It doesn't matter what the headlines are telling us right now. It doesn't matter whether or not the Treasury is shorting the oil futures at the front end of the market. The reality is that there is nothing moving through the Straits still. Saudi Arabia is redirecting a bunch of its oil through pipelines. In fact, Jamal, today for our Trading Trends interview guest, we were able to have on the retired Marine Lieutenant Colonel Hal Kempfer of the Global Risk and Intelligence Group. Fascinating conversation about the state of the global energy security system right now and the issues that we're facing in the Middle East with respect to some of the infrastructure and rerouting energy. But right now, the energy and stuff, it's just not moving. It doesn't matter what it is. It doesn't matter if it's oil or natural gas or fertilizer or petrochemical or naphtha. Nothing is making its way in or out of the region. So until these charts change, until we actually see traffic start going up, I don't know how with a straight face I could tell anyone that we should be fading this pop in oil yet. I know that my whole apparatus with Dylan and Ilya for years has been fade geopolitical pops. They always come back in. Oil vol is dissipating. Prices are not coming back in. The market's almost saying, no, we're less uncertain about the future. Oh no, oil will be staying higher. We don't need to be uncertain about that. So dips, I'm selling puts. That's it. That's the game plan. Sell puts with high vol and oil. This thing is going to stay up.
Yeah, I mean, I'm of the mind that this is going to stay up. I don't think this is going to end swiftly. I mean, I think this is going to be something that lasts for some time, a couple of months, maybe 3, maybe 4. I don't know, maybe to September. Who knows? That being the case, I think oil stays up for a while. I mean, above 80 at the very least, maybe in the 90s. And the problem with that for all of those who are short, some spreads here, and maybe I need to trade a little more heavy too, honestly, but I mean, I'm short some iron condors, and my call sides are in the money. I mean, one side is the 80, the 79.80, and another one is the 90.91. At some point or another, if we continue to stay up here, I mean, oil vol is not going to be 100. It might end up being 60, right? But it could come in, but it doesn't really matter if you're in these spreads that are further in the money. At the same time, I don't necessarily feel like I want to try and play that game again of selling further upside, because there could be more upside to come if this continues to stay, the situation continues to stay as volatile as it is right now. So I have yet to do much else. I mean, I have, and these are all positions mostly I put on over a week ago. Honestly, this thesis is kind of how I've come around to thinking more recently. I mean, most of the stuff I put on a couple of weeks ago had to do with where I think I put on something last week for USO, Iron Condor with the 85 put and the 130 call is my short strikes. USO is currently trading 118. And I already told you my CL Iron Condors, I'm not necessarily sure I'm interested in selling more upside. I want to see another oil shock like we saw, not necessarily like we saw on the Sunday night, but I just want to see if there's another higher move coming, because the rest of the market comes to the idea that this is not de-escalating anytime soon.
No, oil getting a little bit of a bump here, 95.50 here. Jamal up about 50 cents since we started talking about oil. It is that kind of market where you're going to see these, 0.5%, 1% moves on the drop of a dime. So no one should be surprised if that's occurring intraday. Overall, getting long the calls is one thing. We did it last week when oil was dipping down into the 70s and the 80s, Jamal, and we had that nice little chart pattern on the CLJ6 contract that yielded the inverse head and shoulders pattern. An inverse head and shoulders pattern, mind you, that if folks were trading at the start of the week, as Ilya and I covered on first call, technically that was completed, and it's not really a viable way to approach the market anymore. I know since then people have been saying, oh, left shoulder ahead, right shoulder, this thing is getting ready to top out. Very well could be the case. If you're playing this as a topping pattern, though, I am not. But if you're playing this as a topping pattern, you have to wait for the neckline to break. If you're getting in a trade before the neckline breaks, if that's your rationale for entering the position, you're not actually trading a head and shoulders. You're selling something in the middle of a consolidation still. I'm not doing that. I don't see a reason to do that. I don't think the fundamentals tell that story. I don't think the narrative tells that story. I don't think, President Trump saying that he can't get any NATO countries on board to help with the Strait of Hormuz escorts, and then who needs NATO anyway? Is that a good thing or is that a bad thing? If it was really bad, I suppose all these countries would say, you know what, Trump, it doesn't matter that you try to take Greenland from Denmark. We'll put that all behind us. We have bigger fish to fry. They're still not there yet. Still our problem to fix. I'm not going to fade oil to the upside, but dips, selling puts, yes, please. Will this last another week or two? I think so.
Yeah. I'm looking at buying a call spread now. I'm looking at trying to decide whether I want to do the end of March or actually do April. Do the end of March and do the 105, 107. I mean, that's your cue for. It's just these are so illiquid in these regular expirations, but I think it's time to buy a call spread, Chris. Yeah, I'm going to regular expiration. These other expirations suck liquidity-wise. It is time.
Not that great.
It is time. Not great, Bob.
Oh, I got to keep watching that. We're in the middle of season 2 right now.
Oh God, love that show.
Yeah, it's feeding some bad.
I'm buying
it's feeding some bad habits.
I know it does. It really does.
I'm like, Beth, what do you mean I can't sit around and smoke and drink scotch
all day?
What do you mean that's unacceptable? That doesn't make any sense.
Yeah, I'm going to try and buy the 105, 107 call spread here. Risking, I mean, on the one hand, the margin is, I'm really risking $500 to make 1,500. So risking 1 to make 3.
That's always a good thing to do. Jamal, quick little wind up here with the dollar. Dollar hasn't gotten much love here on Futures Power Hour because there's just been so much else to talk about the last few days. Is dollar down? Maybe. Is it out? No. Why? Highs that you have here in January and then again here in March are not quite breaking back down through. So if this dollar story is finished, if this was a triangle here that was breaking out, we still have not returned into the consolidation. And if the dollar's not done breaking out, then what does that tell us about the reach for liquidity and this equity market bounce and the gold? We have much more ground to cover today, though, Jamal. You and I will be back. I'll be back at least later today, overtime, 4 Eastern, 3 Central. Until then, Tasty Live programming continues. Dr. Jim Schultz is coming up. He's here next with From Theory to Practice. Jamal, I'll catch you on the other side.
See you.
Tasty Trade's Active Trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
When you've got a futures contract that's in contango, what does that mean?
Futures, unlike stocks, have multiple prices appropriated to them. That's known as the forward curve. So when a futures forward curve is in contango, that means that the front month is trading cheaper than the corresponding futures back month. So you'd see that forward curve most likely looking like this in terms of prices.
And backwardation, what does that mean for futures contracts?
Backwardation is the opposite of contango. So where contango front month futures contracts are trading cheaper than the back months, backwardation is the opposite. So those front month futures contracts are trading richer than the corresponding back month contracts.
I'm just going to wait for the stock to dip, then I'm a buyer. Buying into weakness is a phrase used to describe the action of getting long a stock into a down move. It's a contrarian trade. Most people want to buy what's hot, the stuff making huge upside moves, the chart line moving up and to the right. Nobody wants the stock at lows. But it's hard to buy high and sell higher, rather than buy low and sell high. There is a phrase for this. When the time comes to buy, you won't want to.
Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast, man. Welcome to the Tuesday pre-FOMC decision edition of the program. I'm so glad that you guys are here, and we couldn't do it without you guys, man. So thank you guys so much for being part of the show and being part of the network, because it is only because of you all that we can do what we do. So thank you guys so very much. If you are watching over on the Tasty Live network, then I would actually bounce on over to YouTube, because you can join the conversation and join the discussion and communicate with our brethren who are also watching the program. Man, the market's in kind of wait and see mode, so maybe everybody's celebrating today. Maybe everybody's commiserating today. I'm not sure, but you can indeed communicate with your brethren who are also watching the program. Now, guys, before we get into it today, a little bit of housekeeping. So you guys are going to be on your own tomorrow. So I actually have to go to the dentist tomorrow, and he was able to get me in pretty short notice. And so I had to take that opportunity while I could, because he's pretty popular around these parts. I'm like, man, if I don't go tomorrow, it's going to be weeks. It could be months, and that would not be good. And so you guys are going to need to keep it above zero for me in my absence. You can let it asymptotically approach zero, but don't let it todically get there. So I'm counting on you guys to keep this thing above zero in the most important FOMC decision of our lifetimes. There is no close second. It is all up to you guys. So Josh, bring us into the market, man. Market, yeah, it's been pretty calm. I think over the course of the last little bit here, EMI S&P is up 17. You got the risk-free instrument, also known as the NASDAQ futures, up 103 on the day. You got the boomers up 61. You got the Russell 2000 futures index up 14 on the day. You got bonds up a little bit. You got notes up a little bit. You got oil up a little bit. You got UB40 up a little bit. You got the shifties up a little bit. You got silver getting smacked down a little bit over $1 on the day. So British pound is up. Euro is up. Volatility on the daily today, I think it's down maybe a little bit. Let's have a quick little look. Volatility down 40 cents. Volatility futures down 40 cents. And then you've got the spot volatility down a little bit over $1 here on the day. So volatility coming in just a little bit on a day like today, with the market up ever so slightly. But I get the feeling that we're just in wait and see mode. Like, I get the feeling that everybody's like, all right, like, I don't know. Like, before I can proceed with any investment decisions, before I can put on any new trades, I need a hex code. Like, I'm going to need some gradient of hue on Powell's tie color choice tomorrow before I can make any serious decisions. Like, I need to know, did he go for purple again for the 59th time in a row? Or did he maybe go a little lime green? Like, did he maybe go some periwinkle? Maybe he mixed in a little fuchsia. Like, where it kind of has some hint of red. Like, it's not fire engine red status, but it's got a little bit of a something going on with the old tie there. It's like, I don't know, man. Maybe Powell is kind of cueing us back to the downside. I mean, we all gotta wait and see, and kind of keep our eyes open for that guy. So that's gonna come on down the shoes tomorrow. But again, you guys are gonna be on your own, and I'm gonna be on my own too. And so hopefully I won't be writhing in pain. Hopefully you won't be writhing in pain either. I guess we're kind of in the same spot, even though we're gonna be doing very different things. All right, let's go into the portfolio though. We got a couple of things I want to do. Because going into, we've got tomorrow, we've got FOMC. I'm going to be out tomorrow. I'll be back on Thursday. And then we've obviously got OPEX at the end of the week this week. We've got triple witching. You've got all these things, right? And so right now, it's kind of shaping up that the bullishness is going to be the chalk. The bullishness for the week is the favorite for this to continue for all the reasons I talked about yesterday morning with Tony and Nick, right? Like all the hedging dynamics and kind of the market maker mechanisms for, hedging off directional exposure. If there isn't some type of downside move or some type of downside catalyst, then all those puts that are set to expire at the end of the week with the quarterly expiration, the deltas on those guys are just getting smaller and smaller and smaller. And as the deltas on those guys get smaller and smaller and smaller, the hedging requirements of the market makers against those puts gets smaller and smaller and smaller. So they end up releasing shares that they don't need otherwise. And so that can catapult the market even higher as they are releasing the short shares that they had to hold to hedge against their short put exposure. And then that turns, big up moves into even bigger up moves. And the next thing you know, it's all-time highs. The next thing you know, it's S&P 500, E-mini S&P 7100 by the end of the week. And so that's how it's shaping up so far at the end of this week. Maybe not 7100. But maybe 69.50. I could see it. 69 and a quarter. I could 100% see it. But what I want to do today, though, so going into tomorrow, OPEX, let's see if we can't take a little risk off the table with the things we have on for positions that are already kind of working or maybe not working. And it just kind of makes common sense to maybe take a couple things off the board here going into tomorrow and then the end of the week. So oil, oil is in a similar situation. I'm not going to do anything. It's basically the same price it was yesterday. It's been floating around, kind of meandering around 93, 95, 97, whatever. Right now, we just sit tight. We do nothing. There's still a ton of extrinsic value left in the strategy, even if the price is not exactly cooperating. So even if MCL is outside of our short strikes here, we're in a situation where there's a lot of extrinsic value. There's a lot of theta to be collected as time goes by and as you get closer to expiration. So MCL, we're not gonna do anything. But then if you look at MES and MNQ, and I see you guys in the chat, man, you guys are doing some work. Man, look at you guys. Look at Jerry Kramer in the house. I see Point B in the house. Yeah, Shawshank is here. Man, Peter Leger is here. Ranch and Joel James and Sam L. and Griffin Jones and the Preston and Ordenu. Man, look at you guys. I appreciate you guys so much. I'm going to get to as many of you guys as I can right around the halfway mark of the show. Typically get to somewhere between 1 and 1.3 questions per show. And so we'll kind of see where the wind blows us here in a few minutes. But MES and MNQ, so both of these trades, short puts, both of these trades are working, right? You can see that we are short a put at the 66.75 strike. For MES, you've got the stock at 67.75, so we're a clean 100 points out of the money on that guy. We're up about 20 points on the trade, which remember, for MES, the multiplier is $5 per point. And so we're up almost $100 on the position, up 20 points, $5 per point would be approximately $100, but I'm no Julia Spina. For MES, I'm going to sit tight and not do anything. MNQ, however, for this trade, we're actually up about 200 points on the trade. So you can see that we sold this put for 590 points. The multiplier in MNQ is $2 per point. It's currently marking at about 390 points, maybe a little bit more than 390 points. So we're up almost $400 on the trade. Now, we're 31 days to go. If there was no FOMC, if there was no triple witching, if there was no March OPEX, I would probably just leave this on and let's go for the actual profit target. But again, kind of using some spatial awareness. Like, let's go ahead and kind of, have a quick little gander at where we are in space here. I've got potentially binary event tomorrow. I've got potentially binary event at the end of the week with March OPEX. Sometimes it's pretty quiet, of course, but not always. And so thinking about this, I'm like, all right, I have an opportunity to get pretty close to my profit target. I'm not all the way there, but I'm maybe 35% of the way there, 37% of the way there, whatever. And it's like, all right, we're pretty close. We can ring the register, we can cash in the profits, and then we can always redeploy a similar strategy later on. Like even on Thursday, like if I want to do something Thursday, we're on the other side of FOMC, hopefully the teeth are doing okay. Hopefully we've been drilled and filled and we're feeling pretty good. And so, that would be obviously a positive thing. And for MNQ on Thursday, that would be a good time to potentially put on a new position. Maybe we put on a new trade on Thursday once we're on the other side of FOMC. And so I'm kind of thinking for right now, what if we take off the MNQ position? Again, I'm not signing on a dotted line. We're just kind of window shopping at this point, but it makes a little bit of sense, right? I mean, we booked a $400 profit. It helps to offset, some of the things that have not been working out so well, like your Home Depots, your MCLs, right? Your Snapchat down 1 cent today, which, that's basically like a 10% update. But for MNQ, I think we take it off. I think we don't think about it anymore. I don't even think we need to window shop any longer. I think the time has come. Now, let's see where we can get filled here. 397. I'll go 399. We'll go a little over the mid price just to kind of coax the counterparty. There you go. We coaxed him. We got him. We absolutely coerced him to be our counterparty on that trade. So we got out for 399. So if I go to my activity page here, let me just put in MNQ. You guys can see that we did the trade. We sold it for 590. Those are points again. Remember, it's $2 per point. We bought it back for 399. And so we made about 200 points on the trade. Not quite 200 points, almost 200 points. And so I'll take it. We took the risk off the table. Again, we're going into, the binary event that is FOMC tomorrow. And I've never seen an FOMC that's this important. Like, I've been studying the markets for a long time, guys. This is the one. This is the one. This is the singularity. Like, you keep reading about the singularity and hearing about the singularity, and people are saying it's going to be 2037 or 2046 or like July. Some guys got it down to a science. I think it's the same dude that predicted the end of the Mayan calendar. And so I'm like, all right, he's probably going to nail this one. It's like 50%. That would be pretty good. Right. But I'm looking at tomorrow and I'm like, this is the singularity. Like this FOMC print, man, this is not good. And so taking out the MNQ position going into this guy, I think makes a little bit of sense. So we did that. So that's MNQ. And then going on down the list, the other trade that makes a little bit of sense for us to take off right now is Hood. I mean, look at this short put in Hood. We've only had this trade on for, I think it's only been like a couple of days, right? Let me bring up my chains here really quick. When did we do this trade? March 13th. Yeah, was that Monday? No, that's not Monday. That's Friday. Yeah, that's Friday of last week. So we did this guy. Yeah, still, I mean, we're talking about half of a week. We're talking about 4 days, 5 days, whatever. That's a pretty 4 days. Happy St. Patrick's Day to you guys, by the way. I obviously am celebrating with my blue polo today on St. Patrick's Day. My wife, she loves St. Patrick's Day. She loves it. She can't get enough of it because I don't adhere to St. Patrick's Day customs and traditions. If it happens to fall on a green shirt day and I've got to shift at Publix, then it happens to fall on a green shirt day and I've got to shift at Publix. And that's just the way it works. But if it doesn't happen, I wear whatever I'm going to wear. I wear whatever's up in the rotation. It's basically only my black t-shirt, my blue polo, or my magenta polo. So you got a 1 in 3 shot of it being one of those 3 guys and none of them are green. Like none of them are green. So my wife loves to pinch me all day long. And man, I got to sit her down and give her a little talking to, but it doesn't exactly work for St. Patrick's Day. But anyway, I digress. So for Hood here, I should say even, I think we're almost at 50% of max profit. We're pretty close. That's about 40% or so. Again, same reasons as MNQ. Let's take the risk off. Let's get the risk off the table. Let's book the profits and let's just move on. We can redeploy the capital later on down the road. We can go ahead and do this guy on Thursday, even Friday next week, what have you. So I can't remember who was it Catch That Voltage with the Hood trade? I can't remember. Maybe it was. If it was, then thank you, Catch That Voltage. If it wasn't, you can get partial credit for it anyway. And then whoever gave me the Hood trade, I didn't write it down. I'm very, very inconsistent with keeping my receipts. But let's go ahead. Let's close out a Hood here. And let's do it. So Hood, we got filled at 151, so we're out of Hood. And there you go. And then the last thing I want to talk about today is look at Starbucks. So this has been very interesting. So if I bring up a chart of Starbucks, is this a daily chart? I don't think so. Oh, it is. Look at that. So this is exactly, this is so good. It's been such a good project. Maybe I'm totally biased and off my rocker, but I think the last 15 months or 16 months, even at this point, for this Starbucks investment style covered call, we've gone through so many things. Like in the beginning, you saw it go deep in the money. You saw what we did. For a lot of the time, the rest of the year, it was typically out of the money. We kind of had to, maneuver our way around that. And now we just saw an example where it went right up to the razor's edge of being at the money. And what did we do? We didn't do anything. Like, what did we do? We did our favorite strategy, our go-to strategy, doing absolutely nothing. Now, we didn't do nothing because we didn't know what to do. We did nothing as an active choice. Like we did nothing as a strategic selection. Like it wasn't like, I don't know what to do. Like, I'm not sure, where this thing's going to go. Like, no, it wasn't that at all. We never know where it's going to go, but we decided to do nothing to give the option a chance to kind of sneak back into out of the money status. And look at what has happened. Starbucks is up to 97.84. And now our short call has essentially collapsed down to pretty close to nothing now. It's pretty close to zero. There's no reason to keep it on anymore because now, we've been able to extract 80 to 85% of the profits from this short call. And that gets, kind of tossed into the pile of coins, just like Scrooge McDuck, to where we're just, sitting on all of our coins. Or is that Scrooge McDuck? Or is that just DuckTales? Maybe it is Scrooge McDuck and DuckTales. I think I actually got them both right there. I'm pretty sure it's Scrooge McDuck sitting on his pile of coins in the vault in DuckTales. All of my 80s kids back me up on this. Or maybe even my 70s kids. Y'all can chime in. Josh, you're like, what, a 60s kid? Help me out here, man. Is it Scrooge McDuck and DuckTales? I'm pretty sure I got them both right. Or maybe I missed them both. I'm not sure. But, he tried to troll me, but he got a typo. A typo in the troll doesn't count. See, that's the beautiful thing. Like a typo in the troll, it's null and void, my friend. It's null and void. You can try again later. But we appreciate you, man. Like, we appreciate you very much. And so, Josh is struggling, man. He's struggling over there. But anyway, we got our premium on the SPUX trade, and that, it's a good thing, man. It's a beautiful thing. And now, SPUX is, it's fine today. It's unchanged. That's fine. Again, remember, we bought the shares for 92. And so this is pretty interesting because in December, in fact, here, let me bring up a chart here. We got nothing but time, man. So let's go to Starbucks. I mean, it'll be over before you know it. It goes so fast. You guys have no idea. But if I go into the chart here, if I go back to December, it was low. Yeah, it was down around here. It was below 90, I remember, because we did somewhere in this area when Starbucks was in the 80s. That's when we did the basis calculation for the Starbucks position. You can go back, you can find it in the archives, kind of look at the titles of the shows. I think you'll find kind of the Starbucks basis calculation for what we did in December. And at the time, Starbucks was in the 80s, so we were down like 7 or 8% on the position from the share purchase price. But we had made so much in premium along the way from selling calls and even earnings trades and all the things that we did that we were actually plus like 6 or 7%, like net. So we turned a 7% loser into like a 7% winner or something like that over the course of the year because of all the premium that we did. But now look at where we are. Now we've still got all the same premium that we had before, and even more so as of today when we're about to close out of this short call. But now Starbucks is back over 92. In fact, it's 97. So now we're sitting on, a position where we've got the shares. They've actually appreciated above the purchase price and our basis on the position, and we've got all the premium all along the way. This is the ideal scenario for an investment style cover call. This is exactly what you're going for. It's a longer term play. It's been 16 months, right? You're going to have to kind of manage your way and maneuver around all kinds of different environments, which is exactly what we've done. We've done it through the stock going up. We've done it through the stock going down. We've done it through the stock kind of hanging around the basis, which is kind of where we are right now. And so it's been really good. It's been different. It's been fun. And thankfully, it's even been a little bit profitable. So for us here in this short call, you can see we sold it for $2.25. We can buy it back for 43 cents. I mean, we're getting, 85% of that? 87% of that? I'm not sure. We've got to check with Julia to double check the old math there. But I think we're fairly close. And so let's go ahead and let's buy this guy back for 44 cents. There you go. We're filled at 44 cents. And so beautiful, beautiful stuff. All right, so we're out of Starbucks. I'm just going to chill now. I feel no type of pressure. This is another thing that's great about investment style covered call. You should rarely, if ever, feel pressure on the position. Ever. This is intended to be like a slow-moving, longer-term play. It's like, if I do it today or I do it 3 weeks from now, it's fine. It's no big deal. It doesn't even make a difference. Now, it might make a huge difference, but the philosophy behind the strategy is very, very laissez-faire. It's very, very kind of European, 3-hour lunches. Like, it's all good, man. Like, don't even worry about it. Like 30-hour work weeks. Everybody's retiring at 42. Like, that's how you want to think about an investment style cover call. It's just kind of laid back and just a lazy Sunday afternoon. So for SPUX, we'll sit tight and we'll do nothing. And then the only other thing today, so Josh brought to my attention. Look at you guys, man. I appreciate you guys. Look at you guys. Man, PDH is here. Adam Armfield is here. Daniel Perkins is here. Man, look at you guys. What I want to do today, so guys, today, we got it, man. We got a little Lululemon earnings. A little bit of Lululemon. So LU. Here we go. So Lululemon, I think it's today after the close. Let's take a look at this. Yes, it is. Today after the close. So a little St. Patrick's Day Lululemon. Now, Lululemon, if you've been following the show, you know that I have kind of a special relationship with Lululemon, right? And it has to do with my wife, of course. And so when we play Lululemon on the show, we are not bulls in Lululemon. We are bears in Lululemon because my wife loves yoga pants. She loves them. She wears them all the time. I can tell you right now, I guarantee she has yoga pants on 100%. But are they Lululemon? No. Lululemon is too expensive, so she wears Woo-Woo-Lemon. She's got her Woo-Woo-Women yoga pants on right now. I can guarantee you. I can promise you. So there's no way that is good for Lululemon's bottom line because Woo-Woo-Women is taking all the market share. And so we're going to go into LULU here. And let's go ahead and I think we got to play it to the downside. So let's go into the front week. And I'm kind of thinking, I don't know, guys. I can smell the smoke in the air. Can you smell the smoke in the air? Or Daniel was smelling it all the way from Italy. And so as long as you're somewhat close, you could be in Georgia, you could be in Alabama, you could even be in like Costa Rica, and you can probably at least see a little something on the old horizon there. Let's do a downside butterfly for the front week. So I'm kind of thinking, what about a 155? Lululemon is $160. Wait a second, hold on. Wasn't it like $300 recently? And I mean, not that long ago. I mean, we're talking. Yeah, look at this. Guys. Again. Josh is saying something about Viore. No. Forget about Viore. Look at this. Do you guys see that? Look, now you can look at that. You can look at 10Ks. You can listen to earnings calls. You can do all that stuff. You can measure your support, your resistance, your Elliott waves. That's not it. That's not what you need to be doing. This is all woo-woo. That's all this is. Right? Look at this. It's going from 525 to 161. And you think the bottom is in? We haven't even gotten started. Like my wife is telling all of her friends about her woo-woo women. All of them. Like they're asking about them. I got people, you guys are emailing me about them. I've gotten several emails. People asking me that because their wives want to know, like, hey, where did she get the woo-woo women? Just Google it. Just Google woo-woo women and you will find exactly what I'm talking about. And so Josh is talking about he's wearing some woo-woo women right now too. He's got the men's style. They've even branched out into men's clothing. Right? And nothing says woo-woo women men's clothing more than Josh's wardrobe. Right? And so again, they're branching out. They're diversifying. They're going horizontal. They're going vertical. And so, man, it's just, you can't stop them. You can't stop them. And so anyway, let's go to Lululemon here. We're doing this thing to the downside, 1,000,000%. Ah, man, I might even do a 2-lot. This is just way too obvious. And so let's do a 155, 145, 135 butterfly. And let's see how it shakes up. What is it? Maybe a couple bucks? $2 maybe? $1.83. Wow, man. They're just giving these things away. I feel like I'm shopping at Woo Women. Like this is some good stuff. 155, 145, 135, $1.79. I mean, I'm just gonna go with a 1-lot just in case we're wrong, which does happen from time to time. But I like it, man. I like it a whole lot. Lululemon to the downside. Because we are all woo-woo women in this home. And so let's do it. Let's push this guy out. And there you go. So let's see here. Can't get filled. Let's go. $1.82. See if we can get filled. Oh. Can't get filled at $1. See, they don't even have good liquidity. They don't even have good markets. If woo-woo was on here, the markets would be pristine. It would be amazing. $1.84. I already got filled at $1.84. Okay, so there's your Lulu earnings play. We're playing it to the downside. Again, if you're brand new to the show, welcome aboard. I'm glad that you're here. I hope that you stick around. You should literally do the opposite of everything I do for my earnings plays. Trust me, I'm not very good at overnight directional plays. I promise you. And if you don't believe me, just wait. Just wait about 6 hours and you'll see for yourself. And there you go. So, all right, let's go ahead and let's see. Oh, Josh brought me another Amazon Prime surprise and delight to my doorstep. Thank you, my friend. So Josh says, Danish Dynamite said, hold on, I gotta change my thing here a little bit. At the top of the platform, Tasty features Portfolio Delta and Portfolio Theta. What is the importance of highlighting extrinsic value? Portfolio Vega seems more important to me. Enlighten us, please. Yes, definitely. So at the top of your platform, and I'll even show you guys, I don't do this every day just because for compliance reasons and stuff, I don't think it's something that we are supposed to be showing every single day, but this will just be our little secret. And so like if you look at my account numbers, so like you can see, I mean, we're up a few shekels on the year. It's nothing great. Last year we had a solid year. But, it shows you this is all the stuff that you guys see, right? And so right now I'm a little bit bullish and I've got a decent amount of Portfolio Theta. And so this is what Danish Dynamite is talking about. Portfolio Delta, Portfolio Theta, and extrinsic value. And so Portfolio Delta, obviously, it's going to show you like beta weighted wise, like, aggregate, your aggregate exposure directionally. Are you bullish? Are you bearish? It's taking all of your positions together, right? All of these guys. And it's basically combining them and standardizing them into one number. Okay, that's really nice. Portfolio Theta, of course, again, this is where, kind of like what I talked about on calculated risk a few nights ago, which I know you guys are watching and I appreciate you guys for that so very, very much. Oh man, what is tonight's show going to be about? I can't keep up. I know the one I just recorded. That one is about, that one's a good one. That one's about synthetic positions in your IRA. That one's going to air tomorrow. And so I don't know what tonight's is. I can't even remember. Yeah, I have no idea. But anyway, portfolio theta, we're typically between 0.1% and 0.5%. Now, in this account, I've got about 35,000 these days. And so that would be between 35 and like 175 on the high end there. And so being at about 79, I'm right at about 0.2% of theta, which that makes sense with volatility being a little bit elevated right now. That definitely makes sense. And then extrinsic value, this just shows you like how much actual literal extrinsic value you have working for you. I don't really use it on a daily basis. Sometimes I might think about it in terms of like, if like all of my expirations are kind of concentrated in like April or May or whatever. And I understand again using the Tasty research and understanding, I'm not going to keep all of that extrinsic value. I may only keep 25% of that extrinsic value. That's typically a good estimate when you factor in all the losers and all the management and rolling and just everything that happens, obviously. And so looking at like my number at 3,700, it's like, okay, that's about what, $900 then? A little bit over $900. And I would have to look through all my expirations to kind of see, when is that $900, anticipated to kind of come off? When is it going to kind of show up in the overall P&L in the account and, with, net licks and things like that. And so sometimes I'll think about it that way, but it's definitely third fiddle in terms of these main numbers that are on the top of the screen: portfolio delta, portfolio theta, and then extrinsic value. And so Danish Dynamite, hopefully that helps a little bit. That's how I use it. It's not necessarily intended to be the only way that you could use it or even the best way that you could use it, but it is the way that I use it. So hopefully that helps a little bit. And so very good question though there, Danish Dynamite. I appreciate you, my friend. And so let's see. If I go to, can I surprise and delight somebody else? Oh, I see Sergio saying, Autumn Schultz, founder of Woo Woo Woman. No, it's Woo Woo Women, actually. It's Woo Woo Women. And so, oh, that's too funny, man. You guys make me laugh so much. And so let me see. Can I find let's see. I see Ron Vishar says, hey, Dr. Jim, good luck with your dentist. Hopefully he doesn't sell gold puts based on client demand. I mean, that would just be smart. He's got inside intel, though. I mean, he's seeing it on the front lines. I mean, I've got a gold crown in the back of my tooth on one of my molars, and so he's seeing it. And so I don't know, like if he's seeing more gold crowns, or maybe he's pushing product. Like Theta Trader, who's our resident street dentist who pops into the stream, on a pretty regular basis, right? I mean, this guy's, he's not a black market dentist. This guy's like a white market dentist. And so I don't know. Maybe he's pushing product. Maybe he's pushing gold. Maybe he's got a few, MGC contracts on the side. I mean, that would make a little bit of sense, right? I mean, the Hunt Brothers are doing cheese and pepperoni. Like, again, you've got to expand horizontally. You can't just go vertically all the time. You got to get your hands in different cookie jars, man. It's just smart business sense. 100%. So Ron Vishar, thank you, my friend. I do hope it goes okay. But let's see. Oh, and then Point B Traveling says, Dr. J, your thoughts on MU? MU has earnings tomorrow? Micron? I thought they already had earnings. Wasn't that today? No, it's tomorrow after the bell. Ah, okay. So I'm not going to trade this because, again, I'm going to be out and things of that nature. I would probably prefer to do this tomorrow. But I don't know, maybe I'll take a look. Because it'd be kind of fun to come in on Thursday with a little something cooking. So again, Micron, I mean, I couldn't tell you what they do. I couldn't tell you what they don't do. I know that they're some kind of tech company. I mean, I don't know. And so if we go in here, I mean, the markets are fairly liquid, right? If we go to the Tasty Trade liquidity meter, you've got 3 stars on this guy, right? That's not bad. I mean, 3 out of 4 is better than 2 out of 4, and it's better than 1 out of 4. I mean, generally, from a liquidity standpoint, 4 out of 4, obviously, I'm good to go. 3 out of 4, most of the time, it's kind of like a yellow light, but I'll probably proceed with caution. I will probably proceed, though. 2 out of 4, that's where I'm kind of like, okay, this might be pretty bad. Like, this could be a problem, getting in. It could be a problem getting out. And that's just problems left and right. And it's like, all right, it's already hard enough to make money in this thing that we call active trading. Man, I'm just doing myself a big disservice if I get into a highly illiquid name when there's so many liquid options available. Like, it's not like there's a shortage of liquid things that we can trade. Like, we can trade SPY, we can trade AAPL, we can trade AMZN, we can trade Nvidia. Like, we can do all these guys. So we don't have to do Micron or whatever else, but it is 3 out of 4 stars. And so it's not too bad. So I think it's decent. So let's go in here. I mean, I don't know, man. I think so tomorrow, so let me give you all my prediction for tomorrow. I'm not going to trade it again because there's no show and I don't want to, we could do SPX and those kinds of things, but I'm going to lay low on the sidelines for FOMC. But guys, I truly haven't felt better about a trade in quite some time. Everybody, and I mean everybody. This is Johnny Pool is 47, Johnny Pool is 48, Johnny Deck Chair is 49, like all of them. They're all calling for the apocalypse tomorrow. Like some people are saying Powell's going to be talking about rate hikes and this. No. Look, this is it. This is a bear trap inside of a bull trap inside of a bear trap. And so when you think about tomorrow, there's only one way to play this thing, man. You need to be mega pint bullish tomorrow. Gotta be. It's the only way to play it. Doesn't matter if Powell cuts rates. He's obviously not going to. Doesn't even matter what Powell says. As long as he comes out with some shade of lavender, we are good. We are 1000% good. And so tomorrow with FOMC, you got to play it to the upside. So I'm not going to play FOMC directly, but I'll play it indirectly with a little Micron. So I'm kind of thinking, what if we do a little butterfly in Micron for Friday? And what if we did like a 470, 500, 530 butterfly to the upside? Is it $5? 496. Man, this is serendipitous. If I've ever seen it, 470, 500, 530. So we got a little Lulu to the downside. We got a little Micron to the upside for a little over $5. There you go. Got filled at 503. So beautiful, beautiful thing. So thank you so much there for the Micron trade there. Point B traveling. Let me write that down. Point B is Micron. Got it. Beautiful. So thank you there, Point B. I appreciate you, my friend. Let's go ahead. Man, let's go back to the beginning. Where are you guys at in the beginning? I appreciate you guys so much. Oh, Danu's in the house. What's up, my friend? Hello, Dr. Jim. The only gotcha from Theory to Practice is only on the weekdays. You just can't get enough of Dr. Jim, man. I appreciate you, and I'm going to send you that cash, and I'll send it in euros because I know you're in Italy for you putting that comment in the stream at this very time. So thank you very much, my friend. That might actually be changing sometime in the near future. Again, I don't know if I can say anything more at this point, but that could be changing in the near future. Not necessarily from Theory to Practice, but potentially something else. And so stay tuned and you guys will learn more at some point in the next 1 to 19 months. And so the Preston's in the house. What's going on there, the Preston? Dr. Jim, you are the king. What's up, my friend? I appreciate you. GIS is earnings in the morning. Is that General Mills? No, that's not General Mills. That's something else. What do we want to do? Thanks for all that you do. I appreciate you. I'm probably not going to do anything because we already got Lulu and we got Micron. It is General Mills. I did have it right. Wow, they're in the morning and they're still doing it. Wow, $39 stock. Okay, all right. I think I'm going to pass just because I've already got enough things going on. And I'm not going to be in tomorrow. If I was going to be in tomorrow, it might be a little bit different. You know, we'll do Lulu, we'll do, Micron, we'll do Woo Woo, we'll do all these guys. But for GIS, I think we're going to pass. But good luck to you there, my friend. I hope that it goes okay. There's the Danish Dynamite, the surprise and delight that Josh brought to my doorstep. So thank you, my friend. Let's see. Narciso's in the house. What's going on there, Narciso? I appreciate you. I don't recall your being in the chat before because a name like Narciso, if I'm even saying that right, man, that is a power move of a name. If that's how you pronounce it, even if you pronounce it a different way, it's probably no less powerful. And so please let me know. Write it phonetically in the chat if you could, and I'll try to remember to say it right next time. But I'm going to go with Narciso for right now. Appreciate your work, Dr. Jim. SPY April 10th, Jade Lizard. 15 delta short put and then the 20 delta short call. Okay, let's take a look at it. So SPY, you're going April 10th, which is a weekly. So I would first thing I'd probably just go to the monthly because it's right there. It's only another 7 days and the monthlies are going to be more liquid than the weeklies. Now with SPY, this is a very liquid product, so it's not typically something you have to worry like a ton about. But still, just to kind of get all of our ducks in a row, I'd probably just go to the monthly. So I'm going to go ahead and do that for the purposes of kind of working through this potential trade here. So if I go into April, you're thinking, what, a 15 delta put? Okay, so if I sell a 15 delta put in SPY, that's going to be, well, the 625 is a 16 delta, so I'll do that. I sell a 625 put for $4.25. And then you're going to sell, you said a 20 delta? A 20 delta short call. Let's take a look at it. So I sell a 20 delta short call. And then which one are you going to buy? You're going to buy maybe go what, $5 wide, I would think? Something like that. So if I do, let's see. If I sell, I haven't done a Jade Lizard in a while. This is a pretty solid looking Jade Lizard though. I can sell the 625 put, and then I sell a 696 701 call spread. That's going to essentially eliminate my risk to the upside. Like, in fact, if we look at the curve view, wow, we're looking at the curve view. Man, look at this. We're doing curve views on the show. Man, this is some good stuff. And so y'all been asking me about the curve view for years, decades at this point. And here you go. I did it. It only took me, 9.5 years to finally do it. How do I use this thing? So let me go. So let me go ahead and yes, there you go. There's a visual representation of the J Lizard. Man, that's really nice to actually see the visual representation of the curve view. I'm zooming in like incorrectly though. It's kind of like I can't get the spacing right. But anyway, you can see if you squint a little bit. Again, I'm not as adept with the curve view because I don't use it very often. I'm more comfortable on the table view, obviously. But you can see, hopefully you can kind of see that you've got more profit in the middle there. Obviously, if you run into the Goldilocks scenario where the short put and the short call spread both expire worthless. But then even if the short call spread goes in the money and the market rips, right? Again, if we get the lime green tie, if we get the neon green tie, the SPY 701, man, that's a minimum. That's going to become new support real quick. Don't you worry about that. But you're not hurt to the upside. That's the beauty of the J Lizard. Now, obviously, you have risk to the downside because you still have the naked short put. But, I like it, man. I really like the way that this guy sets up. Obviously, the buying power is pretty significant, so $9,000. So you're going to probably want 150 grand in your account minimum to do this trade the way that I think it's intended to be done. If you've got less than that, then probably try to find a smaller product. But thank you there, Narciso. I appreciate you, my friend. Brian's in the house. What's up, Brian? Rance is in the house. Sam L's in the house. Man, I appreciate you. Sam L, Doc, the accountability partner, reporting in today. Marks 1 month into your dad bod challenge. That's correct. It's slow, but it's steady. Are progress picks allowed in the professor-student relationship, or does that violate the syllabus? No, I saw the progress picks, man. I saw them. Guys, Sam L, don't ever let him fool you. My man is shredded. My man is absolutely shredded. Like, absolutely shredded. Like a Dr. J, you got the ooey, you got the gooey, you got the marshmallowy physique. Man, Sam L, absolutely shredded. Absolute status in Shredsville. So nice job there, Sam L. I appreciate you, my friend. Yes, very, very nice job on your part. I'm moving a bit slower than I would like, but it's okay. We are moving forward. And so that's the way that it's going to be. So Griffin Jones, backwardation is a buddy of my friend Theta. There you go, my friend. Yes, Daniel Perkins is in the house. I hope you are surprised and delighted to see me, Doc. Happy trading, everybody. You know that I am, my friend. I most certainly am. And so Jerry Kramer for the algo split up into 3 separate comments. And so that's how you do it, my friend, for the algo. 1,000,000%. Flex Chavez in the house. Man, I got Narciso. I got Flex Chavez. Man, these are some power move names. Dr. Jim, could you review the short report on SoFi? I can't review any reports because I don't know what you're talking about. But but the short straddle that we have on, man, we're very close. In fact, wow, we're very close to our profit target. I think this is another one there, Flex. Let's go ahead and take this guy off. Again, in the spirit of removing risk going into the binary event that is tomorrow, let's take SoFi off. I mean, I was going for about 85 cents. I've got 80 cents in my back pocket. So I'm not sure if this is what you were asking about, Flex, but when it hits a profit target or it gets close enough and it's economically significant, don't think twice about it. Like, don't think twice about it. Just take it off and move on. Like, I think that this guy has, done all that we asked it to do. And so I think it's time to go ahead and just be done with this guy. And so thank you, Flex, for bringing that to my attention. Let's go ahead and let's see if I go 262. We'll see if we get filled. No takers at 262. Maybe we'll find somebody here at 265. Yeah, there's got to be somebody. Nobody? Brutal. Nobody at 265. All right, let's do, we're doing 267. That's what we're doing now. I guess so. All right. Oh, got improved at 266. Okay, so there you go. There's your SoFi trade. So nice. I'll take it. Thank you there, Flex. Griffin's in the house with the algo comment. Look at that, man. You guys know what you're doing. I appreciate you. Look at Point B in the house. Good afternoon, Doc. In theory, I quit corporate, but in practice, I'm watching Dr. Schultz at 1 p.m. on a Tuesday. My man. And so, hey, the secret's safe with me, man. I mean, I'm showing P&Ls. I'm showing extrinsics. That's our little secret, right? You're at work, but maybe not exactly at work. That's our little secret. Don't you worry about it, man. Like, I got you covered. I'm not going to tell nobody. And so, Sam L, dear algo, options trading rule number 1. If it looks too good, there's a gotcha hiding somewhere. That's true. That is true. That is options rule number 1, 2, and 3. Like it's always gimmies and gotchas, man. Always. So if you see a gimme and it looks nice and juicy, you better keep your eyes open because there's an equally juicy gotcha that is somewhere very, very close by. And so 1,000,000%. Joel James, it's all for the algo. Dr. Jim, thanks for all that you do, man. I appreciate you so much, my friend. Ranch, I'm short a put in SoFi. Well, good luck to you, my friend. I hope it works out. Or short straddle. You know, it was kind of like pulling teeth a little bit. I'll allow my dentist appointment tomorrow, though there are no extractions that are scheduled, but that may change when I get there. I don't know. And so, but nice job there, Ranch. Hopefully, the short put works out. Hopefully, you got a little bit of room and it's working out. And good luck to you, my friend. Catch that voltage in the house. What's up there, Catch that voltage? Yeah, did you do the hood trade? I think you did, if I'm not mistaken. Hello, Dr. Jim. Gold IV is still high. How about a bullish iron condor? Yeah, I'm almost at the end of the show, and I want to get to a few more trades. Maybe remind me of this later on this week or next week, and we'll look at some GLD trades. We got to do something in there because, yeah, we don't have any gold exposure right now. iPod Touch in the house. Happy St. Patty's Day. Dr. Jimmy or Jimmy. Yes, that's correct. You promised me a St. Patrick's Day massacre. S&P's up 20 and a quarter. Like you promised me a St. Patrick's Day apocalypse. NASDAQ up 113. iPod Touch, man. Like you gotta come through for us. Like we're counting on you for the event horizon, I should say, known in advance. Let's see. Viggy Zags. This is quite literally the most important Chair Powell purple tie event time to, of our lives. Yes, that's 100% correct. Jared Kramer, market in a won't let you go up but won't let you die too hard yet mode. That's correct. It's very back and forth. That is so true. Adam Arnfield, can you do your show from the dentist chair? Please ask him to give you extra Novocaine or maybe some laughing gas, right? Maybe a little laughing gas. Hey, your boy needs that watch time. I need the clicks. Like, I need the views. I mean, you got to do what you got to do, man. Like, you 100% got to do what you got to do. So I'll check on the old Wi-Fi connection in that guy. But let's see. Shawshank is in the house. Dr. Jim, one for the algo, man. I appreciate you. Look at Joel James. Dr. Jim, you live in Florida. You don't need teeth down there, do you? I see what you've done there. Nicely done. Well played, my friend. And so, yeah, I'll find out tomorrow. I'll report back on Thursday. And so let's see, Samuel, Doc teaching strategic diversification. Meanwhile, my portfolio strategy is hope these charts don't move together. That's all of our portfolio strategies, man. Like 100%. It's like, man, I really hope this works out. And so hope is the best investment strategy out there. There's no question about that. But man, I'm out of time. I can't believe it. Look at Argent Purrs here. Nancy showed up. Man, we got, who else is here? Jeff is here. Man, Bogus family is here. Brian Dowdy's here. Demi's here. Man, MP in the house, man. I appreciate you guys. I appreciate you guys so much, but I got to run. I got to get you guys over to Tim. If I can ever help you guys in any way, please shoot me an email. I'm still a little bit behind on my emails, so I appreciate your patience. But if I can ever help in any way, please reach out. And of course, I would love to hear from you guys on Twitter. I'm at JSchultzF3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with trading the charts. In the meantime, guys, trade them small, trade them heavy, and stay grateful. We'll see you guys on Thursday.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Okay, cowboy, here's an earnings event. Keep an eye out for them when you open your trade. They're fast, they're loose, and they can take you for a wild ride. But that's no reason to steer clear, because you can be your own personal earnings event if you take the bull by the horns. What makes earnings events so special? Before the event, people will start guessing how the stock will move once the earnings report is released. That, in turn, makes the options IV rank higher. Like way, way higher. The nearer the event, the more the speculation, the higher the IV rank. Then right after the event, IVR goes the way of the buffalo. If you sell high premium options right before the event, when IVR is really high, you can take advantage of inflated prices and lock your profits when volatility disappears. Only if, and this is a big if, the stock doesn't move against you. If it does, well, sometimes you eat the bear and sometimes the bear eats you. Earnings events can hit you hard. They can also pay off big and fast if you play your cards right. Pretty simple.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Hello everybody, Tim Knight, and we have another green day on our hands. We've been basically going up since Friday's close. So Friday, besides being Friday the 13th and a bit of superstition there was, concerns about there's a weekend ahead and what could happen. And so there's a lot of selling pressure, and that seemed to have climaxed to the downside at the close on Friday. And so we started a lift on Sunday, more on Monday, more today. We are not at today's highs. Those were kind of achieved right around a few minutes after the opening bell. So the disturbing thing to me, who is rather short this market, is that we're getting buying based on nothing. The best way I can think of it, I guess, is to say the buying is based on no new bad news. So, it's like the old saying, no news is good news. The fact that things are kind of like silent is enough for people to pile back in again. No one surrendered, nothing, there's been no diplomatic breakthroughs. I mean, it's just kind of a stalemate at this point. That's enough. From a charting perspective, nothing's been broken, except some of the equity futures is getting a little too frisky to the upside in some cases. I say again, based on no news. If there had been some huge announcement, it'd be a different story because the cat's out of the bag at that point. But based on just silence, you kind of wonder, well, what's going to happen if there is good news? How much of a blast higher might there be? The planned news event, of course, is tomorrow, which is the FOMC meeting. I can't imagine it's going to be anything of consequence. But, it's 8 times a year, and it's, were it not for this war, it would definitely be the highlight of the week. We'll see. But let's jump into the charts in the time together. We're going to start off here with a spider. The topping pattern is still quite intact. Very, very nice, very clean. As I said, we kind of bottomed out on Friday, and we have undone all of Friday's damage, all of Thursday's damage. We're basically back up to where we were last Wednesday. In other words, a little below this mass of overhead supply. So for myself, I got stopped out of a few items this morning, took a hard look at them again, got back into a few. So I remain medium aggressive positioned. I'll just say it one more time, then I won't say it anymore. Based on the fact there's no news, it does concern me because it really does make me wonder what will happen if there was actually some positive event, although I can't imagine what that might be. The diamonds, DIA, are also up. And, none of this stuff is up fantastically. I mean, the diamonds are up 0.23%. It's not like some bonanza. But they are a ways away from their own resistance. The diamond resistance isn't quite as clear as the spider resistance because the diamond overall has been so much weaker than the spider. We're way down here, but as you can broadly see, for weeks now, even before the war started, we've been kind of in a series of lower lows and lower highs, just the very definition of a descending channel. The small caps, IWM, are stronger, quite a bit, 0.73%. And there's the massive overhead supply on this, which doesn't get really too thick until you get well into here, this area around about here. So there's room to roam for the bulls without completely spoiling the bearish party. It's just kind of a drag to put up with it because we were weak, nice and weak there for a while, but the past couple of days have been definitely recovery mode. And the cubes are up a little over 0.5% right now. We've sealed this little gap, a very minor price gap right there. We're still just in this thicket of trading that's been going on for months and months, even before last Thanksgiving. And we're nowhere close to breaking it, either to the upside or the downside. We're almost perfectly in the middle of it right now. So quite the morass we're dealing with, which is why I, kind of appreciate being a sort of a bottoms-up trader, because these little individual positions take care of themselves. One by one, if they need to get stopped out, they get stopped out on their own. But sort of the overall mass of positions is kind of this body I've constructed, and some pieces of the body will get chopped out and some will survive. Volatility-wise, we look at the UVIX, for example, well off the peak from last week, which I guess would have been Monday's open. And so we're down about 30% from that peak on this instrument, which is a double long VIX futures ETF. But it's a pretty impressive base. We actually haven't had a base this clean since, not recently, just before Liberation Day. You can see here we based out and had a very brief, very powerful rally before things went plunging again. As with most leverage instruments, it tends to just grind its way lower. But this isn't a bad little base. And if one were truly bold and thought that this is the quiet before the storm, wouldn't be a bad way to go. Because like I said yesterday, and I don't even think it was this particular instrument, it was a similar instrument. If this were just a plain old stock, looks like a good buy. But, just stay cognizant of the fact that it is a leverage creature, and so has that going against it. Another, just trying to help out my bearish friends here with any glimmers of hope. This is FNGS. This is the kind of an amalgam of the FANGs stocks in the form of an ETF. And they kind of reached peak glory around Halloween. And now we can see in retrospect that we've got a fairly impressive top here, which we broke down, and weirdly, we've actually been rallying until recently on this back up to this level, and now we're starting to break down again. So that it's not the cleanest top out there. There's definitely cleaner patterns, but it's not bad. And I think it's indicative and representative of the market as a whole, and holds out hope that tech may not persist permanently. Of course, this year, unless things really go sideways, it's going to be a big year for IPOs. SpaceX, biggest IPO of all time. There's chatter about June for that one, which is not that far away. And then maybe Anthropic. And although I personally don't think it'll happen, even OpenAI, some people say this year. That seems a little far-fetched to me. But another item, which is pretty interesting, is HYG. This is the high yield based on corporate bonds fund. Nominally doesn't move a whole lot. You're not going to get giant dollar changes on this, but it's still an interesting little chart, particularly in as much as we did a beautiful seal of this price gap today. So we were going down, 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 had a big gap down between Wednesday and Thursday of last week, and today we sealed it up just about to the penny. So that also is a very formidable blob of overhead supply that would suggest that corporate bonds are at risk as well. And bonds do tend to lead equities. Over in crude oil, which is a market of tremendous interest for obvious reasons, we are up on this one today, 2.56%. Very broadly speaking, measured in years, you can see that we were descending for year after year after year. And that all changed with the war. And so we've exploded from the 60s up. We almost went double. It's kind of shocking when you look at it in this. So over the course, literally doubled. And it's funny to me here in California because you hear about there may even be $4 gallon gas. $4. If there's gas for sale here, $4 a gallon, there'd be a line 8 blocks long. I can find you $7 gas around here. If you raise taxes high enough, you'll see those sort of prices. So yeah, if you see 4, count your lucky stars. It's approaching 7 here in the Golden State. And we haven't really even felt the effects of these changes yet. Of course, it's not like crude oil goes up 20% and the next day it's 20% higher at the gas station. There's weeks and weeks and weeks to go by before that kind of finds its way to your local gas pump. But the huge beneficiary of this has been, of course, oil companies. Here's XLE, lifetime high. And I was just a kid in the time, but I vaguely remember in the late 70s, there was this thing called a windfall profit tax, which I think I could be dead wrong on this, but I think it was a tax against energy companies, very politically popular at the time, I'm sure, but basically to tax them on these fat profits they were suddenly making just because the commodity was higher. This is not the environment where that sort of thing would happen, but after November, maybe so. Maybe they'll come after them because they're just raking it in right now. XOP, 1.64% gain, a new multi-year high. As I mentioned yesterday, XLE is in lifetime high territory. XOP has had much higher prices years and years ago. Just a few shorts. I'm going to pick up the pace here. Just a few shorts that I wanted to. It's not a fantastic day for shorts, surely. Of my positions, maybe not quite half are down today, but that's not terrible considering all the equities are green. All the equity futures are green. A few odds and ends wanted to share. HIMS is basically unchanged right now, but I do like this as a short position. This is up FinTech, TIGR, like Tiger. This one's also up a little bit, but I also like this one. I'm short Tiger. DLTR, Dollar Tree. This is down over 2%. We've got a pretty nice little head and shoulders top there. It's not perfect, but it is breaking down nicely from that pattern. Axon, I trimmed a bit. Axon's been fantastic, just down, down, down. I took profits on about a third of that position today, just because it was nice and fat already. INFY, which is Infosys. This has been tracking down nicely too. Look at this, red, 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 red. So hang on to that one. Today we've got a dip of about 0.5% on Infosys. Even though I don't think Bitcoin's necessarily topped right now, I did yesterday short Mara, M-A-R-A, which is certainly going to be influenced by Bitcoin's success or failure. And this is slipping below what I consider a very important line in the sand there. Then kind of an obscure one for you here, WRD. This is WeRide. This is a Chinese company, I believe. It is a tech company that specializes in the chips for autonomous driving. WeRide, WRD. And one that really gave me a scare today, but it's turned out great. Actually, I had puts on this already. I bought more yesterday. It spiked higher today and then just turned tail and went straight down. So CRD, Credo Technology. This is down double-digit percents right now. A huge bearish engulfing pattern on this. Underneath this very pretty top. So they opened strong today. They climbed a bit and they've reversed. And so that's looking just fine. So I clicked into that and, as I said, amplified that position yesterday. So as for the big equity futures markets out there, just to thumb through them, here's the YM. And there's not a hard, deep line in the sand as to what constitutes resistance on this. Something like that probably isn't terrible because that was the last kind of major peak. That was back last week, I guess, on Tuesday when we had our last bout of serious strength. So that's probably not a bad way to go. The small caps, RTY, today's peak was probably not a bad level of resistance for that one. You can see I've edged out with a rectangle there, what I consider to be a pretty decent reversal pattern on RTY. The NQ, the NASDAQ, as I said earlier with the cubes, we're just in the thick of it, right in the middle. So given its recent history, just kind of wiggling its way lower, down, up, down, up, down, up. Maybe we'll start to sink on that one some again. There's no real reason, earnings-wise that it should do so. So it's all kind of up to the psyche regarding the war. And then lastly on these, the ES, as I said early in the day, it was did push and pierce into that pattern to some degree, and it retreated from that pretty quickly. And we're still up for the day by 0.27%, so nothing massive, but it's a little bit disconcerting that we're seeing that strength. But this was pretty easy because there's not much trading here. There's lots of trading activity here, so I think this will be a much more formidable wall of resistance. And then finally, Bitcoin is up. We're up around 75,000 now. I actually have tiptoed. I've started to get into an inverse position on that. I'm just being impatient. It's probably dumb on my part. but I have entered a starting position there. But it still could well get up to as high as around 81,000 before really pooping out. But let's keep a close eye on that because that will have some influence, I think, over equities. Okay, I actually closed a few seconds before the bottom of the hour. Good. I will see you later, and I hope you're doing all right. Thanks for coming by.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Hello, everybody. Top of the afternoon to you, Jenny Andrews.
Top of the afternoon to you, Liz. I'm actually getting excited. I ran between the SIBO floor and the last call. I ran to the store and bought everything I need to make shepherd's pie since I had corned beef and cabbage for lunch.
I thought for sure you were going to say green beer.
No, shepherd's pie. I like shepherd's pie. I don't know if that would be considered a St. Patrick's Day dish, but I'm a fan.
Not gonna lie to you, don't know what shepherd's pie is, but we can talk about that offline because we only have 22 minutes to talk about the markets.
22 minutes?
Well, yeah, you have to leave early.
I'm hanging up like 1 minute early. I've got a phone call coming in at 3 that I have to take. Okay, so we have till 2:59, and this is last call. We have a lot of earnings on deck, and one of them.
I love that we're selling it like a lot of earnings because today Tony Batista legitimately said earnings are over. But I saw the list and I was very excited. Very.
Okay, what do we see here? Oklo, Lulu, DocuSign, Macy's, JBL.
All the above. It's going to be awesome.
Hey, is JBL like the speaker company? Is that what?
Sounds about right to me.
No, I don't know. No, I don't think so.
I don't know. I don't know. Press enter. I want to see how expensive it is.
Josh, is JBL the speaker company?
I don't think God let us know. I love seeing. You know what? I gotta tell you. You know what puts the skip in my step on Tuesdays?
Josh.
Getting to see Josh. That's right. It is.
Getting to see Josh.
I miss seeing Josh every day.
And he's shaking his head no, and I'm assuming that means JBL is not the speaker company. Okay, so we're in the platform. We've got earnings. I don't think we're going to worry about JBL, but we do have. I received an email. Let me read this to you. So I received an email from one of our favorites, and it says shares of Oklo rose on Tuesday. They're up only 2% now, but they were up higher. How high did it get?
I mean, the whole market was up a little bit higher though too.
Oh, up to 65. Yeah, it was up to 65. So, and we're trading only 60 now. So, because they secured its first license from the U.S. Nuclear Regulatory Commission, marking a key step toward commercial activity as investors await progress on its core reactor business. So that's why I was up earlier, up to 65, over 65, not anymore. So we'll see what earnings brings. We do not have a position. What do you want to do?
Oklo, I would like to. So it's a position. I know. What do we don't have anything in there right now, right?
No, we looked at it yesterday and we said we'd wait for today.
So I looked. This is what I did in mine. So I have one like legit Bob on fire trade. So I wanted to add to it because I've had bigger positions on than this. And I looked at the 3-day and I was like, okay, I don't mind it, but I don't know if it's going to go up or not. Not on earnings. I actually went to the 10-day, which is very bizarre because it's not even a standard contract.
Well, and you're going to be on vacation. So on the 10-day, March 27th, you're going to be on a cruise.
Yeah, but hopefully I'm not. Hopefully it doesn't get taken this far. Oh, you know what I want to remind you of? And I will remind you again and again and again when I leave.
Mm-hmm.
This is March. 1, 2, 3. Third month. End of quarter. Right here.
End of month, end of quarter. So on March, well, it's not in Oklo. They don't have it, but in SPX.
Yep.
On the 30th, and this is on the 31st, on the quarterly expiration, 31st at 2:40 p.m. Central Time, we're going to buy some calls.
Yeah, that's my plan.
The 0 day at 2:40 p.m. in the SPX 0 day on March 31st, 20 minutes till close. We're going to buy some calls.
What day of the week is March 31st?
Hold, please. Oh, let's see. Tuesday.
Oh, I'm back on Tuesday.
It's your first day back. It's your first day back.
Thank God. I was like, I'm going to load that thing up and go to the bar, but I won't be. I'll be here. I'll be doing this with you. We'll be able to watch it live. This is so fun.
Oh my gosh, we're going to be on last call. So when we zoom into last call on the 31st at this time in a couple weeks, we're going to buy some SPX calls. Maybe in the show, we'll buy some XSP calls.
And watch them. Because I watched it. It's the last 30 seconds a day. Now, that being said, hold on. We got to go back into Oklo. Breaking news. Really breaking news. And I'm sorry, Josh. Frank the Great is backing himself up because he's saying JBL is 100% the speaker company.
Okay. I didn't know. I mean, when I saw JBL and it says JBL, I didn't know that was the speaker company because every speaker just says JBL.
Yeah.
Do you know how many things in my house I have that say JBL?
And then he Googled it, and then he sent me he just kept saying it is the company, and then now we got the proof. So I love it. Thanks.
All right, well, then maybe we'll jump back into JBL after we put on a trade in Oklo. What do we want to do?
So that's what I was saying. Then I opened up the 10-day. Can you open up the 10-day? I mean, I don't know if it makes sense. I did this a little while ago, and I don't know if it would make sense anymore. I just wanted to get $1 here. So I actually think I went to the 51.
Sure. Yeah.
And then you can and then assess it to the 3 days. You can see it gives you a little bit of room. That was my point was I don't mind having a long position in an Oklo. I'm not loading the Flotola with it. I just wanted
51 versus 56. Yeah, 51 versus 56.
Yeah. It was enough where I thought, okay, that's a good enough buffer. How much is the 51 put in the 3 day?
Oh, like 30 cents.
Yeah, that's right. Okay, so I like that break even there. I don't mind entering back in around the 50 level.
All right. Oh, okay. Were you just yawning?
No, I hiccuped.
51. And I'm going to send it. I'm going to send it for $1. $1,700 in buying power, but we're hoping that's just temporary.
That would be changed. If I wind up being long Oklo, I will adjust the position into something else. But I'm hoping it's just going to be a little bit of a, 70 cents overnight.
I know. I looked.
Okay, hold on. The chat is lighting up. JBL ticker is not for JBL speakers. So it's contentious.
Sorry, Frank. You're still Frank the Great in our eyes.
I don't know. I have no idea. I can't keep reading the chat because I love when they talk amongst themselves.
It's fine. But we're going to pass on JBL. But we've got I had my dollar offer in at 51 and someone carped my market and put in a 98-cent offer.
Ooh, carp.
Thanks for nothing. Thanks for nothing. I'm going to replace it. I'm going, watch this. 97.
You're crazy.
Okay, so this is called carping a market. When there's a 98 offer and I put in a 97.
Yeah, that's carping the market.
Take that, 98.
I'm half tempted to get in and put in a 96. So, okay, good. So that is OKLO. So we're, with that, we don't care if it goes down a little bit. We just don't want it to go down, 1.5 times its expected move.
Yeah, sure. It's fine. We're not too worried about it. Now, next up on the list is Lulu, and then we will look at DocuSign. Okay, Lulu 160.
Take a look at the chart in Lulu. I was in a Lululemon. I actually just had to protect my my new Lululemon royal blue Define jacket from my dog because he was trying to hide something in it. But I don't. When I look at this, I like the product. It's very challenging to think that this is going to take an upward turn. And then they just got sued again because they were making their leggings were see-through.
Their leggings I have never been a fan of Lulu leggings. Leggings, they've always been see-through to me. If you see, so my daughter in dance, every year they have to wear Lulu leggings. They have to wear them. They're so thin. These dance leggings that the dancers wear are so thin. Maybe not see-through, but they're not, to me, I've never been a fan.
There's different, like the dance leggings are very thin, but the other, I just like how the way you say leggings, because you got leggings. Leggings.
Well, the dance leggings are thin. I don't know about the others. I buy my black leggings at Costco, not
leggings. I get my leggings from Costco. Okay, so I don't know what I want to do here. So I put in a neutral calendar.
Oh, okay. Because
I looked at it and I was like, am I bullish? I don't know. Am I bearish? I don't know.
But when you talk about getting $1, so in Oklo, we were just getting $1 for, I think, to the tune of $1,500. It's probably similar here. We're getting $1 to the tune of $1,400, and we're down to the 140. Over a standard deviation away. It's failed in Oklo.
Sweet.
Now, I don't hate that.
Okay, and I agree with you, but there's some products that scare me for earnings. I don't know. I have no idea. So the probabilities are the probabilities, and I get that. But look at the fall it had from like 340 all the way down. Like Lulu.
Yeah.
I like trading Lulu, and I know it's been a long time, at like under 100.
This was when you were on vacation. And I was trading. I said, thank God Liz was on vacation and she missed this.
Yeah.
Because you were a big Lulu bull back then. And I had on, I think, Frank the inside kid. What they call him? Frank the indoor kid?
Inside kid. He was wearing leggings.
And after this, I was like, whoo, I'm glad we dodged this bullet.
Yeah, that's what I'm saying. So Lulu sometimes has my number. That's why I said if I was going to do something so baby.
Well, are you bullish or bearish? Because where'd you put your calendar?
I put it at the monies. I think I put it at the 160s.
Okay. Calls or puts, it doesn't really matter. I'm going to look at this 10-day, 3-day. 65 cents.
That's what I'm saying. When I say I didn't think it wasn't going anywhere, it was such a small trade.
But Lulu does move.
Lulu can and does move, and you've seen that. But I didn't feel comfortable pulling the trigger on anything. But I wanted to. This is how small my mind is. I like having things in. I want skin in the game, just so I know the price.
$70. But I'll be kind of annoyed if we make $70 on risking $1,500 in Oklo, and then we lose $70 on the Lulu to wash each other. And this was like it's $70 in risk, where the other one is a naked put. But I put it in. This is going to be a calendar home run.
We'll see. Who's to say? Okay, and then
DOCU we have something.
Yeah, DocuSign's down back, and I mean, honestly, how many times a day do you sign DocuSign things? I feel like every day. My husband's like, log into your email, you got to sign this.
I know. Oh, and yeah. So, you know me, if I got long at 150.
I know.
So if you liked it at 150, you love it at 47. Speaking of, I want to get in this. I'm actually in our show account. I don't have my account pulled up. I'm going to miss out on DocuSign earnings. Great. I'm going to do it on my phone. Watch how easy it is. Watch how easy it is to trade on your phone. Here I go. And I wonder if you'll hear the ding.
Thank you very much for the chat, because they keep telling me J Bill Speakers was bought by Samsung. Honestly, the chat is a wealth of information. I don't know what we would do without the chat.
Oh, they are wonderful. Okay, trade.
Funny, Griffin Jones. Funny.
Let's see where you can watch my phone order go through. We'll see how quick. So I'll go to the options, and I'll go to the 3-day, and I'll sell the 40 puts. I'll get in. I'm going to get more. I want more money. I'm going to sell the 45 puts.
I would go to the nearer term.
Oh, we're in the 31 day.
Yeah, that's what I'm saying. I don't know what you're doing. That's what we have as a durational trade.
Oh yeah, I'm just going to sell these 47s. Maybe the 46s. 46s for $1. I'll put them in for $1.90. That's too close. But
I was going to say, this is not a high probability trade. This is within the expected move, but I like it. I like your style.
Yeah, I kind of would rather have a little bit more money than let's see, $1.93. It filled. You never saw my offer go up.
Whoa, there it is. There's a $1.93 bid. Somebody tried to buy it.
I'm already filled. Well, at least I got in, because sometimes I get mad when I'm running last call and I can't get these trades in my own account.
Yeah, it's not that hard to trade it and try it and do the show. I do it all the time.
I've got to deal with you, Liz. Since you're going to be gone on your cruise, and I'm going to have guests on, TP, Fazia, Tony from Mexico. On your first day back, will you run last call?
Yeah.
Awesome. Because
I actually trade a ton while I'm running last call. I'm not going to tell you when I'm doing it, because I don't need to say hold on, but I do it all the time because I have two computers in front of me.
I am in a very small space. I'm in a very small space. So
yeah, you can't put two computers by each other. I can put like 4 computers here. I have one down, one medium, one high. I can go like this. While I'm going like this, I actually just put in a trade.
I'm in my closet, so I could reach over here and grab a pair of shoes. Here we go. Here's a pair of furry Birkenstocks, and I can reach right here and grab a pair of pants. I'm sitting in my closet, so I don't have another computer up and running.
Yeah, I'll run last call.
Thank you. So I can get my end of quarter.
We are teasing slightly because I've been waiting for March expiration for a very long time. Not expiration, end of March.
It happened once before. Once the market skyrocketed at the end of the day, and we didn't make as much as we thought we should have made. No. So
there is a lot of stuff coming out tomorrow. We would be remiss if we didn't do some public service announcements. Josh, hit us with the what's your assumption?
Sure. Let's see.
Yeah. What's your assumption? They have what's your assumption tomorrow. Please fill this out. Send it in. The Bat Brothers. See what I did there? We'll be going over any and all assumptions tomorrow. Try to stump them. Give them something good, but make sure they're liquid products.
Excellent.
And then also we have our refer a friend. So if you want to pull that up, Josh, thank you very much.
Can you reenact your commercial?
No.
Can you reenact your commercial with the correct dollar amount? You just reenact it. Do you remember it?
Got friends? Earn $100 for you and a friend. And then there's 2 martini glasses that clink.
Guess what I'm going to be serving tonight in martini glasses?
Martinis?
Green Rivers.
Rivers.
Okay, let's talk
anywhere. I tried to bring Green Rivers to Kathleen's house. I couldn't find it.
They're all over. They're all over Jewel.
Instead of Green Rivers, I brought scratch offs.
Today's your lucky day. Okay, so let's go back in the platform because I want to show you something, which I don't even know if you know this. Here's today's trades, right? We just did an earnings calendar in Lulu. We sold puts in Oklo. We sold these puts in AppLovin this morning for $4.50, and actually, right now they're trading $3.65. So
okay, open that up because that could be very wide markets, but I would cancel replace that. And see if
I'm gonna say $3.65.
Oh, look at how tight there! It was very wide this morning.
I put in at $3.65. These are the January. So if we can take $85 in a few hours, sure, we'll take it.
I'm not gonna lie to you. I would even pay $3.70 for those because you're going to take $75 in a couple hours.
Yeah, sure. I'll adjust it. But what I want to show you is yesterday. We got filled on so much, I think, after the show. I don't even know if you have any idea.
I have no idea.
Yesterday, after the show, wait, this is today. Campbell Soup, Hood. Did we trade Hood today? Oh, we rolled it. We rolled it. Okay. Yesterday, after the show, our MCL GTC hit.
Oh, our natural.
No. This was a new fill. Right? This MCL, downside ratio spread in MCL. That's a new fill. Okay.
We took $100 out of the natural gas butterfly that we had on for even. Probably a good move.
Did we? Or is
if you got it for 10 cent credit, we took $100.
No, this was a new opening trade. So these are new opening trades.
Okay.
So natural gas, we have our 9-day trade, but this was a 41-day trade we were trying to get in. So we got filled on 12.11 on that, and we got filled in the MCL ratio spread, and we got filled in Dollar Tree. That was a GTC to take 25%.
Okay, and those are the ones you got because the other one's at 10.19.
I thought the Dollar Tree might have made you happy because that was something that
it does make me happy. I'm sorry. Let me try it again. Tell me again.
We got filled for 20. We made 25% in Dollar Tree.
Woo!
Thank you. That's the enthusiasm I was looking for. But as far as today goes, earnings trades, Lulu and Oklo and DocuSign we're already in. So
DocuSign we are already in. Yeah.
251. I'm gonna go.
That's pretty good for earnings. Last call goes by in a flash, especially with earnings and all the public service announcements we need to do. And I would like to say tomorrow, can you roll to? I know you're already in Twitter. Can you roll back to Frank the Great's what he gave us for tomorrow? Where were we looking at all the stuff that's coming out? Oh no, it was on.
No, that was in the
we've got the FOMC minutes and the PPI coming out tomorrow. There's two big things that are coming out tomorrow.
There are a couple of things coming out tomorrow.
Yeah.
And Mikey's showing us his BBWI trade again. Oh, yeah, he really did. There was a glitch in the order chain. He sold the straddle. Remember, we kept thinking he did the combo. He actually sold the straddle. Okay. So Mikey's getting not selling straddle.
It looked like he had sold the stock. It looked like he had done the combo with puts and calls where he was short the stock.
So BBWI again, Bath and Body Works. Now, from us, we just sold the put. He sold the straddle. Again, makes me a little nervous. That's why we created the big lizard where you could, sell that straddle, buy a call or some call, just so you don't have that unlimited upside risk, because the upside always scares me more than the downside.
And I think that we are probably, I think it's because we've been trading for so long, but I think the upside always scares me more than the downside. Well, and just because the way that volatility works, there's a recourse for in a regular product. If it shoots up, all the volatility gets sucked out of it, and then you're kind of left without a recourse. Where something goes down, typically there's a little bit more volatility. You can keep rolling it. You know where the bottom is. There's no parabolic move to the down. There can be parabolic, but your floor is zero.
Right. How many times I answer way more emails about people getting hurt on naked calls than naked puts. Naked puts, you know what to do with, right? Throw it. You got the stock. Now you've got the stock. Throw it in your black tape column. Put some black tape over it and just keep that stock. Sure. Or like you said, sell calls against it. Vol will be higher. I still have some people burned in my brain of I had the short 205 calls in Apple and now it's trading 280, or I have the short there were so many emails on I've got these naked calls and it's blown through them because we lived through a period where the market went straight up and some things moved quickly.
And I would some of my favorite nights were when you and me and the crew, and especially Tony from Mexico, would sit around and talk about trading strategies. He's got a brilliant mind, and he's coming on when I'm gone. So he and one episode that we did together, we swore off naked calls. Now, granted, I think he's dabbling back in where everybody does. Because you say you're never going to do it again, you're just like, okay, just a little bit.
Hey, you know what? I said I wasn't going to have any wine this week, and I had one glass yesterday afternoon with lunch. I couldn't help myself.
Right, exactly. So you say you're never going to, and then you're just like, okay, just a little bit, right? So that's this is true of everything. So I know it was a long time ago that Tony from Mexico kind of swore off naked calls because his size is big, and when things rise, you get hurt. I bet he's dabbling a little bit into it, but while you're with him, Number one, lock him in for my show. And number two, see where his stance is on naked calls.
I'll ask him. I'll ask him and see what what his naked call position is right now. If he's back to selling naked calls, or I don't know. And okay, and I want to. It's certain individual products, right? Because also naked calls in ETFs, I will. And you saw we have naked calls. We probably have a naked strangle in EWI. Here we do have a naked call here, or EEM. Oh, we have a jade lizard there. But like I will sell naked calls in ETFs, but it's certain products, individual names where you just don't know. You know, some news can come out and that thing skyrockets, and then you're fumbling with what do I do? How do I roll this? Yeah. And it happens to the downside too, but to me it's easier to know, okay, well now I'm just long that stock.
Well, you don't know when it's going to end to the upside.
And we've lived through when it's going to end to the downside, but
it goes to zero. You know the floor to the downside. So you know, kind of like the meme stock mania when that happened. That was completely parabolic. There was a $5 stock that went to 400. That hurts, right? So, but versus
I mean, didn't GameStop go to 1,000? Didn't GameStop go to 1,000?
Yes. Versus if you're selling AppLovin, I'm only using that one. It's a $500 stock. We sold the 125 call.
No, the 125 put. So guess what I know?
125 put. That's what I'm saying. I'm sorry.
Guess what I know? Like I could never lose more than $12,000 here. If this went to zero, if AppLovin went to zero, $12,000 is my max.
Yeah. Yeah. I would get out of that, Jenny. I mean, $75.
I just adjusted it. I did. Are you not paying attention? I just
no, I'm not paying attention. But can you adjust it again? 5 more cents.
Yeah, we're giving up all like.
You're giving up $70. You made it in an hour.
It's not like AppLovin's up $10. It's only
yes. No, but it's great because it's a $276 not dollars, 276 day. It was in December with 276 days, and you scalped $75. Congratulations on your $75 in a couple hours.
Okay, now we're out of it. That's fine. It was a quick trade for the day.
Yeah.
And what do we? This is the ratio spread we put on yesterday. So if you're taking $75 out of 400 in AppLovin in a few hours, we would take 25%.
Well, and you have to be honest too. That was a 276 day trade. Like that was a miracle that we got out for $75 in a couple hours. This is a 30-day ratio spread, but I would take this too at 25% in a day.
So here's the thing: this got filled after our show yesterday, so it never got pushed out to the follow page. I'm going to close it. So don't push this closing out to the follow page.
I don't know. I can't be contained.
Right? Because it never went out. The opening never went out. Because I don't want people to think we're just doing the opposite.
Yeah, that will confuse people.
Yeah. Okay.
So I'm pushing the other things that we have right now. So I've got Oklo, Lulu, and AppLovin. Those are the only things we've got right now. DocuSign was already in there.
And look at our little SPX. Remember how I talked about how these iron condors, these durational iron condors, it's their time again. It's their time to shine because we've had this on for 4 days and it's already up $50.
Yeah, and Jenny, this is what we were talking about today. We were looking at some of those quantum computing stocks, and they had a rank of 18, 12. When you got the SPX that is an IVR of 32, there's other things to do than get into sell premium in some of those stocks.
Yeah, but if people have let's say people have a lot of money and a lot of cash on the sideline, I'm not putting it all into this. I want very.
You're not putting it all into anything.
Like I don't mind selling puts in QBTS at its price level. So
you're going to pick a couple of them instead of. But when you have the opportunity to have an inflated IVR all around you, that is an opportunity. So when we lived life for years with the SPX IVR at 10.
I mean, you know what? IONQ is not much different than Microsoft. We both have Microsoft positions. It's not much different. Like there are a ton of positions we have that have a 20 rank.
No, I know, but it does give you a lot of pause, unless it's something you want to get in. Like you're like, oh, I would like to get in at this price point.
JD's rank 24. Like we've got so much in that rank category. Because
IONQ was a 12.
It was an 18.
Was it?
16. Now it's 16.
Yeah, it was low. Like I remember being like, whoa.
What's gold rank now?
42.
Maybe we'll look at gold tomorrow. All right, it's it. That's it. My phone's about to ring in 1 minute. Everybody, have a wonderful day. Stay tuned. The boys have a great show coming up.
Yeah, they always do. And okay, we'll see you tomorrow, everybody, live from the floor.
Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago and learned all about it. And we've been trading actively since February and just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words.
Thank
really
you,
do
Rob.
appreciate it.
Stocks go up and stocks go down. Markets move. Beta is a way to measure the movement of a specific stock relative to the market as a whole. In simple terms, it tells us if the underlying has more volatility of price movement relative to the S&P 500. Beta of 1 is our control here, SPY being the underlying. If the beta of a stock is less than 1, it would mean the stock typically moves less than the SPY. If the beta of the stock is greater than 1, it means the stock tends to move with greater volatility than the SPY.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Waiting for the Fed to go. It is Tuesday, March 17th, 2026. This is Overtime. I'm your host, Chris Vecchio in New York. He's your co-host, Ilya Spivak in San Francisco. We're here for the next 20-odd minutes to take you through the rest of this trading day as we wind it down and get ready for the Fed tomorrow. Another day where all eyes were on oil, where prices are up and volatility is in a bit across the board, not just in oil, but in stocks as well. Mm-hmm. The move higher in oil, though, it doesn't seem to weigh much of anything down, so to speak. Stocks are off their highs, but bonds do trade higher as well. And the dollar's descent continues, even if it's more modestly. The RBA hiked rates and the Australian dollar did not like it, although it is still up on the session. Ilya, we can talk about the myriad issues that we're seeing coming out of the Strait of Hormuz right now. But by this time tomorrow, we'll have had the Federal Reserve meet. So for our brief reprise, we're only going to spend a few minutes here talking about oil in the context of the Strait of Hormuz, and then we'll move over to the broader market if we find anything interesting in equities. So get ready for the Fed. 95.54 here, 3.35%, a little over $3 and change to the upside right now for oil. We're not seeing any of these supply issues go away. We shared the tanker tracker from Bloomberg on Futures Power Hour earlier, and still it doesn't matter what it is, if it's grains, if it's a cargo tanker, if it has crates on it, TPUs, or it's a VLCC, there's just nothing moving through the straits at this time. So the problems are cropping up. They're persisting despite the narrative, the noise, the news that we're hearing. Tell me, Ilya, why today? Make sense of this for me, because I thought there was a pretty clear relationship. Oil up, everything else down. Why was some breathing room afforded? Why did oil vol potentially come in today? And is it a contraction in oil vol that you think will keep going?
I think what's going on here really is this kind of a pre-Fed sort of situation. Because if you look across the markets, you kind of get a sense that everything is correcting and there's not much rhyme or reason to the moves in the interrelationships between assets per se. It's more like assets are just digesting where they've been recently, where Monday was kind of a reset, and today is that reset seeing a bit of pause and introspection. I think the S&P is a great example. The meat of the S&P move was yesterday, and it was a move off the lows to kind of reset the playing field for the Fed. We've talked about sort of the idea that it's probably the case that what nominally lifted sentiment from the start of the week were these comments from Iran's foreign minister saying the Strait of Hormuz is not closed to ships that are not enemy ships. By all means, go ahead. Which seemed to say, we're not going to shoot at you. Which sort of contrasted with comments from U.S. Secretary of War Hegseth, who said, the strait is open, but for the Iranians might shoot at you, which is not open. But I digress.
Well, I mean, I think the bigger issue with the strait right now,
we won't shoot.
They've effectively set up a managed shipping lane right now where the straits themselves, while everyone says, oh, it's this narrow piece of geography, 20 kilometers wide, blah, blah, the actual ship are 20 miles wide. The shipping lanes themselves are only about 2 miles wide. And so Iran has mined a portion of the straits such that you have to go very close to the Iranian coast if you want to make any passes right now. And so they are effectively gating who can go in and out, because if they don't like who's the ship that's flagged, they can simply send over one of their speedboats and attach a mine to your hull. Or worse yet, you go through the straits and there's a magnetic mine waiting at the bottom of the ocean. As I learned today, Ilya, which interview just went live on Tasty Trade's YouTube page with retired Marine Lieutenant Colonel Hal Kempfer. I was able to talk with him today for Tasty's trading trends. There we go.
There he is.
He got it.
There he is.
Yeah, I'm going to get it one of these days.
Well, we're going to get it here, everybody.
And people won't believe how much I'm struggling with that. He's a military intelligence officer. And so we had a conversation about the logistics issues around the straits, and likewise the energy security problems that can or will be mitigated, potential timelines for all of it. He talked about the efforts that Iran's taking to control the straits right now. And so again, I'd encourage people to go listen to that conversation. So Ilya, this is really, Iran can tell us they're open. If the data tells us no ships are going through, this is a story of molecules. It's a physical chain disruption that even if the lanes are open and no missiles are flying, if the goods aren't moving, then the problem persists. That's it.
Right. Well, right. And if you look at the way the markets behaved from the beginning of this week, they took these comments from Iran's foreign minister and said, okay, well, so if they're not going to shoot at the ships, maybe we don't have as much of a risk as we thought we had, but that's a very flimsy sort of thing to hang a rally on unless you want to be having a rally. And so oftentimes the markets will be looking for the kind of news flow that helps them to get where they already want to go. And that's in part, I think, why the move Monday was as large as it was. The markets were getting ready for a big event risk. That event risk is coming in less than 24 hours, and it's going to come out of the Fed. And it's a huge, huge thing for this entire narrative because, of course, the entire read-through from oil prices to the way that they've influenced market response is through the channel of this is inflation. Inflation means rate cuts get canceled. That means a higher dollar, lower bonds, lower stocks, and everything cascades from there. So when you look at then what the Fed might say, you've, I think, spoken very eloquently about all of the all of the multitude things that are disrupted in the Gulf. It's not just oil. It's aluminum. It's helium. It's all kinds of materials for plastics, for fertilizer. And you can't restart these things if the Gulf opens today. It's going to take you some time. So there is a significant shock to global agriculture, to global petrochemical manufacture, be it for plastics or a myriad other things. So when you look at just the amount of fertilizer that comes through here, because of course, if your energy is cheap and spurts out of the ground, where are you going to put your processing plants? Right next to where the energy is. So it's not so much that the Persian Gulf is a huge hub for these things naturally. It's that a lot of the processing for a lot of this stuff is near where the crude comes out of the ground. It's cheap and the energy there is abundant. So the whole thing becomes a much bigger bottleneck than just energy, a much bigger bottleneck than even just the immediate refined product. So what's the Fed going to say? Oh, this is not an inflationary concern. This is a transitory thing. So you wonder, are there any more rate cuts on the menu?
Isn't that the worst thing the Fed can do tomorrow? Acknowledge lessons learned from 2022.
Yes.
Like the most comforting thing for the market right now would be for the Fed to go and go, yeah, no, we were right to think it was transitory. We think this is going to be transitory.
Yes.
From a certain light, you may think like, okay, so the Fed is going to be bringing us the help that we're going to need, that we were thinking that we needed for the labor market anyway. So if this comes to pass quickly, then maybe the Fed will look through this and give us those rate cuts.
That's right.
There's also, Ilya,
and the Fed has every reason not to do that.
No, and that's why I'm thinking about 22, because in 22, when it was difficult for the market to take them seriously that they were going to hike aggressively with what was needed because they started so late. But
boy, did they show them.
But I distinctly remember January 22, that first Wednesday, the FOMC meeting minutes for the December 21 meeting come out. And it's pretty clear that the Fed is getting ready to hike rates. And the market kind of has this, oh, the Fed's actually going to hike. Okay, that's happening now.
Oh, they're really doing this. Yeah.
Right?
Yeah.
But given the scale of the Fed hikes initially, it seemed like the market felt like the Fed was playing catch up for a little while. And so the analogy I was using in 22 and 23 with you, with Victor Jones at the time on the network, for Jones and Friends, was the market felt like the Fed may have had a hand on the steering wheel, but it didn't have its eyes on the road. It was busy arguing with the people in the back. And so as you got through 22, and now that the rate hikes were actually delivered, and the Fed's taking this seriously, all of a sudden, even though inflation was still high, equities were able to rebound because the Fed had two hands on the steering wheel at 10 and 2. It had its eyes on the road. And even if there were bumps along the way, like what was that, March 23 episode when we had SVB and Signature Bank have their hiccups?
That was fun.
And yet the Fed still raised rates 3 weeks after that anyway, and the market kept rallying. It had
because they believed them.
Because they had confidence in the Fed that the Fed was taking the problem seriously. So I'm thinking about that dynamic coming out of tomorrow. Is the market giving a signal for what it thinks the problem is, and will the Fed recognize and pay lip service to that problem? Because if it whistles past the graveyard, I have a feeling, yeah, sure, we want cuts. We want to know the cuts are coming. But also we kind of don't. I think the market wants the Fed to recognize that there were lessons learned from 22 and that there are things that they have to do and they can't just react too late to solve this problem, which leads me, Ilya, tomorrow. How far can they change their forecasts?
I think this is it.
I mean, that's going to be
just
the
hit
game.
the nail on the head.
It's part of the reason why I'm not buying this rebound.
Threads this needle usually? Ambiguity.
Right.
The Fed comes out and goes, right, so we're going to be very data dependent here. We don't know if this thing is going to be sticky or not. Remember what happened last year? It was the same story with the tariffs. The Fed came out and said, we don't know what to make of this thing. Maybe it's going to be sticky. Maybe it's not going to be sticky. We're going to need a few quarters to sit here, look at it, and tell you what we think it is. And then when the markets looked at the Fed and said, right, okay, so if the president decides to try to rip America's nose off to spite its face, then you're not coming. And then we got what happened in April with the panic. And of course, that's where we learned that the administration also is amenable to market discipline. But a big reason why we got that was the market did not think they had a cheap money backstop. Because the Fed by then had come out, the March FOMC had just occurred. We just gotten a new SEP. And the Fed came out and said, yeah, we don't know what to make of this stuff. They want to do all kinds of things with the tariffs. We have no idea what they even look like yet. Maybe it's inflationary. Maybe it's not. We'll see you in a few months. We don't know. That seems like the path of least resistance here.
Yeah, I mean, the path of least resistance is the one that we want because the silent, to get like into the policy, we see the silent concern I think a lot of people have is whether or not the Fed is going to be viewing this issue once more through their average inflation targeting framework. Because in 2020,
ostensibly they've already nixed it.
They haven't, though. I mean, they've mothballed it, but it is still official policy. I looked this up earlier today. They just quietly stopped talking about it. Like, let's not talk about Kevin, kind of thing.
Yeah.
So that is one concern here that I have in the back of my mind, right? Like the Fed's mandate back in 2020, because of what happened in the 2010s, where you had this only game in town of central bankism, as Muhammad Al-Arian would put it. Fiscal policy was not nearly supportive enough, Ilya. You had the great luminaries and minds of the world like Larry, what's his face? Jeff Epstein's friend.
Tudlow?
No, I didn't know. You kill me.
I'm
anyway,
guessing. I don't know.
No, the guy from Harvard, but I'm not going to mention his name. We're not giving.
Oh, that guy. Yeah.
Him. To be clear, you had these concerns of secular stagnation in part because there wasn't any fiscal support. Government balance sheets needed to be repaired, so interest rates were very, 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 very low for a very long time, and inflation just kept undershooting. And so the Federal Reserve, for those that weren't trading back then, they took it upon themselves during COVID to change their 2% inflation target, which in and of itself is arbitrary. If you look through the history of why central banks set rates in the late 1990s, the RBNZ was like,
they felt like 2 was about right.
2% feels pretty good.
Yeah,
it's not too high. It's
there's
not
a
too
great
low, it's
research.
predictable.
It's a great research paper out there, folks. Check it out. It's from the RBNZ, and it's where they define what 2% in the medium term means. You ask a central banker today, what's medium term? And they'll basically dissemble. And there's a RBNZ paper where they put all this together. And they go, yeah, so it's 2%, 2-3 year window. Behold the birth of modern central banking.
Yeah, and they did. There's obviously some analytical rigor that goes into that.
Of course,
it's not a science. It's more of like this is what feels right based on an imperfect data set.
Yeah,
on observations for many different economies in the developed world.
It's vibey. It's very vibey.
Vibey's right. So the Fed
there's some
changes
numbers, and then it's vibey.
The Fed changes the vibes in 2020 to say, well, given the past decade of low inflation, we're going to go to average inflation targeting. after 1% inflation for a while, we can afford 3% because you put those in a blender and you're going to get 2 on the other end, which is our medium-term target. And so that allowed the Fed to be slow on the uptake when inflation started setting in. And then Russia was the accelerant, of course, with the supply chain kinks. And that was the issue, one of the prime issues, Ilya. Not only did the Fed misunderstand and underestimate the spread of core goods inflation once the supply chain kinks from COVID unkinked themselves, how that would be passed down through the chain to consumers and across a number of products and services. The persistence, thanks to the second leg of it, of Russia, Ukraine, they were thinking 3% fine, and then all of a sudden it got away from them. And inflation doesn't peak in 22 until June, north of 9%, mind you.
Yeah.
Which was an absolute nightmare.
And you saw them admit it already 6 months earlier. I mean, it was a fun exercise to watch them because you could look at the markets and go, the June 2021 FOMC, they basically came out and like, yeah, so about the transitory thing. You all should get ready because we're going to go at this thing. Here's your 6-month notice. We're going to go big, get ready. And then they massaged that message for 6 months. And some of us were looking at the University of Michigan Consumer Confidence Survey and going, there's no other way but this. It's in consumers already. Because you could see that 1-year inflation outlook run away and go, well, if it's here, nothing else matters. The Fed's going to have to go, and it's going to have to go full Volcker.
They tried. I mean, they arrested inflation for the most part. They never got it back down to 2%, Ilya.
That also boy, did they go big, and who knows what the counterfactual is if you don't get tariffs.
Well, this is the other side of this. Well, that is the other side of this, right? They never got it back down to 2%, whereas when they initially adopted the average inflation targeting framework, and from that point of view, allowed the overshoot to occur and were late on the transitory uptake, it's because inflation was just so low. The Fed is always fighting the last battle. That is a refrain we have here on Overtime. The last battle isn't a decade of secular stagnation and low interest rates with no inflation.
That's right.
The last battle is the Fed being late to the transitory game. The Fed underappreciating the potential spread of this. And as is well documented here, if I can pull this together over the course of a week, Ilya, and we're working on something in the background about the widespread impact of this supply chain issue, because it is not just oil, it's a whole bunch of other things.
That's right.
The Fed has their teams of dozens, hundreds of economists that are looking at the same exact issues and getting their reports from people on the ground all over the place. If someone like myself can call up cousins who work in the military defense supply chain and say like, hey, what's going on? Or friends who literally work in missile factories up in Massachusetts and say like, what's your workflow like? And they're saying like, oh, it's crazy. We're working around the clock. And we're expected to work around the clock for the next 6 months. It kind of gives you a sense of where the trajectory of these things are heading and if those supply chain issues will persist. So I'm going into the Fed tomorrow with this mindset that Powell himself, I saw the comment here. I've been looking for it all day. There was a great tweet. I didn't favorite it. It's too bad. I want to give this person credit. He called Powell last week and the high priest of passive investing. And
that's
to a certain degree, that's right, Ilya, because if we think about what happened in the market in 22, we can I think ES here is better suited to make this point than NASDAQ, because NASDAQ peaked in November 21. S&P was trying to hold its head above water for a little bit while longer there. But if we were to go back to 22, as long ago as that may have been on our screens here, and we should just maybe go like this. Okay, you can see after the invasion of Ukraine, the markets did make an earnest attempt to rally here.
They did.
Back in March.
They did.
And this is when the Fed was they had not fully been like, oh, we're going to be super late on this. This is when they started to hike. They were going aggressively to the markets thinking, oh, the Fed's got this under control a little bit. And then as the supply chain knock-on effects from Russia, Ukraine compounded and became clear this is going to spread into food, it's going to spread elsewhere into the economy, that's when the markets
and the Fed started going in 75 basis point clips. Well, to make sure nobody misunderstands what time it is.
We're not there. That's not what expected tomorrow. That's not even on the immediate horizon here.
Not even a little bit.
But that is the last battle the Fed fought. So I think that's really the important context for what's going on with tomorrow's Fed meeting, that we have a Federal Reserve that probably is going to be, they're not going to give Donald Trump his emergency rate cut anytime soon. as much as I would like to make the economic argument, Ilya, if we have a significant supply chain problem, higher interest rates are not going to solve that problem to building out the infrastructure that you need. You're going to need lots of credit availability to get firms to build the infrastructure and the equipment, the products, the factories, right? To onshore that production. Heck, it could even just be different refineries here so we could process WTI instead of Venezuelan heavy sour. That in and of itself would insulate us more from this. But do you hear any energy companies talking about new refineries open in the US? No, because it's a short war, as the administration keeps telling everyone. So why make any significant capital investment to that point with the tariffs on and off? I'm just cautious tomorrow. I'm not really, you know me, I look for every reason to be optimistic, and I'd rather be optimistic and wrong than pessimistic and right, taking that from Howard Marks. However, this market has not broken out. It is staying in a consolidation. The reaction looks like the start of last week. The reality on the ground is there are no tankers moving, and the Fed is probably not going to be slow to address inflation this time, especially after it didn't get back down to target. I rest my case. I keep my short-term bearish position on an ES through the Fed, and I would be happy to be wrong.
Yeah, I mean, needless to say, I'm on board. I think basically along the same lines, the Fed is not going to let inflation become a thing again. I think Powell has staked, and really the Powell Fed, the people there currently, they have staked their reputation on getting this right coming out of COVID. They're not going to stop now. Moreover, it's not like we have to guess about this part of it. Let's go to the January FOMC meeting. What did we hear? All kinds of reasons to get less dovish. We read the minutes. We heard Powell. Why is it that stock markets haven't made a higher high looking at the S&P since October? Because Powell came out and told the markets, you're over-extrapolating rate cuts. You think we're on some sort of autopilot here. We just saw something wobbly in the labor market. Just wanted to put a little something out there. This is not that. There's no panic. This is not an economic downturn. The economy is fine. The labor market is just a little soggy. It's not soggy because people are getting laid off en masse. But we're not creating the kind of jobs we want to be creating. So here's some cheaper credit. And what did you hear in January? Hey, we don't know what you want from us. We did our bit. Here, we gave you 75 basis points last year. It'll take like a year for you to see it. You're just now going to start to see the 100 basis points that we did at the end of 2024. We'll just sit down and relax. Everything's fine. You're getting monetary stimulus. Fiscal stimulus is coming down with the big, beautiful bill tax incentives. We're concerned about inflation over here. We don't know about you, but this thing looks a little sticky, and frankly, we don't know if we're going to do all these cuts. That was the tone in January. And since then, we've had a brutal oil rally. What are they going to come out and go, yeah, you know what, on second thought? No.
Oil across the curve is starting to pick up more, and we can go out to something like the CLs. Let's go to CLZ6 just to make a point here. You know, we come into the year, not that futures are predictors of, the prices in the future. I want to caveat that, but we enter the year, the market. If you're thinking about where the Fed is, if they give a 25% band in oil prices from the start of the year, $57. You're talking about maybe oil is up at 72 at the high end of their projections.
Yeah.
So you're starting to blow through some very okay, now this is going up across the curve. This is not just a short-term supply disruption. And Ilya, it's only starting to catch up now. You're seeing this across July, June, M6, for example.
That's right.
M6 here. This is continuing to push up. This is up with 3.4% today, whereas CLK6 was only up 3% today. So the middle of the curve is seeing the bigger percentage gains right now. People are seeing this as a problem into the future. So, okay, Where does that leave us on ES, Mr. Spivak, as we wind this down and we pass the mic to you? I'm going to take a look at this daily chart and a level right near 68.10, we'll call it. It's the initial swing low that we had on January 21st. And since then, this area right around there, it's been an area where the market has found both support and resistance recently. To that end, we ran into the 1 month moving average today and we immediately sold off from there and we couldn't get back through that swing low. So whatever congestion zone this is in this rally that we've had off the low, I'm not a believer. I'm happy to be wrong. Get us north of 68, 10, 15 tomorrow, clear that swing low, clear the 1 month, and then we could have the conversation.
I mean, you and I are on the same page here. I mean, that's basically the band I'm looking at and going, okay, that was your former range support become resistance. You break that, you also break the series of lower highs and lower lows since the top in March. Okay, maybe this isn't the one. But until then, this bias is low.
Until then, this bias is lower. Until then, overtime's out of time. We'll be back tomorrow, same time, same place. After the Fed, 4 Eastern, 3 Central. Likewise, after last call. So for Ilya Spivak, I've been Chris Vecchio. Stick around for Ilya. He's here with Macro Money coming up next.
See you there, everybody.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
So I see you're taking an interest in open interest. Open interest, open trades. It's right there. Imagine all the trades are in XYZ at the same strike and expiration. Day one, Brittany buys 4 options to open a trade. Dean also opens, but he only buys 2 options. And then, closing bell. Day 2, open interest is 6 because of yesterday's trades. Now, Jessica gets in on XYZ, and she buys 2 options. Day 3, since no one has closed any trades yet, open interest is at 8. Watch this. Brittany closes her trades, Dean closes his, and Jessica keeps her eyes open. On day 4, open interest is now down to 2. That's because Brittany and Dean closed their positions and there are only 2 still left open. That's how open interest is different from volume. And both of them are parts of liquidity, which is something we look for before we enter into any trade. Pretty simple.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Tasty Trade has crypto, and you can trade with 0 commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
The markets appear to be in a holding pattern. What are they waiting for? Well, shock of shocks, the Federal Reserve. It seems like even in the midst of war, at the end of the day, the question is about the cost of money. And of course, that is a question for none other than Chair Powell and the FOMC. And they're going to opine tomorrow amidst all of what's been going on. And we're going to try to figure out what that's likely to do here. This is Macro Money. I'm Ilya Spivak, head of global macro here at Tasty Live. And of course, we'll start with the price action just to anchor ourselves in reality before we start theorizing here. And then attempt to break down what is probably, at least in our humble opinion here, is going to be a very impactful kind of announcement from the U.S. central bank. So walking through the price action here, as we can see, crude oil, the bogey for financial markets in this environment, it's idling here today, and that's after it started the week with a pointed pullback after Iran's foreign minister Abbas Araghchi said that the Strait of Hormuz is only shut to, quote, enemy ships. In other words, the strait is open, but for ships flagged for the United States or Israel. Not that the latter would ever be in the Gulf operating tankers. And so what we're looking at as the week opens is perhaps less of a choking off of global supply, but for tankers not willing to brave the strait. Part of it's been mined. Iran's created a kind of corridor along the coast where ships can bypass as long as they don't shoot at them. And apparently what the foreign minister was signaling here was that they won't, ostensibly, if clearance has been had. And 2 Indian tankers promptly crossed after he made those comments as if to underline the point. Now, that the markets were receptive to this news, it doesn't change very much, but that they were willing to listen and take this at face value as some sort of a relief valve seems clearly evident across markets. And perhaps the reason that they embraced that news is because there was some room to find a reason to correct before this Fed event risk midweek, as markets often do if they get themselves stretched in a direction the week before a Fed meeting. The first 2 days before that meeting, which is almost always on a Wednesday or somewhere in the middle of the week, the markets usually take the run up into that to kind of even the book and readjust and correct back from any kind of extremes they may have reached, which of course last week they did in spades. So we get this pullback in crude oil, and today standstill. The market doesn't really go anywhere and just seems to be waiting. It's a similar story for stocks. The pullback in oil yesterday gave us a spirited rally for the S&P, but since then we've paused again, and we're sitting on this former resistance turn support. This is the 10-year note here showing us that interest rates had a bit of a pull back. Obviously, those higher oil prices were feeding inflation expectations and thereby driving up rates. We have a pullback there, but it doesn't ultimately find legs to keep going. So similar to crude oil, we get a move that looks to be a swing within the context of the trend rather than something that changes the direction. This series of lower highs and lower lows, it remains intact. It's the same story for the US dollar. It pulls back as oil pulls back, again, easing those inflation concerns, but it ultimately doesn't cross any lines. And today, it's got a little bit of continuation, but again, it's sticky in the same space. And of course, here's the S&P 500 looking very much like the bonds for obvious reasons. If this entire move lower in stocks and the parallel move lower in bonds, you can see these charts look very, very similar indeed. If that was all about crude oil feeding inflation expectations, well then that would be a yields up, stocks down kind of a story. And so, not surprisingly, these charts look very, very similar. We have a bounce at the start of the week. We hold the underside of this former range bottom. The trend established since the beginning of March, it's intact. And so we continue to wait here today after yesterday's bounce. Gold, for its part, just to kind of make the point that whatever it liked about crude oil pulling back seemed to be some sort of a de-escalation with maybe, like the comments from Iran's foreign minister, gold gaps down to the bottom of its range right there on the 5,000 an ounce mark and pauses. It dropped there at the open of the week. It stayed there all day yesterday. It's staying there all day today. And so the markets have seemingly arrived at a kind of inflection point, just in time for the Fed to give them a nudge one way or another. Now, as far as priced in policy expectations, we're looking at 25 basis points firmly on the menu now for this year, 26 basis points for next year, so call that a rounding error of 1 basis point. In simple terms, we're looking at 1 cut this year, 1 cut next year. We're basically aligned with what Fed policy expectations have been since December. We can see the last time that the Fed updated the summary of economic projections was in December. And when we look at what these forecasts look like, we've got 1 cut on the menu. Obviously, these are rounded off. So from 3.6 to 3.4, that's 1 cut. From 3.4 to 3.1, that's another cut. These are rounded from 0.25 to 0.3. And so what we're looking at here then in the markets currently is basically exactly what the Fed said in December, but of course under very different circumstances. When the Fed was saying this, here's the beginning of the year, we can see the markets were somewhere trying to decide whether it's going to be 50 or 75 basis points for this year, and no moves at all, with even a slight, barely perceptible hawkish bias for 2027. So the markets have clearly found a different path since then, and frankly, so has the Fed. Everything we've heard from the January FOMC, though there wasn't the summary of economic projections update there, seemed to strike a more hawkish tone, where officials came out and said, you know what? We don't think the urgency for the labor market is really there anymore. We sprinkled some easing there at the end of 2025, and we think that's enough to do what we need to just give the labor market a little bit of a nudge. We don't think it's in a terrible spot. We think that hiring is low, but it's not like there's mass layoffs at scale that we perceive or some sort of evidence of a big economic downturn. In fact, if we look at the way that these projections worked out, note the Fed upgraded all of its expectations for GDP. It downgraded what it changed for the unemployment rate. It nudged up its inflation expectations. All of that seems to think that the Fed has a relatively positive view on the business cycle in December. And when it came out in January, it sounded more so positive and said the economy has outperformed our expectations. It's been going faster than we thought. We've really got to think about this sticky inflation. Now, if that's the mindset with which the Fed was going into what we're just witnessing, well, then how much more are they of that mindset now that we've had this near vertical surge in crude oil prices, considering that, as we can see here, looking back a decade, it takes about a month for crude oil moves, especially ones of this magnitude, to show up in headline CPI, the Consumer Price Index measure of inflation. In the green line there is CPI lagged back 1 month. We can see here that what that would imply, you can see these moves broadly line up, especially at the highs and lows. And we can see that right here, what this would imply is that next month and for a few thereafter, we've got a CPI spike that's on the menu. And the markets have noticed, because when we look at what's happening in the bonds here, we can see that with this surge in crude oil, we get a parallel run-up in the 5 and 10-year break-even rates. These are the inflation expectations baked into the bond market. When you take the difference between nominal and real interest rates, so nominal yields, TIPS yields, you end up with the inflation adjustment to get from one to the other. Those are called break-even rates. They reflect the bond market's inflation expectations. And you can see here with the naked eye, as crude oil runs up, the bond market goes, oh, look, inflation, and starts to bid those up. You see that echoing into the benchmark expectation models for CPI and PCE. Here's CPI. This is from the Cleveland branch of the Fed. We can see that already for March, we're expected to start approaching 3% again. It's the same story for the PCE. And so as we look at all of this together, it increasingly looks like a situation where the markets look at this and say, well, if this is the case, then what we're apparently looking at is a Fed that's really not going to be able to tell us much of anything other than sort of best case scenario. Look, we don't know if this inflation from the tariffs is a sticky sort of thing or a transitory kind of a thing. Much like the tariffs last year, we're going to need some time to look and think, and we'll get back to you when all of this starts making sense. And needless to say, that is not what the markets want to hear. Here's that PCE. We can see that's already aiming to be north of 3 at the headline and pretty much at 3 at the core by March. And we can also see that the markets, looking at the S&P here as a kind of barometer for overall risk sentiment, it has not set a higher high basically since November. In late October, here, we got this top out as the markets got chastised by the Fed. Fed Chair Powell came out after that month's policy announcement and told markets in no uncertain terms, made sure he was heard, as a matter of fact, and made it explicit, saying, you all seem to be thinking that we're on some sort of rate cut autopilot. Let's set that aside now. That is not what's going on. And the markets haven't set a higher high really on the S&P since. They've basically been stuck below the 7,000 level now for the better part of 4 or 5 months. And of course, at the same time, we can see that policy expectations have anchored in a kind of range. Whereas if we were looking at what was really powering the rally in the second half of last year after this kerfuffle with the Liberation Day tariffs, is a massive build out in rate cut expectations. And stock markets apparently celebrating as much. So if the Fed is going to come out here and go, look, we just don't know what to make of this oil shock, so we're going to do nothing. We were already concerned about inflation before. Consider us more concerned with inflation now. If they start to pick apart even these modest rate cut expectations, and there would be good reason to do it. After all, it's not just oil and it's not just natural gas that's stuck behind the Strait of Hormuz. It's also countless other things like inputs for fertilizer, like aluminum, like helium, all manner of petrochemicals that go into the production of plastics, for example. So the inflationary spread from this war is very much a broad sweep, not just energy by any means. It's going to hit agriculture, it's going to hit manufacturing, and turning all of these things back on is no quick thing. Even if Hormuz were open today, there would be some period of, depending on which thing we're looking at, weeks to months to maybe even quarters to turn output back on once it's been disrupted. It's not easy, for example, to get back to smelting aluminum if you paused midway. And so when you're looking at the situation here, even just if the right grade of crude can't come out and refineries, for example, in Asia have to import supplies that are lighter, which their refining machinery isn't built for, which might damage that machinery or, in the best case, just end up being more expensive to run, then the stickiness of the inflation here might well be lasting. And so the markets are probably going to get a Fed that isn't ignorant to these things and is saying, well, look, if we were concerned about inflation in January, how much more are we concerned about it now? And so if we look at the lay of the land there, we see the Fed is kind of on an island. Most of the other major central banks are, after some recent reshuffling of policy expectations, still expected to hike rates this year. In fact, the Reserve Bank of Australia just delivered their second rate hike of the year overnight, back to back, February and now this month. And they're expected to do one more. We can see here they're hovering at 75 basis points for the year. We're looking at the European Central Bank and the Bank of Japan at 50 basis points. We're looking at the Bank of England and the Bank of Canada at a 25 basis point sort of setting. The Fed is the only one looking to cut. And there's already been something of a shift in the curve. We can see that the very belly, so the back end of this year and the start of next year, there's been a shift in the curve to a path that is a little bit more on the hawkish side of expectations. It's still aiming down. We're still looking for a move toward 3%, but we can see there's a pathway here where a month ago, 3 months ago, these curves looked much steeper. And now it looks like the path lower is a more gradual one. We still end up in about the same spot, but we get there with a rate cut effort that comes much later, as opposed to here, where it's a smooth decline starting from around the mid-year. And so when we put all this together, we end up with a set of probabilities that has, according to these Fed funds futures, maybe one rate cut sometime in October, December, and then maybe another sometime in October, December next year, which roughly corresponds with what we're seeing here. We can see we're at 3.5, call it, basis points now at the beginning of the year. We're at 3 basis points basically by the end of next year. So there's your 50 basis points. But you can see the on-ramp there is very slow. And only really toward the end do you make this move in earnest, finally. Whereas before, the path was much smoother. So when we consider then what that means, if this is still the sentiment baseline, well, then of course all the moves we just saw today, well, then they do indeed look corrective. Because if the Fed is going to be a little bit more hawkish, then crude oil or no, This bond chart looks like this resistance will probably hold, and we get a push higher in rates. This dollar chart looks like this support will likely hold, and we get a bounce in the dollar. And of course, the implication for the S&P doesn't appear to be anything positive. We hit this resistance, and we turn back. And then the question becomes 6,600. Because if the Fed is relatively hawkish, then sentiment isn't going to like it, and neither are the bonds. Gold might actually crack this support if it decides to pay attention to yields again. And the dollar may well find some momentum to take out these highs going all the way back to June, July of last year. So with all of that in mind, the only thing I've really changed positioning-wise was gotten out of that Bitcoin put vertical through IBIT because it just wasn't doing very much of anything, not really showing a level of price action that would suggest it's responding to the current environment as you might expect. So it's not really behaving as an anti-dollar, not really behaving as a risky asset, not really behaving as some sort of gold adjacent type of alternative store of value. And frankly, hasn't in a while. So it looked like there was a kind of disconnect from discernible macro. So I decided to take a step back and revisit later. Otherwise, I'm still short gold through the futures, looking for some immediate weakness, while at the same time having an upside bias by selling puts now 59 days out. So looking for some vol to come out of gold and for it to, over the longer term, regain this deglobalization narrative that's been driving it since the beginning of last year. Still long the US dollar against the Aussie, the pound, and the euro. Still short risk, both or all of the Russell, S&P, NASDAQ, all through buying put verticals in the ETFs. Still short the middle of the curve, the 7 to 10 maturities, buying the put in IEF there. And still very long oil, with still a good 31 days left to expiration on these call verticals, and looking for the market to ultimately resolve that the Strait of Hormuz situation is by no means fixed just because Iran's foreign minister said so. And that is macro money for today. As ever, we are here right after overtime. That's a show that I co-host with Chris Vecchio, looking at the Wall Street close and where things might go therefrom. I'm also writing for the news and insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money returns tomorrow. Happy trading.